Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Monday to you both.
Woo!
Hello.
Hola.
Made it.
Hola.
We survived.
Thank you all for asking. I made it home safe. Yes, I was all good. Thank you.
We were going to add you. We had like 30 seconds to say good morning to each other. I was going to get right into you. But go ahead, fragile masculinity. Pop off.
It's very typical. This is much like his birthday kind of situation where, please, nobody get me anything. Nobody say anything. Like, it's just a regular day. And then if you don't, that first minute of the day, it's
it's not like we'd been talking for 12 minutes without like asking. We just didn't even get to say good morning. Well, I guess no one cares about me.
Yeah, exactly.
Just talk like I'm not here. Go ahead, keep going. It's okay. Just talk about me like I'm not here.
Good morning, Anthony. How was Texas? How were your travels?
It was amazing. Thank you so much for asking. We had such a great crowd. Thank God I finally got rid of that, my sidekick for some time now. I've been trying to get rid of him for the last 15 years. He's finally gone. The load is off my back. I feel so refreshed. It was really nice. Had a lot of people come out. Great barbecue. Good dinner. Wonderful people, made a lot of new friends. It was great. Weather was good. Not like this, what we got going on here.
And you got a tradable day too. Friday was.
What'd I miss? I didn't tune in.
Friday was a fantastic day. I mean, the morning was tough, but after
we were down 91 at 1 minute on the E-mini S&Ps, weren't we?
Yeah. I think it was 130 point intraday range. It was wild.
Totally. And then we closed, after we closed, the E-mini S&Ps rallied after that too, about 15 handles.
Yeah.
So we really closed with a rich close. So it'd be interesting to see what goes on today.
Yes.
Yeah, we did that for you. We stopped it. We said enough's enough.
Thank you. We very much appreciate it. We got the other thing that happened was obviously we survived the snowstorm that we all thought was going to be 12 inches, 13 inches, biblical storm. It was nothing.
They said like Buffalo, they said like Lake Erie, Buffalo, New York conditions. It was the strongest wording from the National Weather Service. Look, we all were like, okay, well, we'll just stay home then.
I mean, it's Chicago. I don't know what they're really worried about, but yeah, I got it.
People sliding off the road and there's like not being able to see. Visibility was
same problems we've had for the last 150 years. I mean, since we've had automobiles or whatever. I mean, come on. I mean, they closed a school.
Since we've had automobiles. Okay, Jesus Christ.
They closed the school last night at 9:00 at night. We hadn't even had a flurry.
Oh, they closed the schools?
Yeah, they closed one school out by us, Loyola, which is, I guess you would call it a private Catholic school. So they can do what they want kind of thing.
Sure.
Late start for us, like the high schools all out here are going to do like a late start, so they'll start at like 9:30 instead of 8:30 kind of thing. So they'll get the roads, kind of iced. Salt down on the road. Sorry, beforehand. So that's what they did, but kind of weird.
Yeah.
Hello. It worked out for us as a work from home day. This is good. You don't even have to. This is like a quarter day for you, Dad, because you don't even have to drive home. So this is like a 3/4 day kind of thing. So it'll be perfect.
Yeah, well, I don't take vacation, so I just
yes.
I just go bell to bell every day. When I'm needed, I'm here. So it's 100% on air. What I do my free time is my own.
How was the barbecue in Texas? You went to Terry Black's, I saw.
It was. We went to Terry Black's. It's great. They got some racket. Doesn't matter what the line is. They will get you through it in 5 minutes or less. So your food is free.
How in this economy, how much is a Terry Black's gonna run you?
Ooh, it's got to be expensive. Got to be like for which item? We got a
For
price
the whole
per
platter,
item.
for the whole, all the.
So I don't know. I don't know. I don't know like per pound and stuff like that. I didn't look at that, but there were four of us, and we got the family meal like for four kind of thing, and then we got some extra meat on the side. I think it was 300.
Oh,
I
Ooh,
think it was 300.
that's not too bad.
We had one customer come with us or met us there, and he said it was his most expensive dinner he's had in lunch he's had in quite some time. Because it was lunchtime. It was lunch around 1 at 12:30, 1 o'clock, something like that. It was expensive, but it was darn good. The birds got it down pat. Like you sit outside, if you
Uh-huh.
your food, they steal your mac and cheese. They don't go for the good stuff. They go for the mac and cheese. So you figure you don't beat them or shoot them or kill them or something. They just take the mac and cheese. But they've got that down pat. They do that well. They do that well. They dive bomb. They come
what
down.
was your favorite of their selection?
Believe it or not, I thought their jalapeno sausage was outstanding.
Oh, I love that. Was it a wrapped one? Like, was it like the sausage inside the jalapeno, or just jalapeno sausage?
No, just like a sausage with chopped up jalapeno
Oh,
inside of it. It was
okay.
excellent. It was excellent. Really, really good.
I thought you did a Texas torpedo.
No, no.
That's what they call it.
Yeah.
What's a Texas torpedo?
It's a amazing concoction. It's a.
I was like, have you been hanging out at?
It's
Oh, do we? So
got
it's.
the winter
I,
storm,
I was like, huh?
Panetta.
It's a jalapeno, and then in the inside they put like sausage and maybe some cream cheese, some sort of cheese in there, and then
Yeah.
they wrap the whole thing in bacon. So they wrap the jalapeno in bacon and then smoke that thing, and it is just, it's perfect.
It's amazing. Yeah,
amazing.
no, I
It's
know.
amazing.
I've had those. Those have.
Put the barbecue sauce on there.
Yeah, it's very, 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 very good. I've had those. Had those. They didn't have those on the menu that I saw at least. But Terry Black's is legit. It's real. It's real good. You know what? I've said this before on the show. I've come to the conclusion now. I have about 4 grills that will be for sale this summer at low prices. There's no reason to try to make a brisket or do anything. I know guys do, and don't out me, Bob the Barbecue. You do an excellent job. There are a few and far in between.
It's
that
part
you
of
guys-
the. It's part of the. You know.
Yeah, some guys just do it. Like they got it right. They do it. They wake up at 3 o'clock. They got the blower on the green egg. And then it comes out and it's juicy and it's great. But you know what? I'll pay a little bit extra. I'll keep the money from my grill, and I'm gonna buy from now on. So I'm gonna buy from now on.
Well, you
I'm
could
actually,
go.
actually thinking about doing it for Thanksgiving. Like like in addition. So this year for Thanksgiving, I have a Sun Wa turkey, which is
Are you saying this because I won't be there? Like,
yes, I am saying this.
like last year, I remember we had like a turkey breast, maybe a lasagna. So go on.
From Little Marie's or whatever, frozen lasagna or something
Yeah.
like that.
Yeah. Oh,
Oh, that's okay.
oh.
We were talking food. Sorry.
Yeah. No, we were.
Yeah.
Yeah.
Oh, we got past that. Now we're having Sun Wa turkey.
We're
So,
talking about the Thanksgiving dinner my dad will be having without me.
yes.
No.
No, I'm not. So this is prepared like a duck style. Like they prepare it
Like the Peking duck.
So it's
Yeah.
like Peking turkey kind of thing. So that's what I think I might order from Terry Black's. I don't know if I'm making anything this year.
Oh, you can.
Yeah. Yes, I was able to get in for this year. Which is
Wow, you must know somebody. Got some insiders there.
I had my biatch go for me.
You guys splitting one or one?
No, we're not splitting one. I just had Tom go for me. He stood and waited in line. He's a pedestrian now.
Oh, that's good. That's good.
Yeah.
You had to wait in line, so this is one that you couldn't do like online. You had to be in person.
Yeah, you had to you had to be in person. You had to be in person. Yeah, you had to go.
Huh.
Yeah.
That's the commitment.
Just do it online. Yeah, you had to go, which was nice. Anyway.
I mean, he's got time on his hands.
Yeah. He does. He does. Well, welcome back, Vanetta.
Hey.
Yo.
My internet just didn't want to play nice today. Nikki, how was your weekend?
I was good. Couple little dinner parties. Went to a dinner party on Friday. It was nice.
Do people still have dinner parties?
Yeah. We catered in from Cortino. It's delightful. Had a group of people there. It was fun. It was Vegas style. So that was the theme.
There was a theme?
Vegas style party. Yeah.
Oh, that sounds delightful.
Yeah, it was nice.
Very mature.
I know, right? It's very mature. It's very mature.
Like you didn't have like a toga party, like a toga dinner party or something like that. You had like a Vegas toga.
No.
Party?
I don't do swinger parties like you. Okay. Okay. These are fully dressed parties. Okay.
He's not putting his keys in a bowl.
Yeah, you don't show up in a robe and put the keys in the bowl. Okay, you freak. You know, this was just a fun little get together.
So wait, was there gambling? Did you wear a top hat? I need more details.
No. I was actually pretty casually dressed. I mean, I had like a little sport coat, but
not a sport
some people
coat.
got like the little bedazzled shirts and like, you know.
Bedazzled shirt?
Yeah, bedazzled shirts.
Yeah, like glam. It's
and the
Vegas.
girls all had fur, like the big fur coats, you know. It was like very like, yeah.
That sounds interesting.
Yeah. So
I love that.
Very nice. Good stuff. How about you, Vanetta? What'd you do this weekend on my travel weekend?
Okay, I didn't do a whole lot. I luckily, blessedly, was able to get my bike into storage on Friday when it was 65 degrees, so had a nice ride Friday afternoon.
Friday was nice. Before I landed, it was like 65. When I landed, it was about 40, but it did seem like it was nice here.
Yeah. And then, I don't know, I was just battening down the hatches because I thought we were going to get 4 feet of snow. So I just went to the gym, grocery store, you know, doing what I do.
When they say we're going to have it, you know it never happens. It's the ones that they can't call when we get it. You know what I mean? The one when we can't prepare, that's the one where they kind of slap you on the side of the face with a huge storm.
Sure. I mean, I needed groceries anyway. Like, I will eat the food that is in my house.
I'll tell you my big strategic thing this weekend was whether I take my hoses off of the spigot and shut
because they'll freeze.
Yeah, and shut off my water or just go for it. I just went for it. I didn't do it. I figure I'll do it, you know. It's going to be 50, 60 this week.
Yeah, it is. It'll warm up at the end of the end of the week. So
so I'm gonna be all right.
Are you gonna go into your sauna and tiptoe through the snow and go sit in your sauna?
Went last night. It was 35 outside. It took about 40 minutes for it to really heat up to about 160 degrees or so. So
you don't sit in there the whole time while it's heating up, do you?
No.
Oh, okay.
No. It's got a remote switch. You know, you just turn it on from your phone, kind of thing. And I'm gonna get Nick in there. He's gonna love it. Then we're gonna
really? Well, I guess my invitation is on snail mail coming there. But yeah, anytime, Dad. Yeah. Would love to see it. Would love to see the fam. You know,
it's gonna be a rough week, Vanetta. Okay. I can tell already.
I'm just here for it whenever you post the video of the giant, you know, Lexus in your driveway with the bow on it for Vinny, and how Nikki's going to be all up in his feelings when that drops.
Well, don't let Nick surprise, you know, make you feel bad or anything like that. He got a Mercedes with a big bow on it. So
that's right. In 1988, Mercedes-Benz was about 2 years older than I was at the time. It's about 20 years old. Had a nice little kink in the third to fourth gear. So, you know, as you were getting into that like 45 to 55 mile an hour range, you'd have about a second to really push on the gas to kind of get through third gear. Because then if you didn't, your mom
didn't want you going over 45. That's why.
Yeah. And then when you stall out, you know, you have to kind of, you
put in
neutral, turn the car off, you know, kind of give it a couple pumps of gas there, you know, to help.
See, it built so much of your character of who you are today.
It dealt with adversity. You don't let a little like 4 inches of snow bother you. You're good.
I mean, nothing builds more character than stalling out as a 16-year-old merging onto the highway.
New driver.
Yeah, new driver, flipping into.
And look at you today. You're great.
I know, that's great. I mean, it was,
You can jump your own car.
That's right. That's right.
Well, if Beth is there.
Well, I needed Beth's car.
You have to show them which one's red and which one's black.
Yeah.
No. We put two jumper cables together, which I thought
which you should not do.
Definitely not. It's not a traditional way to jump your car, but we put two of them together because mine was I have maybe a 15-foot-ish cable.
Sure.
So it's pretty long. I mean, I don't think you get much longer. It might even be a 20-footer. But I parked nose in. So that was my
rookie
problem.
move, man. You got to back in.
Well, you don't plan on having your,
You just plan on backing in so you can escape any situation anyway, though.
That's true. But so I went nose in, so I had to stretch the whole length of the car and then some to get to Beth's car. And so we put two jumper cables together. It worked. It was perfect.
Because there wasn't a spot right next to yours.
Yes, both spots next to me were taken.
Yeah.
Didn't really get in there.
Rough.
Yeah. So we made it work.
Well, someone else that made it work, it's our Chicago Bears, taking a snatching victory from the jaws of defeat. Giants QB Jackson Dart went out with an injury. Russell Wilson had to come in, and then just a fourth quarter comeback for the ages for the Bears.
They are the cardiac kids these days.
Yeah.
I'm not mad at it. I don't care if it's a pretty win or an ugly win. A win's a win.
Yeah, they're winning ugly. I mean, they really should have beat the Giants pretty handedly.
Yeah.
By the way, you didn't give me my picks this week. Did we not do well there, Nick?
No, we did okay. But I will say, if the Packers lose tonight, the Bears will be in first place, which is pretty insane.
Isn't that unbelievable?
That's crazy.
So the pool, which I am in first place, I can even, let's see if we can show this.
You can't see it.
Damn, I don't know if I.
It's hard to see.
I have 140.
believe you.
Yeah, I'm number one in the league. It's been like that pretty much the whole time. There's about 40 people. It's a FinTwit, like an invite sort of league here. But I had Indy minus 5.5. That was my most confident. Hit that in overtime. That was lucky. Bears minus 3.5. Rams minus 3.5. I had Cleveland plus 1.5. Lost that one. I lost Denver too. So I've got what is this? 13 of 21, and I got Philly tonight plus 2.5.
All right, there you go. Now you know the inside scoop. Also, Connor Bedard made history last night. He was the youngest player to record 150 career points.
Oh, congratulations! That's awesome.
Better than Kane and Savard and Olczyk. So yeah.
I mean, it's amazing once you get a pope who's from your city, your sports teams start to do really well.
It is amazing.
We've been blessed.
Some would think it was divine intervention.
Yeah, thank you. Shout out to you, big guy.
That's funny. You're right about that.
No, the Bulls are good. The Bears are holding on. The Blackhawks are putting something together.
Yeah.
I don't know what's happening.
I don't know what's happening either. The stars are aligned.
We are not used to this feeling. And also, just real quick before I get into our run of show, shout out to my Hoosiers. The most exciting win we've never, ever won in Happy Valley. And it was a big deal that we went in and we were able to beat Penn State just by the 2 feet just barely touching down in the end zone. Announcer Gus Johnson with the call. Great. It's a great game. Give that kid the Heisman Trophy. You heard?
You won a hoops too.
I will give you that. Could be the game of the year already, and the year's not even halfway over. And that was an amazing catch, and it was an amazing throw, and there were 4 more throws prior to that, and 4 more catches prior to that were not equally as good, but I mean just as good. I mean right up there. They were all amazing. Does seem like they're the team of destiny this year too.
It was just funny because they asked the coach, they're like, Indiana's never won in Happy Valley at Penn State. He's like, this team's never been here, and then he just walked away.
So good.
I love it so much. Anyway. But lots of stuff happening this week. It is a magnificent Monday here on Tasty Live. Zoom will not let me close this window. Thank you, Zoom. We have a lot of great content headed your way on this magnificent Monday at the top of the 8 o'clock hour. We have Options Jive, a little research corner. Kai is going to be in the house. Maybe pray for Kai because he is at home, I think, with 3 kids. Snowed in with 3 kids. So, yeah, I think he was probably like, you know what? I'll just try to drive to the office. I'll be all right. No, but Kai's going to come in for Research Corner. And then we got Dr. Jim in the house, the Skinny on Options abstract application, negatively skewed markets. He is going to talk about that at the 8:40 time frame. And then 9 o'clock for market measures, understanding Bitcoin's portfolio impact with now new parameters around how much Bitcoin you could maybe have in your retirement account, in your portfolio, in a whole myriad of ways. We're going to look at just understanding what that can do to your portfolio. And then live from the trade desk, we're going to have Quentin in the house for sure, counting down all the top trending tickers at Tasty Trade. And then program, I'm sorry.
And I'm sorry. And I got a lot of feedback from Austin, which was great about the show. Nikki, they love you. Vanetta, of course, they've always loved you. But Nikki, they really like you on the show and everything, so that's good. They did request that we go to phone calls or at least go to YouTube chat or something like that. Yeah. So we'll try to bring that back into the show too. I know we haven't done that for the last couple of weeks, so we'll bring that back too. So we do listen. If you have any suggestions, you can always email me, @tastylive. If not, you can always, whenever you run into me, tell me then. Be great.
And then we have a programming note. It's going to be Jenny and TP on the show today. How was it seeing TP?
It would have been great. It would have been great. TP was a no-show.
Oh no!
Wow. The whole weekend?
Yeah, the whole weekend. Yeah. I
missed out on free barbecue. That's the first time ever.
To be honest with you, he doesn't usually miss a free meal.
No.
I think there's something seriously wrong with him. He hasn't answered my text messages either, so we might have to make a trip out to the ranch and see if there's any we're gonna need some of that seismic kind of machine to see on the property if there's been any digging anywhere there, because he might be buried. She might have finally done enough.
Finally got him.
Yep.
Oh no. Okay. Well, I guess there's some dramas with the Real Housewives. We'll get to the bottom of that later. But we got a great show for you today. You guys want your daily dose?
Sure.
Our leading story. Breaking news.
Across the wire.
Leading story. Top story. Jump in.
In today's headlines.
This just in.
Breaking news.
All right, everybody. Today is a magnificent Monday. It is November the 10th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Here is what is on deck for this week. We will see earnings reports from Disney, CoreWeave, Occidental, Oklo, Flutter, and more, kind of getting to the dregs of earnings. But there's a couple. I mean, Disney, CoreWeave, those are some fun things. We were supposed to get CPI and PPI this week, but that's not going to happen. It looks like there might be a tenuous framework to maybe reopen the government this week. That did send futures higher in after hours trading last night. But what's on your radar for this week?
Up and away is what it looks like.
Yeah, some of the there's a lot of the kind of memeier stock names reporting earnings. You have RGTI today.
That's Rigetti. You gotta say it, Rigetti.
Rigetti. Rigetti. It's like in Inglorious Bastards when
Yes,
it's like Rigetti.
Arrighetti.
Big Bear, Rocket Labs,
Core Weave, I believe, also.
Core Weave is today. Through the rest of the week, like you have like MBIS, which is another like kind of on the fringe of the AI story. You know, the Oklo is in there, or Oklo. You have Circle. So there's some volatility to be had in some of those names for sure. But I think all the weekend pump will persist for at least the next 24 hours. I mean, we got it all. We got stimmies, we got government reopening, we got, it's been all out upside. So
well, the Senate reached a deal. It doesn't have to go through the House too now.
Yeah,
I believe so. Yeah.
Yes. And then in other news, the yen mostly weakens on hopes for end to U.S. government shutdown. The yen weakened against most of the G10 and Asian currencies in early morning session amid hopes for an end to the U.S. government shutdown. Let's look at currencies because the world is like, come on, America, you can do it. Get it together.
Euro's actually up a little bit. The pound, I believe, is up a little bit also. They are, and you just mentioned the yen. The yen is actually down a little bit this morning. So you got a little bit of a mixed bag of tricks, but you're right. Currencies, euro, pound higher means dollar's a little bit lower. It's had a nice rally, though. So
Sure.
Just taking a small little breather. 300 pips is not that much. 300 ticks, not that much.
Not sure what bonds are doing, but I do believe treasury yields are higher, which means bonds are down.
You are correct. 1616. That's a level that has gone to about 3 or 4 times last week. Getting back there again today. 1616. 1610 is the low. They just traded up to 1618. Kind of mid price for the day from 1625 to 1610.
we get long here. It's at the 16 mark.
Maybe on the next little dip.
A sell put.
Yeah, I think that's the best way to do it. Even though the IV rank is 3, it just gets smaller that way.
Yeah, a little smaller. That's exactly.
Worked for us last week.
Yeah.
Put it again.
Cool.
Gold edged higher in early Asian trading, again on signs of U.S. Economic weakness, which typically enhances the safe haven allure, but maybe also it's just like, hey, we're government may reopen, let's buy gold. I don't know what's going on, but gold.
Gold up huge, up 100. That's a 2.5% move. Last night, it was really only up 7, 10, 20 handles. I mean, it was up, but, well inside an expected move. It's over 4,100. Last week, it flirted with going under 3,900. I think it got to a low of like 3,940 or something like that. It's now 4,100 on the nose. It traded up to 4,115, up 100. So big move in gold to the upside. If you're looking at like a GLD type product, GLD will be up about 10 handles. About 100 points equals 10 points in GLD, just approximately. It's within 50 cents of that.
Nikki, you're the best gold trader on this panel. What are you doing?
Because he's the worst. So then I
don't trade gold. Yes.
Yeah. So it's like by default. But yes, I do have some long gold exposure here. So a shout out to G Money, but I have some long Aussie dollar, which has a high correlation to gold. So I have a couple bucks in there.
But I didn't know that.
Yes. Go because a lot of gold is mined in Australia, so it's got you.
Oh, okay.
Got a lot of that exposure, and then I had some diagonal spreads and some little crab trades in GLD that I have some leftover calls in December, so those should be a nice little win this morning.
Mm-hmm. Very nice.
Yes.
Very nice. We'll just while we're checking on metals, is silver doing anything or?
It's up twice what gold is.
Yeah. Almost up $2. I shouldn't say that. I mean, it had some downside move. It moves $2 all the time. But anyway, $50 on the nose, just a penny or two above that. That's almost a 4% move. Gold has a 2.5% move. So my son is right. Silver having a much larger percentage day move than gold. It too off of its lows of around 47 or something like that, up to around 50.
Oh wow. China's Commerce Ministry announced last night that they would suspend a ban on the export of some rare earth materials to the U.S. as trade tensions ease. That means that it's good. The affected metals include gallium and germanium. And if that means something to you, great. But it's just
like
good news.
Your Majesty and germanium and
yes. And vibranium, Wakanda.
Vibranium. Dua Lipa Premium.
Yes, I love Dua Lipa.
Yes,
Anything moving in the rare earth space, Nikki, like MP or any of the other?
Some of those stocks had earnings last week. MP had earnings last week. I think it was pretty much an inside move there. It was trading around like 55-ish for most of the week. It's bouncing a little bit today.
Yeah, but it's well off of its highs, right? You're talking about MP. I mean,
yes. I think the
100.
story there is really the volatility that's come out of there. I mean, you were looking at like, $20 or $30 out of the money calls trading for dollars. They're now trading, at 10 cents, 15 cents. So a lot of the meme volatility out of the upside here in these stocks.
It is up $3 today. I imagine volatility will expand a little bit in the MP today on this up move, but not like what you saw. Those Ivy ranks, over 100 consistently every day, meaning volatility just continued to go even higher than its highs that it had the day before, I think are over.
Yeah. I mean, just to put some context on it. So I had the November expiration, like a strangle on in there, and we were looking at 112% implied volatility when I was trading. And that was around 50 days to go till expiration. So you look at the December options, the December monthly expiration is at 87%. And that was just a couple weeks ago. That was on the in like middle of October 21st. So volatility's come in about 30% ish from where we were trading it, which wasn't even the highest point.
Bonkers.
Yes.
A French cryptocurrency hardware wallet manufacturer, are you following along, called Ledger, is reportedly exploring an IPO in New York or a fundraising round. I guess demand for self-custody solutions is climbing, and Ledger's IPO exploration comes as the hardware wallet sector is experiencing renewed momentum. There you go. People want wallets because crypto crime is rising. 2.1 billion in crypto was stolen during the first half of 2025. That's bonkers.
Yeah, no problem if you have it there at tastytrade. You got a good wallet right there. Just stick right there. You got no problems. Backed by everybody and their mother. Ledger started in 2014. They've been around for a while.
Oh, okay.
Yeah. They've been around. They've been I don't know. I'm talking out of my arse right now, but the more popular name, I don't know if they're the premier.
Cold storage, yeah. So like if you're keeping it off
if you're keeping it on your keychain, like
don't do that. Don't
like
do
your
that.
Labubu.
Yeah. Your Labubu.
You got a Labubu, Dad? You got to have one of those.
A Labubu?
Yeah, you probably have one by now.
He bought them for me.
Yeah, for sure.
Okay.
Yeah, absolutely. I bought one for Netta. I gave my wife gave a couple to some young kids. People who have some young kids. Yeah, for sure. Labubu for everybody. You get a Labubu. You get a Labubu.
This is a hilarious story of our former Ohio State Treasurer, Josh Mundell, once hailed as an early political champion of Bitcoin. He actually allowed users in Ohio to use crypto to pay their taxes. Well, he revealed online over the weekend a personal loss of $1.2 million on call options on IBIT. He believed that Bitcoin would reach 444,000 by November 8th. Dear reader, it did not.
Hey, that's called markets for you, right? If you
it's a $60 stock. I mean, 400 and change with. I mean, all right, whatever.
That's what I'm saying. But if you have that assumption, you can go out and do whatever you like, and you can lose it, you can make it, and it's both sides are yours, which is amazing. So
I have a feeling that he had like 4 options, and he's just saying he lost 1.2 million because it didn't get to 400 and change, but he only paid like $30 for them, those options. That's what I'm thinking.
Yeah.
Maybe, but what's crypto doing to start the week? It's just a hilarious.
Crypto's up like everything else, Vanetta. Nothing is down except the Japanese yen and obviously volatility. Those are going to be the two that are going to be down. Bitcoin up $2,700. It's today is going to be a big green day for everybody. Well, anything that you own. If you have short delta, it's not going to be too good.
Okay.
Yeah, not quite the God candle that we've been waiting for, but it'll be nice. That's what the crypto peeps call it, the God candle.
I've never heard of that before.
I've never heard of that either.
Yeah.
I thought you went to one synagogue for a high holidays, and all of a sudden you're seeing the Lord or something.
No, I know where I'll ultimately end up. It's okay. There's no saving me. You're gonna be with
took a turn.
I'll meet you there too. It's okay.
Now you'd be surprised how much goodwill you've racked up.
I know.
So, yeah.
Everything is green and looking great this morning, but last week tech stocks had their worst sell-off week since the April tariff sell-off.
Yes.
Big names, especially in the Mag 7, just lost billions and billions of dollars in market cap last week after the market seemingly got AI jitters, I guess. Chip and other tech-related stocks fell about 3% for the week. What's the opportunity in some big names like an NVIDIA or Microsoft? Or
NVIDIA gave up a full month of gains. I mean, it went back to its October 9th. I know today's the 10th or whatever numbers. I'm joking here, but you're right. It was one of the largest sell-offs that we've had since April from all-time highs. Like an NVIDIA was $210. It traded down to under 190 or so. 188 is where it closed. It's back to 194 right now, but it really was where it made highs in October. So, I mean, they are off their lofty highs, but still relatively high. I don't know how else to put it.
Yeah,
these stocks are not down to the beginning of the year numbers. They're
but they're down 10 or 15, 20.
Yes.
Highs.
Unlike the market, right?
Yeah, I think it's naive to be like, oh yeah, I gotta wait. It's not a dip until it's at the yearly low or something like that. I mean, that's a long way to go. Like we spent one day or something in like the 100 mark, and it was a straight up move to 200. And you're telling me you're not gonna get some long delta 20 points lower from the highs? Like it's a 10, 15, 20% dip. Maybe it keeps on dipping, but you got to dip your toe in and get some long delta.
Well, it could go down 50% to get to its yearly lows, right?
Yeah.
I mean, just talking, right.
Well, some good news on the horizon that may make you feel more confident in at least buying that dip. Companies like Apple and Meta could win a reprieve from the EU's landmark AI rules as European regulators are considering easing sections of the legislation as part of a drive to simplify a slew of regulations adopted in the last 2 years. They realize that if they want the growth in AI that like countries that like America has, basically got to be the Wild West. So they are looking at rolling back some of those regulations, which could be beneficial to big tech.
Yeah, I haven't had too much, I guess, experience with EU stocks except for our own that is listed in London. And they really do make it difficult for stocks to
go up.
Yeah. They try to do their best to stymie everything. It would be pretty nice if they just let free markets run.
Well, we'll see. Hey, NVIDIA CEO Jensen Huang said yesterday that he sees strong demand for the company's Blackwell chips. I'm sorry, he said this on Saturday. He says that the semiconductor giant is experiencing very strong demand for the state-of-the-art chip. Of course, NVIDIA, one of the bigger names that lost a lot of market cap. So maybe he was trying to save some face because he's out on the road on Saturday. He's like, hey, everybody, I just want to tell you how great these chips are and that everyone loves them. Okay, thanks, bye.
Well, NVIDIA's up $4, but the market's up today. I think it's more about the market itself than the news. Actually, NVIDIA's up more like $6. I apologize, 194 and change.
See? There you go. Meta says they plan to spend $600 billion in the U.S. as they continue their plan to expand their AI data centers. They are going to invest that money into infrastructure and jobs over the next 3 years. Meta has doubled down on AI.
Now, Meta's a stock that is near its yearly lows or even below its yearly lows. Didn't quite have the rise of some of the other stocks, but it was up around 150 points intra-year. It is now where it started the year. It is up about $9 this morning to $6.30, but there's a stock that's been a complete underperformer all year long.
What are you doing in Meta, Nikki?
Oh, we're long. I mean, it's hard to not be long into this sort of move. Anything you did, whether it's two-sided or just, trying to buy the dip, it's been a tough ride. But I think this is a very interesting spot. I mean, you got a round number. It's got 600. It's sitting right there. Had a big move lower. It has not participated in the upside into earnings. Earnings was kind of the top-ish of where this traded. So I think if you've been looking to buy a dip, this one's a lot easier than a lot of the others.
Yes, totally agree.
Apple is reportedly planning more ambitious satellite-powered iPhone features. Apple's iPhone already supports texting and calling emergency services and contacting roadside assistance via satellite connectivity, but the company says they have many more satellite-powered features in the works. So reportedly, maybe you could access Apple Maps offline without a cell or Wi-Fi connection. Maybe you could add photos to messaging because those thirst traps sometimes need to be posted when you're in the forest. I don't know. But Apple wants to expand its satellite capability. What are you doing in Apple?
Apple's been an interesting stock. It was kind of the underperformer, didn't do much for most of the year. Actually was kind of making lows for the year, and then just caught a bid after April, and has been climbing ever so steadily. Not even selling off that 10%, 5% that some of the other stocks did over this last recent move lower. Apple 270, up around $2, $1.50 or so, just a skosh off its highs of 275.
Yeah, it took a little bit of short delta there last week, thinking that if there was some more downside move, Apple has not had any sort of move lower into the last week or so of price action. So I was like, if there's going to be something that has a little bit extra juice to squeeze, it might be this one.
Right.
But it's been very, very strong for the last couple weeks here. But cell service, the number one conspiracy.
Right, it's the opposite of when you look at Meta, right? What's a conspiracy?
It's my number one rant conspiracy is cell service. Why do we not have it anywhere in the U.S.? Why do I go up to the woods in Wisconsin and not get cell service when we can launch nuclear missiles 5,000 miles away and hit a donkey in the wasteland with no problem? But I can't get cell service. What about the elevators?
He's turning into his father.
How about the elevators?
Right before our eyes.
Why can't you get service in an elevator? What's so mind?
I mean, our L trains have cell service underground. That's pretty good. Not every city has that.
It's called Starlink. Just kidding.
Anyway, hey, I gotta keep it moving. Let's see. Visa and MasterCard have neared a settlement with merchants that would lower fees. They negotiate with merchants about the fees that stores pay, and they are giving them more power to reject certain credit cards. Visa and MasterCard would trim their interchange fees, which are typically 2% to 2.5% per transaction. Of course, they operate as a duopoly weekly. So merchants don't really have any other choices. They already reported earnings, but I'm just reporting the story. So,
but they charge us 3% now. So I mean, they make a little 0.5%.
No, the merchants pay normally the merchants pay I mean, I guess they could pass those on to the customers, but I don't know.
Yeah.
Pfizer has won its $10 billion bidding war for a company called Metsera as Novo Nordisk exits. The fierce biotech bidding war between New York-based pharma giant and Danish rival Novo Nordisk has finally, there is a victor. Metsera accepted a sweetened offer from Pfizer late Friday. Not sure if Pfizer's doing anything.
It's basically unchanged. So, Pfizer's a dog.
Oh, no.
It had its little Trump bump when we had the sort of like potential for it to get added to the government basket via, Trump RX or something out,
Sure,
like it's kind of caught up in
a Trump coin.
it was caught up in all those.
Stock and give you a Trump coin.
Yes.
Hey, Rivian CEO is trying to get that Musk-like pay package, but his would be worth up to $4.6 billion. RJ Scaringe, the CEO of the electric pickup and SUV maker, said Friday that he's been giving a CEO pay plan worth as much as $4.6 billion over the next decade. It's a similar structure to Tesla. The move by the Rivian board shows that the Tesla plan could become a model for companies aiming to grow fast. I just want to know why he's out here looking like a Temu Clark Kent, but you do you.
I think Rivian's struggling here. I mean, they're trying anything to get this stock higher because they need the stock higher so that they can raise some capital. This stock at $15.25 has been going, nowhere. It's been in a pretty tight $3 range from 12 to 16 all year. Rivian $15.33, up a dime. I think they're a drowning company reaching for straws. Personally.
Archer Aviation tanked around 8% on Friday after the air taxi maker announced they sold an additional 85 million shares and that they bought an LA area airport. Girl, what? The air taxi maker said that the share sale will fund its $126 million acquisition of Hawthorne Airport to create a hub for Los Angeles-based operations. Do you have the ticker? It's ACHR.
Yeah, I'm looking at it. $8.17 is where it closed. $8.43 right now. That's kind of a new-ish low. I know in April it was down to around $7, maybe even under that. But this stock took a beating from around 9 down to around 7.5, 8, where it's sitting right now at $8.50. I like the aggressiveness. I mean, they're trying to get the infrastructure to work. I think LA is probably a great place to do it.
Sure. Like if you could just fly over the 105 or whatever they call it, yeah, then why not? I don't want to sit in traffic.
I mean, I don't know if it's going to be a failed endeavor or not, but they're certainly giving it a shot. I like their aggressiveness.
Nikki, I pulled this next story for you. YouTube TV is giving customers a $20 credit for the Disney blackout, but you have to opt into it. So instead of just giving everyone a $20 credit on their account, which is like, okay, thank you for at least trying to make this right, they're like, well, what happened was what you got to do, baby doll, is you got to go online and you have to say like, please give me my $20. And then they might give you your $20 credit.
Yeah, I would like to know what's in the terms and conditions there of like you probably can't sue them or ask for more in the future. Yeah, I mean there's strings attached. There's strings attached. Unfortunately, at this point with everything, anti-cord, YouTube has us kind of by the cojones a little bit here. But I'm shocked that this has not been resolved to this point. It's been tough. I mean, no Monday Night Football.
I know, but I want to tell people, if you have YouTube TV, make sure you opt in to at least get your credit. So it's not automatic. So
you get what you get and you have no regrets.
I guess so. Wendy's Wendy's announced they're closing roughly 300 stores nationwide starting later this year. Interim CEO Ken Cook told investors in the Wendy's earnings call that the company would be closing around 300 stores. They have around 6,000 locations still operating nationwide, but poor Wendy's.
This interim CEO is jumping on the knife here for the company. He is a company man here. For him to announce it so the new guy can come in and his numbers are going to look better because they're going to have 300 less stores. Stock usually pops on something like this. It's trading at just under $9 or so, trading near its lows. Maybe take a flyer on Wendy's, especially if you like their Baconator. Fries.
I like their grilled chicken ranch wrap. It's good.
Oh, there you go.
They had a moment during COVID where like they started spicy tweeting, where like they were going after the other
Wendy's
ones.
social media is elite.
Yeah,
It was good.
You know, at least that's in their corner.
Mm-hmm.
Finally, in sports, 2 Cleveland Guardians pitchers, Emmanuel Clase and Luis Ortiz, were indicted yesterday for their part in a sports betting and money laundering conspiracy. Oh, Dios mío. The indictment alleges that the 2 pitchers took bribes to give bettors advance notice of the pitches that they would throw. Oh, no.
Oh, no.
Yeah,
What sport is safe now? Like, it's
none.
Wow.
No, but these guys, I just still don't understand why like, what's their contract at? $100-200 million? Like,
and it wasn't enough.
And it's just, you're going to gamble for 30 or 40 grand on a stupid pitch. I mean, obviously, if they got a gun to your family's head, then you got to do what you got to do, which I'm sure is part of it. But some of these guys, like Chauncey Billups, like, come on, man. What are you doing?
Well, these pitchers face potential punishment of up to 20 years in prison. So then they would then immediately become catchers.
That's good.
Thank you very much.
No, these are still big guys. They're probably pitching in the
Yikes.
Yeah, it's got to be smaller than these guys.
Finally today, for my viral video of the day, I did not know that this event existed, but your girl already has her bags packed. I guess in Steamboat, Colorado, they hold this event annually, and they've done so for, I think, the last 40 years, and it looks like a good time. Check this out.
Colorado, this is the Cowboy Downhill.
If you're wondering what a Cowboy Downhill is, you're thinking too much. The premise of the Cowboy Downhill hasn't changed in the 41 years they've been doing it. Take a bunch of rodeo stars off their horses and put them on skis. Being good is not a prerequisite.
That is amazing and hilarious, and I want to find myself a cowboy.
That's awesome.
Save a horse, ride a cowboy.
I know. I had no idea this was a thing. So very good. Steamboat, Colorado. Hey, that's all my time for today. What's coming up next, Bats?
We're going to take a quick 90-second break and come back. We're going to talk all markets and confirm and send right after this. We'll be back in 90 seconds with Tasty Live. Thank you, V.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past.
Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
We built tastytrade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. tastytrade.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at Tasty.
We are back, son, and you know what that means. Time for a little bit more Tasty Live with Confirm and Send. But before we do, please, let's take a look at this market. Even the S&Ps up 62 handles. They're about 5 to 10 handles off of their highs. We're 68.23. Even the S&Ps up about 1% this morning. NASDAQ actually up 1.5%. That's a $379 move. Russell up 1.25%, up 31. And the Dow only up 173. I say only up 173 because it's up around a third of a percentage point compared to the even the S&Ps and NASDAQ, which are up 1 and 1.5%. respectively. Volatility finally collapsing back under 19, 1893, down 87 cents, confirming the up move. We'll watch volatility all day. That's a 4.5% move. You may not have gotten paid for your weekend over the weekend, but you're going to get paid on Monday.
Oh, yeah.
Volatility contracting across the board. Bonds down 8 ticks to 116.26. They're just about, there we go. They're just about on their highs, 1 tick away from that. Bitcoin up 2,700 and change, almost 2,800 to 106.8. Bitcoin traded under 100,000 a few times last week. It traded there on Friday. Also, Ethereum up 150. That's up a little bit more, actually, than Bitcoin on a percentage basis. 2% more, up almost 4.5%. Call it 4 1/3 versus 2.5 for Bitcoin on a percentage basis. Oil, I think you just bought back some putties. Did you?
I had a put spread. Yes, I sold a put spread in the middle of last week. So I took about 20% out of it, $100 out of it.
Very nice.
Sold it on the 6th.
Yep, up 26 cents. Corn, wheat, and soybeans all higher. Currencies a little bit higher. That means the dollar is a little bit lower. Everything's higher. We'll wait for the market to open to quote those stocks, but everything's $5 to $7 higher right now. SPY up almost $7 or $8 or $7 or $8 on there. So
the dip was bought yet again.
Yes, the dip was bought yet again. A little bit more. That was scary. Down 90. I'm not going to lie. Volatility expanding all day long into that move. Really never sold off until we had that one uptick there when we went from 90 to up 60. And I don't know if I was watching the market obviously all day, but when we were down around 85, 90, and we got down around 60, and we sat down around 60, 65 handles, you could see volatility continually keep creeping. And that was maybe a little bit of an indication that we were going to get a little bit of up movement in the market. It so happened that we did, but that was kind of the tell for me. Not down 90. Down 90 looks scary.
Yeah, for sure. In terms of our bond position, I canceled that order. They rallied from the lows, so we didn't get filled there. I hope you have your ding enabled on the platform there, because we're gonna have some dings on the open. I feel like.
That's on you, Boo. You gotta get you're gonna have
I
to
know, but I need to remote in. I need to work on the whole thing. You know, this is supposed to be you're supposed to give me the ding.
All right, I'll see what I can do.
All right. Confirm and send. You want to get to him? And then we'll get to Kai.
Sure.
First one.
What are carrying costs, and are they only specific to futures?
So futures are probably the main one we talk about in terms of what a carry cost is, and carry cost is just relative to the roll in the futures, the cost to physically hold that position. There's an interest rate baked into that as well. So it's really just the cost to hold a position. But there's a carry cost in everything, and you can consider like opportunity cost as a part of a carry cost. But in context of this question, carry cost is really the interest rate that is baked into the value of those futures, and then whatever the curve is to those futures is the carry cost.
Yeah, I mean, virtually, as you mentioned, I mean, virtually, all products have carrying costs, whether they're physical or financial, right? I mean, like if you store gold, if you take physical gold and you store it somewhere, you don't keep it underneath your mattress, that would be a carrying cost. That's really kind of where it really stems from. Agricultural products, energy products like oil and nat gas, precious metals, real estate has a carrying cost to it. Property taxes and insurance. I mean, but everything is baked in. That's the bottom line. Is it doesn't matter what the carrying cost is if you're trading a liquid product, it's all baked in. So anything you see on the screen that you think is a surefire win is probably because of carrying costs. So just about if a stock has a dividend, there's a carrying cost onto the options. The options are going to be priced accordingly. So a rose by any other name is really just a carrying cost. So yeah, just about every product has a carrying cost, but it's all baked in. Nothing for you to worry about. Next question, please.
After the moves we saw last week, I'm a bit concerned about the tail risk. How can I protect my existing positions from an outsized move?
So what tail risk are you talking about? The upside tail risk now, or the downside tail risk of last week? Listen, there's nothing you can do except trade it small enough that if you get a tail risk event, there's something you can do about it. And that means you can do nothing because it's not hurting you significantly enough. Listen, every penny I lose on a move, whether it be tail risk or not, in the opposite direction that I want, hurts. But it doesn't take me out of the game from opening up my store the next day or allowing me to trade intraday, or being able to put that position aside and take advantage of maybe some other things that might be happening in the market. That's really the key. So the only way that you can do this really is by trading small enough and take care of that tail risk. Now, you could have a defined risk trade, right? It all goes down to the strategies. You put on a defined risk trade and you got rid of your tail risk. You defined your risk on entry, and then there's no such thing of tail risk for you. So it really depends on how much risk you want to take on whether you have to worry about tail risk, up or down.
Yeah, and any attempt to mitigate this over a long period of time is going to drag on your returns. I mean, there's just no way about
on your psyche.
Of course. I mean, it makes
you can't see things. You can't get in the matrix. You can't feel it.
Yeah. So, I mean, if you're worried about it, put on some downside positions, like put on some put diagonals, get a little bit of short delta and some names that you're not so bullish on. I mean, you can play for 2 or 3 or 4 or 5, 10% down moves. You can't play for the 50% down move because over any sort of period of time that you're doing that, it's going to be a massive drag.
That's right. Yep. Next one, please. I find that when I do narrow multi-leg strategies like spreads or iron condors, the time decay that helps my embedded short leg almost equally hurts my long leg. I feel like I need to hold these much closer to expiration in order to be profitable. Is my reading on these correct, and are they worth doing?
Yeah. So if you have just looking at the delta of your options will tell you all you need to know about the position. So if your deltas are basically the same on your options, they're going to move basically the same. I mean,
You mean
that's
30-27 or
yes.
25-20-21 kind of thing, like between your bid and your the one that you buy and the one that you sell. Is that what you mean?
Exactly. So, with those sort of spreads and tight spreads in general, you become more binary based on the price of the underlying. It's not really a time decay position, at least not in the first half of that trade. It's really about that trade at expiration relative to where the stock's price is. When you get wider spreads, they start to move a little bit more based on your theta decay and directional assumption, all that stuff. So we always talk about, widening the spreads versus upping the contracts. And this is a prime example of why, is because, your tight spreads, they just don't move as much. And so the spread width is very important.
Yeah, and their observation is correct, right? I mean, they do take a much longer time to move. So you are going into close to expiration. The 3-week, usually we put something on in 45 days. Usually it works for us in 21 days, especially if you're looking to take over 50% on a spread like this. You really are going to wait well into the cycle. So I would challenge you to do much less contracts or many less contracts, or hey, just do less contracts and go wider with your spread. Next question.
Next one, please. Do you concern yourself at all with things like the 50 or 200-day moving average for stocks? I heard a lot of talk over the weekend about those being critical levels the market needs to hold. What say you?
All right, so it's interesting that we got this, because no, my short answer would be no, I don't look at anything like this. I mean, we can argue about Bollinger Bands being very similar to expected move, basically the same exact thing on a chart basis versus a math basis. I don't look at this. I don't know anything about it except my friend Shark Jive told me that we went through the 50-day moving average on Friday. That's something we've never done before, and it looked like all hell was going to break loose to the downside because we went under the 50-day.
But we went back, we closed above.
That's my point. So what do I do? Sell it into the hole like that and then buy it back after it rallies up? I mean, so it becomes absolutely useless, or what do I do now? I mean, it's so silly a thing. Oh, do you have it right there?
Yeah, I have it up right here. There you go.
Oh, there you go. Well, there you go.
I mean, I think it's fun to have these on there.
Just draw the line. It'll be fine.
I think it's good to have that context. I think it's like an interesting look, but I agree.
But what do you do? Here's an event since April. Let's just say, for argument's sake, you love this stuff. Here's an event since April that it broke the 50-day moving average. What do you do?
Yeah, that's the question. I don't think it gives you some sort of tradable indicator. I think it's an interesting point to add some context to where the market is. Like it doesn't I'm not sitting here saying, oh, we're going below the 50-day, we got to sell everything and run for the hills. I think it's an interesting point. You look at it, it's a moving average, it's context.
We're going to take a 90-second break and come back. We got my mom always said, if you don't have anything good to say, don't say anything.
Yeah, that's good.
We're going to take a quick 90-second break and come back. We got more Tasty Live. We're going to bring my man Kai in. That's right. We'll be back in 90 seconds with Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Global markets never sleep. Explore them with Forex on tastytrade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on tastytrade.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
It's options. Jive. It is time for an option jive, and we've got my man Kai back in the house. Hello, Kai.
I'm doing great. How are you?
I'm doing great too. What you got for us today?
I got some very interesting stuff. A lot of things happened last week, so we have tons of information.
Let's do it.
All right. So a new record for a government shutdown in U.S. We're reaching 41 day today. So definitely the longest in the U.S. history. The second longest was 35 days. That was happening between the end of 2018 and beginning of 2019, which was also under Trump's administration, 35 days. Now so the market rally is part of the reason is the government's reaching a deal, but who knows how long it's going to take. Do you think it's going to be today, tomorrow?
Well, I'll give you this. I talked about this with Vecchio and Ilya last night. The probabilities of the shutdown ending prior to the 16th was about a 70%, 72% based on Polymarket data is what I was looking at.
I saw that one. that one.
So that has flipped completely. It's an 85% probability between the 12th and the 15th, which is Wednesday of this week to Friday. So that's where it's baked in. It was kind of split between 8 to 11, which would be today or tomorrow, and then 12 to 15, which is Wednesday through Friday. But they pretty much have it in there as Wednesday to Friday is our shutdown ending.
Okay, let's see.
I'll go with that.
Yeah, Wednesday to Fridays. It's not bad.
Yeah.
Not yet. So and so far, 80% of the S&P 500 companies has been the Q3 earnings. This is one of the strongest quarters in years. Just looking at the results, it's beat or not. this is actually strong. But when we see the average 1-day move, we're going to see in the next slides, it's quite different.
Yeah.
Yeah. And also last week, of course, the AI related stock got beaten down, dragged the NASDAQ, all the indices down. Everyone was talking about the AI related stocks. It's overvaluated. It's in a bubble, whatever. Now
today it's not overvalued.
Yes, no, nothing.
Today, one day it's overvalued. The next day, undervalued.
What a difference a day makes.
Yeah.
24 little hours.
So for this upcoming week, unless the government shutdown news, probably the only more important things is the CPI inflation data, which will be released on Thursday. And also the rest of the macroeconomic data, they're probably not as important as it used to be because all the data is not officially pulled together and calculated yet.
Right.
So does this one come out even if we're still closed down?
I didn't read into that. I'm not 100% sure.
Yeah, I'm not sure about that either.
I don't think any of them come out unless we reopen.
Definitely not the jobless claim, but this one I'm not 100% sure.
Yeah. Okay. Cool.
Yeah.
And I don't even know if they'll come out if we get like
because they haven't been like
not this week next week.
That's right.
Difficult probably.
That's right.
It depends on who gets paid first.
That's right. That's right. That's right.
Yeah, for indices performance, we saw all 4 indices were red, especially Nasdaq. Yeah, because all the people are start to a little bit doubt about the AI, but yeah, after Friday, no one cares anymore.
That's right. So, America.
It's America.
That's
America.
Right. Yes.
Okay, so expected move because of the intra-week volatility. The SPX moves slightly outside of the expected range, 1.4%. Realized one is a negative 1.6%, thanks to Friday's reversal, or is it going to be like a down 2.6%? No, actually down 3% or something. So we're right at the edge of the expected move.
Yeah, and we're expected move for this week is about you got it right there. I mean, because volatility's contracted a little bit, a couple of dollars one way or the other. Yep. You're right.
Volatility at the lows, it's below 19 here. VIX at 19 or at 1839. It's been a vol smash since the second half of Friday, from like noon on Friday up until the end of the day. I mean, we closed in the red on volatility futures. Right. It was nuts.
Right.
Yeah, it is crazy. During the midday, I thought, it would be very difficult, or it would be lucky if the indices came all the way back at the beginning, like at the market opens, right? It actually rally all the way up. Whoever sold Iron Condor or Zero DT's Iron Condor who didn't manage that earlier, you probably got to suffer on the call side again.
Yeah, I mean that was a tough one. We actually sold a lot of premium on our show on Friday because it was so high in Austin, but managed them early.
That was great.
30%. It worked out really well. But if, like you said, if you held it, if you got a little bit piggy in there, it was definitely a struggle.
Yeah, it happened really fast. Yeah. So I just checked like 10 minutes ago. The volatility actually didn't drop that much, considering the SPX, especially Nasdaq's rally this morning. Right, only down like 60, 70 cents or something.
In /VX.
I just checked.
I mean, Friday we had like mid 21 handle in volatility futures.
No, it was actually 23, I believe, all the way up. Intraday high.
In the VIX, itself.
You're talking about VX futures.
Yeah, I was looking at like VX futures, but either way, I mean, vol is down 3-4 handles from where it was. I mean, that's a big move.
Yeah. Premium came in really fast.
Oh yeah.
Okay, so talking about the next slide, talking about the IVR change, signal is kind of mixed. Equity related market, like equity and all the equities, implied volatility increased. The rest of the commodities, currencies is kind of mixed. It's up or down, not a huge change. Not a big deal, especially bonds, nothing changed.
Yeah.
Currency market, U.S. dollars was down a a lot. So euro, Japanese yen recovered from the bottom from the recent lows. So that's actually increasing implied volatility higher.
Yeah, there's been some good two-sided action in some of the currencies. It's been, I mean, the long dollar trade has been a tough trade, but you've got some like kind of short 1 week sort of spurts to the upside here. I am short some euro here. I'm long some Aussie dollar. I'm kind of mixed on my positioning. I have some short US dollar positions, but mostly short euro is kind of my play here.
Okay, so whoever follow Tom's trade, long Japanese yen is.
Please
don't give him that.
Mention that trade. That was a horrible trade. It's been a horrible trade.
Oh my goodness!
Stop it.
Yeah, fortunately, my position is not that big, but I'm gonna keep losing money on it.
Do we still have to give him his 1 day praise? Like, he caught it today. Amazing.
I put an end to that on Friday. I took away his company credit card.
So good.
Next one. Next slide, please.
Sure.
So something I want to talk about some market. One is the Bitcoin. But Bitcoin is actually dipping below $100,000 intraday for multiple days last week. But they all closed above the $100,000. So it's kind of hovering around this level. But this morning it rallied a lot, like 2-3%, right?
Yeah.
But overall, in the past 40 days, the November and the October, the crypto market already lost more than $1 trillion.
I mean, from gains that it made the prior 6 months, right? I mean, I hate that headline. I really do. I mean, and it's not just on Bitcoin; it's on everything. You know, like the market goes down one day, and the headline will say $2 trillion evaporated from the market. Well, we had made $3.5 trillion last month. I mean, you know, instead of saying over the last 6 months, we've made $1 trillion in the market, they say this day we lost $2 trillion, but we made $4 trillion for the last 3 months. I mean,
the interesting thing is that the news, like the market actually used the $1 trillion is like $100,000 before.
Yes.
Everything hit $1 trillion.
Yes.
Yeah. Nvidia will hit like a $6 trillion next time.
Yeah.
Pretty soon.
Earnings coming up.
So next one, not super important, but something worth mentioning is natural gas futures. It was trading above $4 for a little bit more than a week. This is actually approaching to the highest level since the end of 2022, beginning of 2023. If you trade natural gas, this is probably something. I haven't traded natural gas for 2 years.
Yeah, you learned your lesson because natural gas is a big product.
Yes.
Mm-hmm.
Shout out to Liz, who has been long into this move. I remember her kind of talking about her natty gas. I didn't know she was a big natty gas trader, but shout out to Liz.
She likes the commodities. She likes to buy them low, and yeah. I gotta give her props there. She's a better species than me.
So, what was the condition that you started considering? Like trade natural gas, buy or sell?
Me?
Yeah.
Never.
I wait for Westwater. He's my guy. He gets me in some of these things. I mean, I think what my dad was trying to get at there was that, it's not the first thing that I go to trade natty gas. Right. I mean, I'm a little more comfortable with crude oil, but natty gas is just not one that's like top of my list. When it's in play, I think it's interesting, but I usually wait for my macro boys to put me on something. And even then I do it super, super small, and it's usually directional.
Yeah. But when I first traded, I considered that position as super small, but it turns to be much bigger position than I expected. You gotta be careful trading natural gas. It's a huge contract.
Yes.
It is a huge contract. You got to be careful. I agree. Mm-hmm.
So next slide, we'll talk about the top 5 and bottom 5 best performance from S&P 500. The overall tone was to the downside, so you don't see a lot of the NASDAQ stocks on the top list. For the top ones, Expedia, DDOG, we had earnings, Amgen, some pharma, kind of a bio company got impacted by the Trump's policies a lot lately. Yum was up 7%. Do we have Yum earnings? I didn't put in the list last week, so I didn't watch. Love was up 7%. Anything you want to comment?
The only comment I want to make is on Love, because my sister's long that as a Southwest manager there. So
tell her to get out finally. Tell her to line that position out and buy some NASDAQ or something else.
Nope. She's right there where she was in July of this year.
In July of this year, in July of last year, in July of the year before, in July of the year before that. It's gone nowhere.
It's just building some momentum.
Yeah, it's consolidating.
Taking dividends. To the downside, SMCI, which had earnings last Tuesday or Wednesday, Dash also had earnings. PLTR earnings, Hood earnings, AMD earnings. Okay, so all these had earnings.
Yes.
Yeah.
But they were mostly inside moves. They were nice vol crush days. Like
they really were.
Even if you were trading on both sides into a 10% down move in Palantir or 14%, whatever it was over the week, the day after earnings, it was pretty inside, and it had two-sided action. It was up in the after hours and then kind of sold off during the day. So you know, these earnings trades have been relatively good outside of like Meta. Most of them have been expected move.
AMD, I believe intraday was down a lot, but actually rallied a little bit back into the expected range, right?
AMD opened like down 4 points on like a $25 expected move.
Yeah.
It was nothing.
It was not AMD.
It sold off through the rest of the week with the kind of general market sell-off. But overall, earnings have come in very, very much. And a lot of the tail volatility, the upside volatility was really taken out.
Yeah.
Next slide, please.
Yeah, talking about earnings, this is the earnings summary from last week. Some big movers. We have SMCI was down 11%, Upstart 10%, Pinterest was down 22%.
Yeah.
But I didn't trade Pinterest. I didn't pay attention.
No.
Unity was up. Unity was up 20%. Did you guys trade Unity?
Nope.
We did not.
Nope.
All right. Robinhood was down 11%. Is it 11% of Robinhood movements do within the expected move?
It was right at it, but all these were like were continuation moves like through the rest of the day. Like none of these stocks opened.
Oh, you're talking when the market opens. Okay.
Yeah, like when the market opened, everything was relatively flat, and you had 2 hours to take profits on anything you had. If you held it and you got a little greedy, then you probably lost out on profits. But I don't even think I think Robinhood had like a 10% ish expected move, so it's still like kind of muted across the board.
Got it. Yeah, if you trade earnings, you probably have enough time to manage it after market opens.
Oh yeah.
Yeah, D-Dog and Open Door, Irene, these are so it was still a interesting and fun week to trade earnings last week.
Sure was.
Yeah, looking at a big picture from next slide. So this slide is slightly different from the summary that I showed in the first slide. Even though 80% of the S&P 500 had beat earnings, but so far for 1 day move, we see slightly negative, especially from last week. Look at how many companies announced earnings last week. Last week was the busiest week for Q3, even though the week before was more important. We have like more than 1,200 companies announced in earnings.
Yeah.
Okay, so the last one, some interesting, not so many important ones, but we have Plug, we have RGTI, which is the quantum computing, which is pretty popular right now. Beyond Meat, Oklo, the biggest one probably Cisco and Disney, and JD if someone's interested in the stocks. So anyone interested?
Thank you, my friend. We're going to try to catch the opening bell here. We'll take a quick 90-second break. We'll come back. Thank you. Good stuff on there, Kai. We'll be back in 90 seconds with Tasty Live. Appreciate it.
Peace.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at tastytrade.
tastytrade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Nikki, we are back, son. You know what that means? The market's about to open here under a minute or so. So we've got a nice little market. Even the S&P's up 63 or 64 handles. I'm not going to quote the market. I'll wait till it comes in. And then we'll look at it from there. Volatility in by 90 cents. Gold up 83 after being up 100. Bonds have caught a little bit of a bid. They're only down 1. They traded over 117.01. But you got a lot of stuff on that you'll be working your way through today.
Yeah, I mean, today is going to be a nice bailout on some of these long delta positions. If you've been holding something or kind of taking off short delta into the move, it's going to be a good day today.
A good day. And then there's the bell. You didn't have to use your AK. Let's see what's going on with the market. Even the S&P's up 61 handles. NASDAQ up 365. Russell up just about 30. And the Dow up 190. Volatility in by 92 cents. Let's take a look here. Volatility in by 92 cents. Bonds down 2. You just made a trade in gold, it looks like. Oh, no, that was... Sorry, that was me. I apologize. Let's see what's moving the market here. On the high option volume list to the upside, we've got, SPX RUT, of course, AppLovin up $20, Lilly up around 18, MU up around 12, Goldman Sachs up around 12, Tesla up around 12, Coin up around 11, AVGO, which was getting a little hit over the last couple of days, has come back a little bit back here. So still well off of its lows it made over the last week or two. All of these stocks. Meta up $8 and change. VRT up around 8. Everything up. Let's see what's moving to the downside. That's probably more interesting. You can see here it's just a small little list. UNH is the biggest pig, down $2.70. And then it's all volatility products. You look through here until you get to your Cokes and your Walmarts, but really it's a pretty broad-based market rally here. You just did a gold trade, 2 gold trades?
Yeah, so I had a crab trade that I just closed out of. That was a couple $100 out of that one, and then I had a leftover call in December at the 380 strike that I had as a call diagonal spread. I think it was a fast market trade. So I just sold out against the 380 call, the 385 in the November monthly. So kind of reducing a little bit of short delta there, but playing into the upside skew because you have that upside volatility skew getting baked in there. I mean, this is quite the day. Some of these, I'm like, they're moving so quick. I want to hold them. Like I got an Amazon position. I bought the dip, last week. I closed out that earnings trade where I had.
Yeah, no. Let's not pat yourself on the back. I mean, too much here. I mean,
I'm not patting. I'm just saying.
No, you're doing a good job. No, you're doing a good job. But you took some heat on these positions too, right? I mean, it wasn't like you did everything on Friday.
No, I did a lot of them on Friday, but yeah, some of them. I mean, if you looked at my NASDAQ scalping on Friday, it was something to behold. I think it should be in a museum somewhere.
Okay.
I closed out the coin puts that I had there. I won't mention when I did those because that's a sore subject for you.
Gold up $7 and change. Oil up 20 cents. So far, it's a good day. You didn't have to use your AK.
You got anything else you want to look at here? Oh God, look at Micron. Micron's this thing. I refuse to roll up the puts here just because this stock. I mean, it's up $12 to $15 every single day.
It's the strongest of the strong.
Yeah.
I didn't think I would ever say that about Micron. Micron's given me fits now for the last 2 years. I abandoned it. Put it basically in my gold portfolio where I don't look to do anything in there. So for me, MU is a tough product, very tough product to trade.
I'm selling out another call against my NVIDIA position. So I have a naked put there that was part of a strangle. I legged out of the call, the short call. I also have a long call there that was.
Why? Because the short call was basically wasn't giving you any more protection, wasn't helping you with premium, is that kind of thing?
Yeah, exactly. So I had the 210 call in the November. I had the 210 and the 240 calls. 240 in December. I closed at $1.24 last week.
You can only make a buck on that, right? I mean, a buck.
Yeah, that one's only moved about 40 cents. The 210, I bought back on Friday at $1.26. I just sold it out again today at $3.20. So, I mean, just taking advantage of this move, still leaning long, but reducing delta on my positions without adding additional risk. I mean, that's kind of how I like to trade because I am dealing with limited capital. So I still want to lean long. I don't want to take the position off, but I got to do something against it into a $6-7 up move. So, that's the way I'm doing it.
Some of the other big movers that got hurt last week, Palantir now up 8 and change. I mean, I'm going to mention Goldman Sachs in here because it's been one of the leaders too. It too is up $17, but like stocks like VST, I know a lot of people have been trading that too. I'm having a little bit of problems sometimes with my charts here. VST up $2 or $3, MST up around $7, Tesla up around 10. You've got a pretty broad-based market here of up move, not really too many down moves on the overall.
I think you did the VST put.
I did.
So we're gonna take that one off the table. I mean, you sold that at $3 last week, or is that me? What's the 7th? The 7th is Friday. That was me.
Yeah, I sold it at $5 earlier and bought it back at $4 a day later. So
I was gonna give you the credit for that, but sorry.
No, you can't give me the credit for that yet, son.
I just took that. I took that off.
I probably asked you to do it. That's how it works.
Yes, of course. Right. I think it might have been a fast market trade. We got a bunch of trades on for fast market, so that might have been part of it there. What else?
Very good. All right. Well, listen. I don't know what else to say here. The S&P is up 72 and volatility in by $1.15 right now. I haven't had a downtick in the market. The Dow, which was the weakest of the group.
That's Palantir. I did a little crab trade there. Took a couple hundred out of that on the upside.
Don't hurt yourself. Pat yourself on the back.
I'm not patting. I'm announcing what I'm doing here. I mean, come on. Isn't this what you're supposed to do?
No, it's definitely what you're supposed to do. The Dow, which
you're just used to the bitching and moaning.
I'm just used to you making 25 cents on a move when you're right. You know what I mean? I'm not used to these dollars that you're popping up here. That's the problem. Do you have any problem children? Let's go that direction for just a quick second.
Not a ton that I'm looking at here. I mean,
beautiful.
MU is really the problem child. I mean, a 15-point up move. I have slightly short delta into this move. I'm short about 30 deltas into this move, but it's a hard put to roll up. I mean, the stock has gone 120 to 250. Like, how do you roll up these 175 puts?
Yeah, it's definitely a tough one. Definitely a tough one.
You go to the 200 strike for $3. We were at 2. I guess you do that. That picks up, 7-8 deltas. I mean, the call skew is just off the charts here. I mean, they're pricing the stock to go to 300 in the next 30 days.
Yes,
seriously,
is immense.
Yeah, I'm going to do that. I'll roll up the put a little bit.
Okie dokie.
There we go. All right, I did it at $3. So I got in the strangle. I am sitting at $14 and change, and it's marked at 21. So I'm out like $600-700 on that one. See, they're not all good. Come on.
Just the majority of them.
It's the majority of them.
We have not had too much two-sided action right now. Even the S&P's up 74. Last night, they were up around 30 handles for most of the night. I saw them up only 25, up to about 40 or so. And then this morning when I woke up, they were up 60. Now we're up 75, making new highs, 68.29. By new highs, I mean intraday new highs on the E-mini S&Ps. Let's take a quick 90-second break and come back. We got more Tasty Live. Nothing says Monday like Dr. Jim, the skinny on options, abstract applications. Right after this is Tasty Live.
Beautiful.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Dr. Jim Schultz, Central Michigan University. Number 51, because trading the tastytrade way, that is our minimum probability profit.
Kaizen, University of North Carolina, Chapel Hill. Number 16, because 16 is one standard deviation on one side.
Brittany Sheriff, Bradley University. Number 15, because I like to carry a positive theta of 15 to make $15 a day. Whoop, whoop.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays to see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch tastytrade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on tastytrade. Genius loves company.
We got back, son. You know what that means? Nothing says Monday like this, man. That's right. I'm talking about Dr. Jim in the house and the Skinny on Options abstract application. Mr. Monday himself. How are you?
Man, I'm well. I'll tell you what, I was doing pretty well, but now I'm doing phenomenal because I was watching the opening bell with Tony Batista and Nick Batista, and out of nowhere, I heard a 90s Ice Cube hip hop reference, and I'm like, that's my guy right there. Like, that's my guy right there. I caught that, Tony Batista. I don't know if your son did.
Oh,
but
of course. Come on.
I didn't know, man. I mean, you were too busy patting yourself on the back with your 25 cents you got in Micron, your 18 cents you got in Pass. I didn't know, man. I wasn't sure.
Oh, I'm taking it. You know, this is a tough gig now. You know, everybody was so easy to pat the creator on the back. Now, you know, it's tough.
No, man, because we're all on the same level now, right?
Yeah.
Like we're all peers now. Yeah, it's a whole different deal.
Man.
No, it's a whole different deal. I'll tell you what. So no, this is an exciting day. So guys, I'm finally getting my fence fixed. It's actually happening while we're on air right now. So my fence last year with the hurricanes, with like Milton and Helene and stuff, like it destroyed my roof, destroyed my fence, right? So we had to get the roof done first for obvious reasons, but that took a really long time. And so then, I mean, my fence has just been like destroyed, like around my property. Now, thankfully, my neighbors are really cool.
You're at that house?
I am that house. I am 100% that house. But my neighbors are super cool. Like we all went through it together. I mean, they had the same type of thing going on, right? So anyway,
but their fences are fixed already, right?
Their fences are totally fixed. They've been fixed for months.
Years.
Yeah, exactly. But I'll tell you what, man. Like Nick, I heard you this morning. You're talking about, you know, NVIDIA. You're talking about Micron. Like talking about all this heat that you're taking. I'll tell you what, man. I started taking so much heat from my wife on this fence that I just finally had to say, I'm done. Like, I'm done. I can't take any more heat. Like, it's no different than Micron. It's the same thing. And so I finally got the guy out here. He's getting it done. I'm super excited.
That's awesome.
Very nice. The
That's
neighbors
awesome.
and they all thank you.
Mm-hmm.
You see,
yes.
You thought waiting you might get like a better price. Now they got to be gouging you with all the things that are happening. The
tariffs, that
tariffs, the ice raids. I mean, this got to be the most expensive fencing in recent memory.
Are you doing a wooden fence or a plastic fence?
No, I'm doing. We got to do wood, man. We got to be one with nature, man. I can't have vinyl. I can't have vinyl in my backyard. I'm like, I don't know, man. It's like wood just looks so much better. And from everything that I've understood, like all the deep research I did about fences, I mean, I was probably in Google for at least 15 minutes. And what I learned was wood fences and vinyl fences, in terms of like the actual structure, it's not that much different if you have it done right, which my guy that's doing these, I trust that he's going to do a really good job. It's not really, you don't get that much more additional like structural integrity with the vinyl. So we just went with the wood.
No, you just don't have to paint it if you're a painting your fence kind of guy.
Yeah, right. No, I'm not even a fixture.
Anybody who leaves their fence down for the last 2 years.
I'm not gonna paint it. Are you kidding me? No. What do you have in Fort Myers? You got vinyl or you got wood?
I'm in Cape Coral, but I have wood. Yeah.
Yeah, see, that's what I'm saying. I knew it. Yeah, you're a wood guy. Yeah, I got it. 100%. Hey, did you guys see my Chargers last night?
I got hardwood. I have a hardwood fence.
Did you guys see my Chargers last night, though?
Oh, your Chargers?
Oh, my. No, I'm just saying, like, they didn't look too good. I thought Aaron Rodgers was going to do it, but y'all been sleeping on my boy Justin Herbert, dude. You've been sleeping on him for a long time.
Oh, my God. Yeah, you're riding all the waves, Jim. It's okay. I got you.
I'm surprised you're not a Bear fan by now.
No, dude, I'll never cross over. They're so bad. Oh, they're terrible.
Oh,
they're awful.
Don't say that. Don't say
that.
No,
they're terrible, dude.
In first place.
No, man, the Lions are in first place.
No. Bears. If the Packers lose today, it's the Bears, baby.
Yeah. Is it because of like the divisional? Because they would both be 6-3, right?
Yeah. We haven't played. Have we played the Lions?
I don't.
Yeah, I think you got smoked. I'm pretty sure you got smoked. And I would prefer if you refer to them as my Lions, not the Lions.
Your Lions.
Yeah.
Who's not your? So the Bears are the only team that's not your team.
It's the Bears and the Dolphins. Those are the only teams that are not my teams.
You gave up on the Dolphins?
I never even had the Dolphins. I don't know what you're talking about. No, dude.
Oh, okay,
Mike
okay.
McDaniel? I mean, your boy looks like he should be teaching trigonometry at the local high school. He shouldn't be on the sideline. Come on, man. Anyway.
Wow. So
That
sad.
didn't take long.
No.
Turncoat.
There you go. Anyway, speaking of turncoat, how about this market today with we got the little weekend Trump pump, you know what I'm saying?
Absolutely.
Stimmy's coming. You got reopening.
Oh, dude, I can't wait for my Trump stimmy. Are you kidding me?
What are you gonna do with it? What's you gonna put that towards the fence?
You guys know, are we getting it? Is it per like actual individual or is it per like taxpayer? Do we know yet?
Oh, so you could get a couple extra. Maybe it's per unit in the household.
I'm kind of hoping it's per heartbeat. Like if we're going per heartbeat, I mean, I'm gonna clean up, dude. I'm gonna clean up.
Is that why you chose to do the fence now? You finally waited. You waited for the Trump stimmy, and this.
No. But there's other things I need to fix. There's still other. The fence is only one of many. So if the Trump stimmy hits, like I'll get the other things done.
That's
the fence was
like air conditioning.
No, I got to go with air conditioning. But the water heater could use some love. I'll tell you that.
Yeah.
Oof.
Yeah.
Hey, you know what else could use some love? This segment.
Hey, how about that? Look at Tony calling for the segment. Man,
Wow.
in 8 years of this show, not one single time has Tony Batista ever called us into the segment like that. This is a new era, guys. This is a new era.
Have to.
I mean, let's do it, man. All right, let's go. Let's do some finance. I think this is going to be very apt for today. And we are going to talk about some negatively skewed markets. It may not seem like they're negatively skewed on a day like today, but they most certainly are if you look at the empirical findings. So, Beth, go ahead and cue us up here on the introductory slide. So as premium sellers, we're always looking to put ourselves in high probability trades from the beginning. But of course, no strategy is completely foolproof, and we will still have our fair share of losers when the market gets away from us. And one empirical finding of the market that has been demonstrated over and over again is that the big outlier moves tend to happen more frequently to the downside. Gentlemen, do you guys think that the market still feels this way, where on just a day-to-day basis, the big outlier moves are still, the big risk is to the downside?
I think so. I mean, I think in single name equities, that is more apparent. I think there's been like a bit of a dispersion trade where the volatility in single name equities to both directions has been way greater than what we've seen in the indices themselves. So I would say that's where I point to the big, downside moves is in single name equities, not so much in the market as a whole. The market as a whole has felt like a buy the dip situation.
Okay.
I agree with what Nick said, but the market wants to price in that risk to the overall market, all your positions in its totality. And that's why ETFs like SPY or futures options like EZ or the RUT or NASDAQ will have put skew and not call skew. It makes for an interesting, dichotomy in the market where you get call skew on these individual stocks to take advantage of, and you get put skew on these ETFs, so you can have a balanced portfolio, meaning a delta neutralish portfolio with a lot of theta decay in it. If you have the right market, bias, upside on the individual stocks, downside in the SPYs.
No, I think that's a really good point. I think you guys both kind of highlight some interesting truths that are happening in the market right now. I mean, the put skew that's typically in the indexes, I mean, that is the negative skew that's baked in. Like that is kind of that downside velocity risk that's kind of always there. But I think Nick is right. I mean, when it comes to individual names, the upside skew is kind of always there, especially with with names that everybody loves. I mean, it would be Micron,
whatever, sure.
Yeah, Palantir, whatever, right? But now I think there is a little bit more balance when it comes to that, where the big downside moves are definitely kind of there for the taking as well, potentially in the individual names. But one of the things about negative skew that's really interesting is it is one of the empirical findings that it just keeps showing up over and over and over again. And I know that on a day like today or in a market like this one, it can be difficult to remember that, hey, there still is a lot of downside risk. And we were kind of reminded last week, right? Thursday and Friday. But then Friday was such an interesting day because it looked like they were just going to, take them out to the woodshed again and NASDAQ down 1,000 or whatever. And they just ripped them right back. And so, pretty interesting market that we're in for sure.
Yeah. Market's not done yet.
No, definitely not. All right. So Beth, hit us on the next slide. So to really understand negative skew, we have to go to my favorite topic, kurtosis. So this was, way back in the day when I first started with Tasty in 2015, this was the first segment I ever did. This was the first segment to convince the creator to give me a shot, whatever. It was kurtosis, and it was talking about how because the market has exhibited positive kurtosis over time, the outlier moves in the market happen more frequently than you would expect them to happen if you had a normally distributed bell curve in the marketplace, which we just generally do not have. And so when you have this positive kurtosis, you have more outliers on both sides. This is not necessarily concentrated more on one side or the other. We're going to talk about that in a second. But when you think about big moves and big outlier moves in the market, this is where I think it's called the barbell strategy. Tony, I think this is your boy Nassim Taleb, right? With the barbell strategy?
Sure.
Yeah, like where you just kind of buy T-bills and then buy deep out of the money calls and puts, right?
Yes.
Yeah, so go ahead and defend your boy. What's up with that strategy?
I can't defend him.
The one time it's the salacious headline. The one time it works.
As retail investors, it's so hard to inventory this now.
It's impossible.
Yeah, that's the point. And if you're looking at volatility itself, because that's what it seems like you're looking at here is just the volatility. Volatility futures have this all priced in. We talked about on a confirm and send this morning, where you had cost to carry on something. Yeah. This is one of if not the biggest cost to carry is volatility.
Yeah, that's exactly right. So it's interesting you said it's hard to do at the retail level. What makes it easier to do at the professional level?
Capital. Well, money is a lot less expensive to hold. So it doesn't cost you as much as a professional. I'm talking about going back to a market maker days. I don't know about professional status today. You could take a lot more risk with a lot less money, and the money is cheap to use relative to everywhere else. And plus, you're buying on the bid and selling on the offer, so it bails you out on a lot of these positions. So it's just a different nature, and that doesn't mean that we inventoried volatility here. It was just easier to get cheaper and not cost as much to have.
Well, and that makes a huge difference. I mean, the cost of money itself being so dramatically cheaper, that changes the game totally.
Mm-hmm.
Yeah. And so, yeah. Okay, so we've got kurtosis. So Beth, go and hit us on the next slide. On the next slide. So let's now transition to skew. So the kurtosis shows us, the number of outliers in the market, but now we want to try to learn, is there a tendency for the market to have bigger outliers on one side or the other? And because the market has exhibited negative skew, there is, but let's set the stage kind of starting with zero skew. If there was no skew in the marketplace, if you were perfectly symmetric on both sides of the market, regardless of what you're looking at on the x-axis, you could be looking at percentage return, you could be looking at, delta moves, you could be looking at dollar amounts, it doesn't matter. You would have a symmetric bell curve on both sides. So essentially it would be very evenly distributed, big upside moves and big downside moves, and essentially everything in between. And for all of my, statisticians that might be watching the show this morning, that would mean that the mean and the median and the mode would all be equal. They're all right there in the center of the distribution. But Beth, go to the next slide. What happens if we actually do have negative skew? So now all of a sudden you see everything is shifted over. So the distribution looks completely different, right? So now all of a sudden, my mean, my median, and my mode are all different. The mean being the lowest of those three. But also you can see that the left-hand tail, it stretches out way further than it did. And so the peak of the distribution actually shifts over to the right a little bit. But the big outlier moves, the things that are going to do the most damage to us, they're stressed way out to the left-hand side. So to kind of put that in English, that just means that there's more opportunities, more data points for the market to hit on the extreme downside than there may have been otherwise. So when you kind of take these two things together, positive kurtosis and negative skew, you've got a market that really, I mean, the big downside move, I mean, it doesn't happen often, of course, but the really big downside move, it happens more frequently to the downside than to the upside.
That's fair. For sure. Yeah.
So what do we do about it, guys? So that's what I want to. That's what I'm here for. What do we do about it? You guys tell me.
We got a question about this in Confirm and Send of like, you know, I'm afraid of the tail risk now that after the price action last week. What do you do? And, you know, it's something where you have to be somewhat comfortable with that sort of tail risk if you are going to be engaged in markets. And we're all engaged in markets, whether passively or actively. You know, everybody is long the market in some way. And so if you're actively trading, the real way to mitigate that is through position sizing. I mean, and that's subjective to everybody's own capital limitations. But, you know, if you're really that worried, define the risk. You know, buy a 10 delta option against your 30 delta short puts. And that will, you know, it doesn't take out the pain, but it'll mitigate some of that tail risk that you have. And so it's all through position sizing. That's it. That's the only way you can do it consistently over a long period of time. Now, if you think the crash is coming this week, you can make that trade. That's a trade. But if you're talking about just mitigating long periods of time, that left tail, the only way to do it is through position sizing.
Okay. Tony, what do you think?
Yeah, he's right. And I think he alluded to, like, if you think it's happening this week, what he's trying to say, if you want to inventory volatility on a short-term basis, and it's very, very hard to get out after you've made that assumption. Like you always, like, you know, if you say, oh, you know what, sometime this week I really think volatility is going to expand bigly, to use the term of the year here, you could inventory volatility for a short period of time. It's going to cost you some drag, but it's a small period of time. You took a shot. The hardest thing to do is on Friday, let's just go Monday through Friday here, on Friday, closing that position for a loss if it doesn't happen, because you know if you do on Monday, because that's just how the world aligns, you know, you would have come, you know, you would have gotten paid.
Closing the win is hard too.
I got so many questions on how do you, like, because the market was going lower in Austin, like, what do I do with my hedges? When do I take them off? You know, I hedged some of this position, and we've always said that's the $64,000 question or $64 million question. When do you take this off? I mean, at some point you got to say, all right, I did good on my hedge. I got to go back to my original assumption. So I would say anytime you had a profit in your hedge, which you didn't want to have when you put on the hedge, it's probably time to take it off.
I think there's so much gold in what you just said when it comes to the hedges, right? Because you have to keep in mind, like, and I think this happens to every single one of us. Like you put on, you have your original positions, whatever, then you add on the hedges, and all of a sudden the hedges start doing great, and you're like, well, wait a minute, maybe the hedges should be my original position. And right. I think that's a mistake, because now you're flipping around, you're doing all kinds of crazy things. And so you're right, when you have a hedge and it's working, and the term I like to use all the time is economically significant. Like, if I have a profit that's economically significant, now I need to start thinking about, okay, the hedges did their job. Now I'm better off than I would have been if I hadn't done anything. So maybe I just go back to my original position for a little bit. That's right. Of course, if the market keeps going the way it was going, it's going to hurt some more. But hey, at least the hedges help to soften the blow. That's the other thing that I'll say, and this is similar to inventorying volatility, of course, when it comes to having short delta in your portfolio, and it doesn't mean you have to be net short, but just having some short delta in your portfolio, one thing that I think can surprise a lot of traders, and one thing I think a lot of traders should consider, is rather than just having purely dynamic short delta via short calls, via short call spreads, via skewed strangles, whatever, one thing that I think you have to remember is if you get the, not the move that you want, but if you get a downward move that helps those short positions, those deltas are going to dry up. Those deltas are going to shrink, and they're not necessarily going to give you the punch that you were looking for. Like the punch that my Chargers had last night, they're not going to give you that. Like that's just not going to be there. And so what can you do to potentially, mitigate a downside move in the market? Consider more static short delta. So some of your short positions can be static short delta, short MNQs, short MESs, short something else, or at least a covered put where you've got more delta to the downside than you might with like an out of the money short call or an out of the money short call spread. But again, if the market keeps drifting up, it's going to be painful, and that's the game that you got to play.
The good thing about
it's a very hard thing to do.
Yeah, and I was going to say, just with the short premium, the fact that your deltas go away makes the decision making a little bit easier, right? So you get you're leaning short delta, and those deltas go away into the downside move. It allows you to dynamically get long delta without putting more risk on the table. Right. So those short deltas that go from 30 deltas to 5 deltas, it takes the decision making out of the equation of like, oh, well, I'm long these VIX calls, and you get that pop and vol, and you want to sit there and be like, oh yeah, this is it. This is the crash. I'm going to hold it. You can't do that with short premium. And the same thing with the upside. If you're selling puts and the market goes up, your puts lose value. So it takes risk off the table dynamically, which I think is also a benefit to those sort of trades and positions.
Mm-hmm. So I'll tell you what, this just goes to show that even when Nicky Batista he's working on the weekends, he's in San Diego, he's still watching the Monday Morning Skinny, because that's exactly what I talked about last Monday when Nick wasn't here. And so I appreciate you watching the show on a regular basis, my friend. So thank you so much for all the support.
I don't miss
I know that you don't. I know you watch it again at night to make sure you didn't miss anything, because it's always better the second time. It's just like, we just watched the Bourne movies again. Oh, they're so good. And they're better like the second, third time.
We got the Dr. Jim specials coming on the weekends too.
You want them at like Saturday night at like 3:00.
Saturday night before I go to bed, I watch some Dr. J, and it's soothing.
It puts you right to sleep, dude. Like I understand.
Perfect. Yeah. It's perfect. It's a refresher. It's soothing. It's great. It's great.
Oh, it's too funny. It's too funny. Yeah. No, it's good stuff. It's really, really good stuff. But yeah. So I think it's tough. The negative skew is tough, right? But again, one thing you said earlier, Nick, that I really, really liked was you kind of said, hey, we're all taking risk, every single one of us. And that's one thing I think we all need to remember. At the end of the day, nothing is bulletproof. At the end of the day, you have to choose where do you want to be exposed on the risk spectrum, because you have to be exposed somewhere. You're not going to find anything that has no risk unless you just want to buy UST bills and call it a day. That's the only thing you can do.
You got risk there too.
You got risk there,
interest rates. You got all sorts of inflation. You're locked into a rate on dollars that are decaying.
Yeah. You're hoping that King Trump comes through for you. That's a big risk, man.
So good.
I'm not gonna interrupt you too while you guys are putting your foot in your mouth.
Well, let's get him a few takeaways. I got to see how my first guy is doing, man. I think he's doing a good job, but you never know. Again, markets move and things change. High probability premium sellers are well positioned to succeed as active traders, but the biggest risk will always be the big outlier move that gets away from us, and the negative skew of the markets has shown this risk is more pronounced on the downside than the upside.
The big one.
One final thing I want to say. The best example of this, actually, because it's hard to see now because the markets are so strong, right? Yeah. But a couple Fridays ago, when the NASDAQ dropped 1,100 points, that's actually a great example of this, because that was, a 4% move or whatever? Yeah. Notice how the market recovered. It didn't recover with an 1,100 point up day. It recovered with a series of 150 points, 200 points, 250 points. That's exactly how the market typically functions when it comes to big moves versus small, medium moves, which again is not to say that you can't have a big move to the upside, because you can, because on that Liberation Day rebound, the NASDAQ rallied 10% in like 30 minutes or whatever. So it can still happen, but it just usually happens to the downside.
Good job out of you. I think that's all I can say, Dr. Jim. A better job out of those poor SOBs that have to dig the holes for your fence.
It's just one guy. He's doing it all himself. It's just one guy.
doesn't make you feel like maybe you could have done it a year ago yourself?
I mean, it's a fleeting thought. It's a fleeting thought, but it has entered my mind. It's typically gone within a couple seconds.
We're going to take a quick 90-second break, just like Dr. Jim's going to be gone in a couple of seconds. We're going to come back. We got a market measure next. Good job out of you.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at Tasty Trade.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Son, you know what that means? Time for a little bit more tasty live with the market measure. But let's take a quick look at the market. Even the S&Ps really haven't moved that much. They're up 75 handles. They're about where we were when we opened this morning. NASDAQ up 460, Russell up 19. The Dow is the weakest of the group, up 174. Try to catch a little bit of a bid back lower. They're really coming for even the S&Ps and the NASDAQ. That would be the risk on trade. Volatility in by $1.15. It too hasn't had too much movement. Just been stuck down here about 10 cents off of its lows. Bonds have had some movement. You made a nice call. I think I stymied you. You wanted to buy some bonds by selling some puts when they were down around the 116.15 handle at 117.02 right now. Bitcoin up $1,300. 105 and change after trading up to 107, down to 104. Bitcoin seems to have lost a little bit of its oomph to the upside. What do you think, Nick? Even though it's up 1.5% this morning.
Yeah, a little bit. I mean, I think I think it's good that we've held this 100K mark. I mean, I think that's kind of a positive here. I will say, and we talked about this a little bit last week, like when you're looking at things that have kind of taken out the froth, Bitcoin is down 10, 15, 20% from the highs. Everybody talks about, like the big downside move. You have that downside move in crypto across the board. The where the strength has been the Nasdaq and the S&P 500, where 3 or 4% down moves and everybody's like crying in the fetal position.
Oh my God!
So,
even when it was down 3%, like in the beginning of that move, before Thursday, Friday, Wednesday of last week, I mean, Twitter, X, whatever you call it these days, was unbelievable how everybody was, Kramer, we're in a low. I mean, the bear market is here, the whole thing. And then, you're right back to where you were. People just don't learn sometimes that, there's a buy and a sell and a buy. There's two-sided action in all of these markets to do something.
Totally. And so that's kind of how I've been looking at the crypto space, is that, it's remained relatively steady here. I mean, I think it's good for markets to have two-sided action. So, I think it's better that we've had a nice down move here in crypto rather than another 50K to the upside. I don't think that's positive.
You open yourself up more to even larger than a 10% move, which we've had just recently. Oil reversed. It's down 16 cents after being higher by almost $1 this morning. So good cover on some of the puts that you had there. Gold holding steady up 85. Silver is really the big story. It traded over 50. It's now 49.80, still up 3.5%. Net gas down small. Let's go across the board real quick for those playing at home. I just have the earnings up here. I'm going to change that and go to the high option value. What are you doing?
Sorry. You didn't give me the opportunity to throw out the gap and nap again. It's been a gap and nap.
Give me the gap and nap. What is that?
That's the gap up open, and then you nap for the rest of the day. You just kind of sit here up 70 points all day. But some of the trades I'm doing, I close out a Marvell diagonal spread. We did that last Friday for Fast Market. One of my peeps in our Reddit chat gave me that. So shout out to them. I think it might have been OK Avocado, but I forget the name.
And if you've got some questions on Reddit, we'll go to your questions at around 9:40 today. So if you do have questions, submit them. We'd love to hear from you. And if you want to call in, we'll probably have time for a call in too.
For sure. I had some diagonal spreads in SPY and Qs as kind of the downside play, where into the down move, I sold out the puts again. I just bought those back again. So I'm kind of scalping out of them, getting a little bit more short delta here into this move without adding, more risk on the downside. Taking a little, the more risk is whatever I'm paying for these puts, which are like between 80 cents and $1, kind of nothing. So I'm taking off stuff that's working real quick is really the 2 cents.
And you're being nimble on what seems to be a two-sided market these days, right?
Yep.
Very nice. All right, let's go. I'm ready to go.
Cool.
Market looks like status quo. It almost seems like even the S&Ps aren't really moving. You know what I mean? They're just ticking very slightly here. You still have a full board of everything's basically up. Volatility and a couple other names. CRM just went down $2. MSTR is down $2. That would be MicroStrategies with Bitcoin moving a little bit lower. BABA's a little bit lower. Starbucks, UNH. Other than that, OKLO down $1.
Wow. That
Yep.
stock seems to go up every day.
It does seem to go up every day. It trade up to 117. It's 111 right now. Did I freeze?
All right, let's do it. Understanding. Am I on?
Yep, you're on.
All right. There we go. I'm back.
All right, let's go.
First slide, please.
You know what? Let's take a quick break, guys. Let's reset, and then we'll come back and do it again.
All right, we'll take a quick 90-second break and come back.
Take a quick break.
We'll come back.
With the market measure.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today. Got the need for speed? No problem! At tastytrade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. tastytrade, make your move.
All right, Nikki, we are back, my son. E-mini S&P's up 78. Let's go to this market measure.
I will see if I'm able to stay in on this one.
Go ahead.
Understanding Bitcoin's portfolio impact. So in recent years, Bitcoin has emerged as a distinct asset class, often behaving independently from traditional markets. We're going to be examining its correlation and volatility relative to major benchmarks like the S&P 500 and the US dollar, providing insights into Bitcoin's potential role in portfolio construction. Despite its high volatility, Bitcoin's weak correlation with equities and traditional assets suggests it can serve as a diversification tool, potentially enhancing risk-adjusted returns without meaningfully increasing portfolio volatility. So let's get into it here with a little bit on some crypto. So the study, we're looking at 2015 to 2025. So there are some huge moves in Bitcoin over this period of time. So you have to keep that in mind. This is skewed in some ways because of those huge moves. But we're really going to look at the volatility aspect of it, not the total. We're going to look at total returns, but the aspect we're going to really isolate is volatility and what that effect a small allocation might have on your portfolio as a whole. So we're going to look at the rolling 30-day historical volatility here, and we're going to look at what ratio of BTC to SPY is ideal for gaining Bitcoin exposure with minimal portfolio volatility. So this is for somebody, if you're trying to just dabble in crypto, this might be a good segment for you. I closed out the UNH puts we sold last week.
Nice. UNH catch a bid? Because it was one of the ones that was down earlier. It's still down $1.30, but off of its lows. UNH traded down to about 320. It's 323 right now. So good job.
Yeah, it's really volatility. Like I'm looking at this AMD strangle that I got. I'm short the 200, 300 strangle in December. And I have 7 short deltas here into a $13 up move. And that strangle has moved about $100. And I put that on in the middle of last week.
Right.
So it's really volatility is just coming off the board here. It's a fantastic day for me.
Yeah, IV rank has gone from in the mid 50s to the low 30s or mid 30s right now in AMD.
Beautiful.
Next slide here. Let's get into it. So over the past 6 months, Bitcoin has shown slightly higher correlation with the SPY compared to its 10-year average. It's about a 0.38, which is not high. I would call this kind of like inconclusive, to be completely honest. The 0.03, which is its longer duration average, is certainly inconclusive. Like, this is completely random over a 10-year period in terms of the up versus down day on a day-to-day basis. So correlation here is relatively non-correlated in all when you're looking at the in totality. In the last 6 months, it's been a little higher correlation, but certainly not the same as you'll get with like Apple or Microsoft to SPY. Those are going to be very, very high correlations. Bitcoin certainly has not been that high of a correlation.
Right.
Also, during this time frame, Bitcoin has been slightly negatively correlated to the U.S. dollar. So again, this is not a great correlation. Like, it's a very random correlation here. It's very much agnostic over a longer period of time to equities and the U.S. dollar across the board. So despite these short-term shifts, the correlations are still weak. Thus, Bitcoin provides another avenue of diversification to most asset classes. So, the story here and in the graphics as well is that there isn't a high correlation here. You're looking at something that moves pretty independently, which is something that we target as a way to diversify in our portfolios, especially for somebody that's in like a buy and hold situation where you're passively long the market. You're always looking for things that kind of are uncorrelated, where might hedge you on a day where the market's down, or it might be more volatile when the market is up. Like, that's what you're looking for in your portfolio, and that's kind of what you're seeing here.
Very good.
So next slide here. So comparing the 30-day rolling historical volatilities of Bitcoin and SPY since last year, Bitcoin has been considerably more volatile with larger historical volatility swings happening much more frequently. So this chart is a little bit skewed because of the extreme volatility you had earlier in the year in Bitcoin as we exploded higher. But really what you can see here is that overall volatility in Bitcoin is much higher than equities. Not a shock to you there. You couple that with the non-correlation that you see, and it becomes an interesting asset to put some sort of allocation to, which is what we're going to look at in the next couple slides here.
I like it.
So jumping to the next slide here. So the daily returns distribution for Bitcoin has much fatter tails than SPY, and this has been in both directions, but you highlight kind of the downside ones here, and has had instances of outlier moves as large as 40 or 45%, whereas SPY's largest daily swings typically stay within about 5%. This is not a shock if you've been looking at cryptocurrencies for any period of time, really. They've had huge swings in both directions. And so here you can see, that the distribution is much wider, which is something that you should be looking for as a small piece of your portfolio if you are looking to outperform in some way to the upside, right? If everything is correlated to the market and you basically just perform to the market, you're just buying the market. You need to diversify and have things that kind of are uncorrelated and uncorrelated in terms of volatility. You want some things that are higher volatility. You want some things that are lower volatility. That's how you diversify a portfolio, especially if you're doing, if you're more like in the passive investing kind of space. You want to have this sort of exposure just to give you the sort of volatility, the higher volatility overall of the portfolio.
Right. And then you throw in strategy diversification, and you've got everything that we always talk about here on the show.
Totally. Next slide here. So even though Bitcoin is around 8 times more volatile than SPY, adding less than 0.2 of a Bitcoin to every 100 shares of SPY actually does not add to the overall portfolio volatility. And what that means is somewhere between, with Bitcoin at 100,000, just to make it a round number, if you were to add between $10,000 and $20,000 per 100 shares of SPY, which we'll call, 70,000 in cash, in capital, a 20 to 30% allocation to Bitcoin versus SPY. Like for 100K to have 70% in SPY versus 10 to 30% in Bitcoin won't really change your volatility. And this is due to the diversification factors here of it being a smaller sized allocation. It tells you that you don't have to have, that 1% isn't really going to do anything. It tells you that you got to get into you can get a little bit bigger based on the correlations that we've had and just the distribution of returns. You can get a little bit bigger in your allocation here.
Very good. As long as you're getting bigger while watching your size, right? You don't want to get...
Yes. Couple takeaways here. So Bitcoin has been virtually uncorrelated with the market in the past 10 years and has been positively but not strongly correlated to other major cryptocurrencies. So obviously the crypto space moves with a much higher correlation than crypto versus SPY or UUP, which is what we use for the dollar. Bitcoin has been significantly more volatile than markets in the past 5 years, having had daily moves as large as around 45%. So it gives you a little bit of that higher volatility to add to your portfolio. Although Bitcoin is around 8 times more volatile than SPY, adding less than 0.2 of a Bitcoin to every 100 shares of SPY actually does not effectively add to overall portfolio volatility. It tells you that, adding this isn't going to give you massive tail risk to your portfolio as a whole. It's definitely something that, should be looked at as a piece to any sort of trade.
Very good. Nice little job there by the team discussing and understanding how you can use Bitcoin in your portfolio. You did a good job there, son. Even the S&Ps, they're up 76 and change. They really haven't moved here. The thing that has moved a lot is volatility, down $1.20 on volatility, just to give you an idea on what kind of perspective that is. That's a 6% move in volatility, as you just pointed out a moment ago, on a stock that's moved a little bit too far for you. You had a little bit of short delta, you're out basically, nothing on it. The whole thing right now is, what do you do with that position? Do you keep the delta or do you roll up the puts? That is the $64,000 question. And we're going to have more questions after this. We're going to go to Quentin first, I believe, from the Tasty Trade trade desk, and then we'll go to your YouTube chat or phone calls. If you call in, I'll take those too. 855-238-2789 or 855-BE-TASTY. That's the number to call. Give us a buzz. We'll be back in 90 seconds. It's Tasty Live.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at Tasty Trade.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at tastylive.
Let's make this quick. I gotta get going. I make $4.97 every second that I work, and if I don't clear $145,000 by the end of the day, I'm gonna go crazy.
Okay.
It's a cute dress. Where'd you get it?
Oh, thank you. H&M.
$23, 10% off sale.
That's pretty good.
Probably not worth more than $4 now. That's too bad. You gotta be aware of these things. Everything has value.
Well, not everything has value.
Everything has value.
I am pretty sure I can name a couple of things that don't have value.
Go ahead, go for it.
Okay, caution.
5 cents.
Feebleness.
That's a sad one. $1.12.
I have a toughie for you.
All right.
What about us?
Me and you?
Yeah, did we have a price?
Yeah. 2 cents. We should have sold that one a long time ago.
2 cents?
Yeah, we could have made a lot of money on that one. Oops.
2 cents?
Yeah,
I wouldn't even pick that up off the street.
Exactly. I think that's more on you than it is on me. Lord knows I'm trying. Hey, you know what, though? There's money to be made everywhere. Take you, for instance. Look at you. You're a young buck. What are you, like 37? I'm joking. How old are you?
I'm 26.
With your genetic makeup, you know, you're not putting on too much weight. I think you could sell those little lady eggs of yours and make quite a profit online. But I wouldn't wait too long. Next month, those would go down big time, especially if you keep eating the way you're eating. I gotta take off. Time is money.
Are you serious?
Yeah. Hey, look. Can you get the check on this? I left my wallet in the car. I don't like to carry around bulky things. It slows me down.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
We are back, son. You know what that means? Time for a little bit more Tasty Live. Unfortunately, the trading desk is a little bit busy right now with this market up. Even the S&Ps are up 74. NASDAQ is up 470 and change, 476. Russell's up 13 and the Dow's up 111. We've all been up here and around this range with volatility in by almost 130 now, making new lows here at 1845, about 10 cents above that. Bonds are down 3 ticks. Bitcoin back over 105,500 to 105,600, but off its highs of 107. Oil was green, red, now slightly green by around 9. Ethereum is up $66, which is now in line with the same move as Bitcoin, which is up 15 or 1,600 bucks. Gold up $82, been hanging steady right here. Pretty tight range after the opening was up around 100, up to around 80 where it is right now. Silver on a percentage basis doing better, but not as good as it was before. It was over $50 earlier. 855-238-2789 or 855-BE-TASTY. That's the phone number to call. Give us a buzz. We would love to hear from you. Yes. We got a little bit of extra time here. We got about 20 minutes or so we'd love to hear from you. We also will go to the Reddit chat room. Is that correct, son?
We're gonna do the YouTube chat room. Reddit,
that's what I meant.
Message board, but you know it's Boomer Central over here. It's okay. But we are on Reddit as well, and hopefully our Discord will be popping off pretty soon here. But yes, if you are in YouTube, we actually have somebody that is asking about a micron straddle that they have at the 230 mark. So the stock was basically right at the money on Friday. 230 straddle in December, asking kind of like, at what point do you go inverted? Like at a position that you got 39 days to go till expiration, stock's up $18. It's done nothing but just go parabolic to the upside. What do you do in this situation?
Yeah, let's assume that they did this when the stock was 230, expecting them to have inside the expected daily moves. The expected daily moves are closer to $15 over the next 4 days. So take like 80% of that. You're looking at a $10 move daily, and we've got an $18 move today, well outside the expected move, not the thing that you wanted with this strategy. Now you went from 0 delta on this to 42 or 43 deltas. I always talk about 15-ish deltas on 45-day strategies. I'm going to say the same thing here with 39 days in December. You know, it's time to roll up. I believe it's time to roll up those puts 1 or 2 strikes up to 250. Which would bring you from around 42 to about under 30. You'd be reducing it ever so slightly. You could go all the way up to 260 and have a real inverted position. A real inverted position means that you have the call in the money and the put in the money. It now comes down to, what do you want to do? Like, I personally, at this point, if I was looking at doing this, I might look to close this overall position that's using a lot of buying power, completely wrong, and look to sell a call spread. If you're playing reversion to the mean here, you still got good IV rank. I mean, if you wanted to reverse that and sell like the 50-60 or the 50-70 call spread, it looks like that spread's trading around for $8.50 or so. It would be a $20 wide strategy if you're looking to get short Micron, which I only say do that because you'd have 12 short deltas on the call spread as opposed to rolling up the put, getting 20-ish short deltas, almost 30-ish short deltas. If you want to do a wider spread, you could certainly do a wider spread like the 60-80, 60-90, something like that. You'd have the same short delta. You just wouldn't have that risk that you had before. That's the way I would play this. If you have no directional bias, then you probably have to just move up that put and stay like that. What about you, Nick?
Yeah, I'm kind of on the. It's a tough situation. I tend to look at it like if you're sizing position small enough, you can hold a little bit of short delta, and especially into a move like this. I mean, it stinks, but that's kind of how my lean has been. The volatility aspect is certainly something that influences that. I mean, given that volatility is a 57 IV rank, so you have higher volatility, but volatility in the market has come in pretty significantly. It's a tough, like I rolled up puts in Google. I freaking hate it. I hated doing that. And so, you know, for me, sometimes I look at it and say, you know what, especially if you are long delta across the board, having a little bit of short delta in something fits with what I need for my portfolio. So I think that's another angle that you can take here is like, look at the rest of your positions and, you know, maybe you don't want to be short the market. This is a way to be a little bit short the market in something else.
Volatility creeping up here a little bit, down 111, flirting with 1870 after going down to 1845. Even the S&P's up 68.
Another question we got from the YouTube chat, if you're watching the phone, I'm just looking at the chat here. So question on like kind of scalping around these big moves and like, you know, if you have some short delta, like let's say a short call spread or something like that in SPY or SPX into a down move, do you look to, instead of managing that position, just like buying a micro future contract or something like that as a way to sort of flatten your delta, like almost dynamically trade your delta, options being your short delta, and then E-minis or micro E-minis, depending on the size of your position, as kind of your way to buy the dip?
I prefer to go option than option to future, because anytime you make a future hedge, is that what we're looking at here? Is that what we're going to call it, a hedge, right?
Yeah.
A future hedge on this. Now, if you're opening the position, like let's say you want to be short here and you're selling future, selling put, at the same time. I love that play. If you want to get long here, you're buying future, selling call. I love that play. That's good. If you've been doing options all along and you're getting into, let's make it this way, you've been getting short and it's been benefiting you, and now you have this big move up today. Do you buy a future? You're kind of locking in your price right here today. I'd rather see you sell an at the money put. Or something like that to get some long delta if you've been leaning short into this move. Futures are very, very they're static. They're static delta. So you had small delta with your options. Now you got large delta with your options, and now you want to hedge it with a future. It's a tough. If we go in the same direction, you're going to love the hedge, but that's not your assumption. So to me, I would go option.
I agree. I think it's a lot of what ifs.
Yeah.
There's a lot of things that have to play out for you to be in that situation. So I think it's a tough one.
It's a very tough one. It's a very tough one. I don't know if I would. It's not something I like to do. If I'm going to do it on entry, I love it then. I actually think it's the preferred way that I trade futures is, if I'm going to get short, sell futures, sell put, something around a 30 to 50 delta. I like that. It makes the future even smaller than it is. It allows me to leg in. It allows me to take options off and keep just a future on. To me, I think that's the best way to do it.
What do you think about doing something in CoreWeave? Earnings after the close today. Stock's kind of on its butt from where it's been. I mean, it IPO'd at 50. It's at 100, but it got up to 180.
Yeah, it's IB rank of 28 doesn't tell the whole story here. You've got 100% basically, and I'm just rounding here, monthly implied volatility in this. You've got a $15 expected move over the next 4 days, which is really all about earnings tonight after the close. If you go to the weekly options, you look at the money straddle, you're looking at about $15. That's all of it today. Yeah, I think it warrants something. Markets are good, not great, near 10, 15 cents wide. I believe there'd be plenty of open interest. I'll put it up there for you right now. Decent size open interest. I wouldn't say plenty, but decent size open interest. What are you thinking about in CoreWeave?
I was just looking at December and maybe selling like the 80 puts. I mean, it's past a one standard deviation on the downside. I look at it as like if we get down there, it's something that you could roll or wheel into on the downside. I mean, it's had a little bit of a pullback here from 140-ish to 100.
Mm-hmm.
I feel like it's an interesting play. Try and get a buck out of it if you get kind of a non-move or an up move here.
I don't hate the play. Stock up to 70 for the day. It's been as high as 110 and change. It's 106. It's actually near the lows of the day, so your timing is good.
Yeah, I think so. $3.20. I mean, that's.
I was going to say you're going to get filled right away.
Yeah. There we go.
Yeah,
man.
You did 320 on that. Yeah, as the stock's going a little bit lower. And again, you went in at mid price, a little bit above mid price. It was, basically, $3, $3.40. You're right there at mid price.
Do people calling out live cattle? LE, right? Yes, live cattle. I haven't traded this. This has been. Didn't they go limit down in the middle of last week?
It's somebody's trying to hurt you here, son. Whoever that person is in the YouTube chat, they want to see pain here.
They also put oil out there, so we could look at oil. That's a little bit.
Yeah, I would look at oil. I'm a boy from Brooklyn. I'm going to leave the live cattle alone. I like my cattle in the fridge. You know what I mean? So I'm not going to look at live cattle here.
Live cattle is another one that I wait for Westwater to put me on because he's got the know-how there. I just don't.
Like Westwater, he's probably from Nebraska somewhere or something like that.
He's got a farm. I mean,
does he?
lives on a farm. Yeah,
he's got a farmer's name. Like
yeah, Westwater Farms and the Batista Gardens are having
that's right. I remember for your peppers.
much awaited collaboration next summer. It's going to be we're figuring out prices. I say we go farmers market prices, like gouge the hipsters, $20 a jar kind of thing. That's what I'm thinking is what we're doing, like a Chicago farmers market price.
Why not? Why not?
Yes.
All right, what are you going to look at in oil here?
Well, we took off that short put spread. Volatility has come in pretty big.
It has IV rank of 20. I still think it's probably a two-sided play here, selling premium on both sides. Remember, just like the confirm and send questions we got here a moment ago, when volatility expands or contracts, when I had the question was when I have on a vertical spread, it doesn't seem to hurt me as much. And you're right, it doesn't, because you're basically buying volatility and selling volatility at the same time. It becomes a lot more strategy centric, which is if you're doing an iron condor, you want the product to stay inside the expected move, and that's what you'd be looking at here, I think.
Mm-hmm. Yeah,
now,
I would rather wait for like a price extreme, because you've had it kind of pegged around the 60 mark.
Yep.
I think if you get a little bit of a downside move, we'll look to get long. If we get a little bit of an upside move, we can get a little bit short. I don't know.
You can ask Westwater, what does he think about this basically flat futures pricing here? If you look at the front month future right now, 59.66 will expire in 7 days. You look at the back month, 59.50 and change, and as you go even months out, there's really a flat skew in all of the oil products. You can ask him what he thinks about that.
I certainly will. I don't have my Westwater or my Thomas Tuesdays anymore.
Oh,
I'm not on Option Trading Concepts Live. It's unfortunate.
Bring them back, son. Bring them back.
I'm trying.
You got Rigetti too, RGTI. Do you have a position there for earnings?
I was looking at that. I think if I'm going to get into these stocks, I would look at like Rocket Lab or ASTS.
Do they have earnings also?
Yes, they do.
Yeah, you look here at this Rigetti, a lot less. Obviously, they just started with the $1 wide strikes after expiration in November, so that's why there's a lot less here. But you now have dollar wide strikes. Markets are good in here. I mean, for 10-cent wide for, again, something that has 150% monthly implied volatility, basically saying, the stock has 0 in the near future or double in the near future. That's really what it's saying. Going all the way out into 2028, not 2027 or 2026, 2028. So this is going to be a volatile product.
Yeah. I don't think I'm a mess with it. I did have some short delta in INQ into the downside move, but on earnings, it had earnings middle of last week. It basically stayed unchanged. I wonder what it's doing today. Let's see what it's down a couple bucks now today, so taking a little bit of a haircut there.
Even the S&P is up 55 as volatility goes to 1891. It's moved about 40-50 cents off of its lows. Even the S&P crashing, or it was a time to buy the dip. Seems very orderly here. This whole market seems very orderly all night, all day long. Even the S&P is up 54. We might have to look at the overall market here and see.
Do we do something in SPX?
Yeah, I mean, I looked at the expected move this morning on the 0 days. It was $29. It's $25 right now, and we're already at 10 o'clock.
What do you think about the 67.55, 67.45, 68.10, 68.20? It's about a 20 delta on either side. Trades at like 320-ish.
So you're looking, did you say 67, which one?
I'm looking at the 67.55, 67.45, so 10 points wide.
That's around the 10 delta on each side, if you look at the 0 day.
You're in ES.
Oh, you're in SPX.
SPX. So 57.55, 57.45, and then the 68.10, 68.20. You're slightly long skewed.
Yeah, I like it.
I mean, we try and get 60, 70 cents out of this.
Yeah, I think I like it. Yes.
I mean, you kind of play for a 6,800 kind of pin here.
Yep. Yep.
All right, I'm going to try at 315.
And let it sit. With the market moving the way it is, you don't have to be too aggressive on this, I don't think.
Yeah, if volatility upticks a little bit, you might get filled here.
All right, awesome, son. Good job out of you. Let's see if the market can hold up here. We'll take a 90-second break and come back. We got more Tasty Live after this with Liz and Jen. Well, no, Liz and TP. The elusive TP. Next. Peace.
Peace.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade. What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
everybody, and welcome to the TP and J show. TP, thank you for joining me.
Oh, hi, Jen. Good to see you again, even though it's through the cyber connection here.
I know. And I really thought I was going to be able to see you in person in Austin on Friday. What happened to you, TP? Everybody was looking for you. There were mobs of viewers asking for TP.
So the problem is where I live. If I don't get out if I want to go downtown, which is where you guys were at Antone's, if I want to get there for like 8 o'clock or even 9 o'clock, I have to leave at about 7 o'clock in the morning. It takes an hour. What should be half an hour takes an hour because of all the traffic. It's awful. So unfortunately, I woke up too late. I woke up like at 6:45, and of course I have to get ready. I can't just, roll out of bed and go to an event. I have my people who need to fix my hair, do my makeup, get their outfit ready. Jen, you know how it is. So unfortunately, I dropped the ball on that one.
Well, there were plenty of people who lived in the Austin area who really wanted to befriend you, so they could, they were asking about your ranch. They were wondering if you ever do tours. Everybody, all the locals in Austin, all wanted to see you, TP.
Well, before I do any tours, I'm going to have to clean the place up. It's just because right now, so my wife, about a week and a half ago, fostered another dog. So we're back up to 5 dogs. So it's a very nice dog. It's very cute and nice, but it's, it just adds a little bit to the chaos. So that's why when people say, oh my gosh, trading, it must be so chaotic, it must be so stressful. Not really. In the grand scheme of things, I've been doing this for a while. So trading for me is kind of a respite. It's a little bit of a, okay, I can get back to trading, from the chaos of my ranch life. It's funny because you're right. People think it is stressful, but it is almost calming for us. When I left the show was busy. It was crazy. There was mobs of people. It was really a good show and we had a great time. But when I got out of the show and right into my Uber, the first thing I did was open my platform and just say, now now I can just trade because it is kind of peaceful for us. So, and I know I've talked, I talked to you and Liz a few times a week. So I don't remember if I had mentioned this on one of our, the TP and J show or the TP and LD, but it's, with all the political craziness and now with the whole, the FAA, and the delays in the flights, and now they're voting on whether to reopen the government. People get so, and I understand why, but people get wrapped around the axle with that stuff and just get so angry with it. And I understand people suffer because of it. I'm not downplaying that. But when I'm trading and I have a buttload of risk on, I'm worried about what's happening in my positions, not what's happening politically. You know what I mean? And
I'm always worried about my positions more than the news. And does that make us bad people, TP, that we care more about what's going on in the market than in the actual news?
Personally, it might make us bad people, but I think if more Americans traded the Liz and Jenny way, did the trade small trade off and all that jazz, I think we'd be a happier country.
And honestly, it is. It's mechanical, right? It's mechanical, so it's not overwhelming. It's not stressful. It's funny. Someone contacted me over the weekend, and it's someone from the trading industry. I used to trade in a pit with him, and he wrote a book on the wheel. Naked puts. His book is cash secured puts, turn to covered calls. He wrote a whole book on the wheel strategy. And I thought, how easy is this? And how crazy is it that the whole world doesn't know how to do that? Right?
Did he give credit to you and Liz?
He asked me to write a blurb for the back of the book.
Because it's your idea.
I don't. You know what, TP? I don't know, but I'm the more people that, so it'll say on the book, like Jenny from Tasty Live says the wheel strategy is a great idea.
Trade the wheel.
Trade the wheel. But it is pretty easy, and I don't want to say like trading's easy because it's hard to break in as far as the lingo and learning. But I'm teaching the Stack Market Club at my kids' high school. The wheel seems like the first thing to start with.
So yeah, and just to emphasize that point, I'm not saying trading is easy. Trading's hard, right? Making money is hard. Like I'm down a couple of $100 today. I don't like being down money. I have every confidence, though, that either maybe I'll get back into profitability by the end of the day or certainly by the end of the week, right? But it's not easy. But neither is playing golf or fly fishing or skydiving. It's none of those things is easy, but people do them for enjoyment. Right. And the same thing with trading is, yeah, you can be down a little money and that stinks. I get it. But the way we trade, the way that we show you how we do it, and, the whole Liz and Jenny approach is you can manage those down days. And it makes it like, Jenny, you brought up the process before, or, the routine of it all. It becomes a process that you just keep doing every single day, and it takes a lot of the stress out.
Now, if you want to remove stress, and I don't know, this isn't like removing stress entirely, but being on the road, it's always interesting. Being on the road, talking to the viewers, Liz and I have, scrolling positions, and our portfolios are moving with moves in the market. But there are so many people who want to have no overnight stress, just wake up with a clean slate and just trade the 0 DTEs and be done with it. Be done by noon, close it up, and come back the next day. I mean, what do you think of that?
I think that is I think it's a good beginner strategy. And the reason I said, and I don't mean that in a bad way, or I don't mean to be pejorative about that. But I think those 0 DTE strategies are good for brand new traders. Now, yeah, you need to have a kind of a biggish account, right? To trade the SPX iron butterflies, things like that. I get that.
Because of PDT.
Right. Pattern day trading and the margin requirements. I get that part. But I think it's so mechanical, and you have such a high probability of getting a winner in one of your first couple of trades that it reinforces, hey, I can do this, right? Mm-hmm. That I can make some money trading. And the resolution is on the same day. You're not like waiting. Oh, gee, I've got this position on. I had it for 3 months. I don't know what's going to happen to it. So I think it is a defined risk trade. I think as long as you trade the 0 DTE strategies with defined risk strategies, with defined risk with, a high probability positive theta strategy, that yeah, I think it's a great way to get into trading. Now, if you want to evolve and say, hey, I'm just going to do these, I'm just going to trade bigger size. Okay. If you can pay the bills like that, okay. But I think right now, for example, where's the VIX right now?
We can pop in the platform if you want to. We've got, so VIX, I've got the platform pulled up. Here we go. VIX is 1850. So 1850 is that, and last week and before the move down, the VIX was elevated. Was that a little bit of a tell? We saw the VIX elevated. It was trading 1819, and when nothing was going on, was that a tell that the market was going to have a little bit of a shakeup?
So here's the trade that I put on this morning. If you go into SPX.
Okay.
And you go into those 0 DTEs. I did a wide iron condor, 25 points. That's what I've been doing. I sold let me see if I can see this. if my eyes work. I sold the 67.50 puts. I bought the 67.25s. I sold the the 68.35. Jenny, it sucks getting old, okay? The 68.35s, and I bought the 68.60s.
So that call spread was what were we up on the open? That was far. That's far.
Yeah. Yeah, well, we're up about $65 on that. And I only got about $6.50 for that trade. Or it used to be $2.50 for that trade. Jenny, I want to get $4 for a trade like that. The problem with doing this trade every single day, which I do, and I do the butterflies every day, is when volatility is, 18%, you're not getting a lot of credit for these things. You have to pull them in so tight that,
well,
it makes it harder.
We've been having Jacob do studies where we have a lot less risk and we're making them tighter. And I was just texting back and forth with Jacob right before the show, working on what is he going to study this week for us? What's going to backtest this week? And honestly, what I've been doing every day, and on the open, it's a little different. I'll sell the 30 delta put and just do a $10 wide spread. And I'm usually getting, more than $1.80. And I'll put in a GTC for that on its own for about 35%. And at the same time, I'll do a $5 wide call spread for $1 and put a GTC in for that on its own. So I have two trades and two different GTCs for both. So that's what I'm asking Jacob to test this week. If you not putting on as an iron condor and closing as package, putting on a put spread, putting on a call spread, putting two separate GTCs, because the way the market's been moving, it's, they've been getting hit one side or the other. Now, last week we did have, I had one day where I had a full loss on my put spread, but it's only a $10 wide. And between my two credits, I had only $600 in risk. It wasn't bad. $650 in risk wasn't bad.
Right. And I have a little bit more risk in the stuff that I'm doing, but it illustrates the point, Jenny. Right now, it's hard to collect a lot of premium in these SPX options. Yes, you can pull them in tighter. Yes, I get that. I understand that stuff. But it's a little bit harder. So that if this is going to be Jenny, this is exactly like people who buy CDs. They take their cash and they buy CDs. That's awesome. It's wonderful. Good. You're making some interest and all that. But if, and over the past couple of years, the CD rates have gone up. Great. You're making more money. But for a long time, they gave you 1%. Okay. It's the same thing. That's why, yes, I think the zero DTE SPX strategies. Thank you very much. The zero DTE SPX strategies are awesome. I do them every single day, but I also do 15, 20 other things, partly because I'm ADHD or whatever it is. And, but I also see other opportunities, and I need to make more money than what the SPX can give me right now. That's the way I think about it.
Yeah, that makes sense. And before we get off the zero DTE topic, I do want to give a shout out to, we had someone from the CME with us, and he, their futures. So ES, it would be, ES options as far as the CME options go. And there are people, because they trade like all night long. So we had people, and there were people on the road at the road show who said, at night, they'll go in and sell an iron condor at night and then wake up in the morning and close it in the morning.
Yeah. Yeah. I mean, I've done that. I didn't do it last night. I was trading the yen last night. It's wake up. Like I said, I'm old, so I wake up in the middle of the night. And instead of going to the bathroom, I pull out my phone, I open up the platform and trade.
What were you doing in the yen? If you say you're trading the yen, are you trading 6J?
I'm short the yen. I had shorted it and I bought some back. I'm bearish on the yen right now.
Even though it's way down here, even though someone might look and say, whoa.
Only because, Jenny, and this is like last week in a cherry bomb, I sold a call spread in 6J, because I think there's the new, and this is, Jenny, I don't know, but I think that new prime minister really wants to beef up the Japanese economy, and one of the ways to do that is to make your currency cheaper. And so I just think there is like a structural pressure on the yen right now.
So I tried to pull up and I'm going to change this just so we could see like a longer term chart of the yen. So here's a longer term chart going back to, well, here back in 2024, yen was lower. So you think yen's heading lower?
That's all I have on the yen. Okay, I don't have some deep analysis looking at the trade balances and the central banks. I don't care about that stuff. I think, okay, I'll look at the top level headline. That's enough for me. But what I'll do, let's go into the options. Let's go into those 6J options. Or you already have a position on it.
Well, we have a short put spread, but maybe, and I know it's losing, but maybe we should tack on a call spread. I know it's right here, but maybe we should turn this thing into more of an iron condor or an
maybe. I'm not saying that that's necessarily the trade to do, but looking at this trade. So for example, you can get futures approval in a relatively small account. Don't be scared of futures. Okay, if you are a newish trader, if you've never traded futures options before, don't be scared of them. You can do spreads like Jenny has loaded up right here. So if I do this trade, right, I have this, and I'm sorry, Jenny, I'm going blind.
Yeah, I'll read it.
This narrow call spread. You have a max profit of about $225, and the max loss is 400 something. But this is how you do it.
The max loss is taken into account the credit we received on the other one, I'm assuming, right?
I don't think so. No, it doesn't. No, I don't think it knows you have a position on. But the point is, look at this. I make 35 cents a day in theta. I have a 52% probability of profit at expiration. So that's how I look at a trade. Now, I would pull a little bit further out of the money.
Yeah, that's what I want to make sure I'm collecting enough, but I think I need a little help since our put spread has not. We've had that put spread on. I can tell you, we sold that put spread 2 weeks ago, and it's never come off for a win. And that's all the more reason to have a GTC on for this thing.
In case it does uptick and you just take it off.
Yes, and that's possible that might have happened and we didn't have a GTC on. But if I put on the other side, then I wouldn't want a GTC. Then I'd want to just leave both, right? Right.
I mean, it gives you a little bit more room on the downside.
Yeah.
On that put spread. But you can still take it off with a GTC. You can still take the whole thing off. In other words, instead of a GTC on your put spread, you have a GTC on your iron condor.
Maybe I make the calls. Yeah. What do you think? Should I do an equal call spread or make it narrow?
My bias, Jen, is to do equal, but throughout my trading, we can talk about what happened to me in Goldman Sachs. Doing equal hasn't been working for me recently.
But Goldman Sachs is different than the yen.
No, I get it. But it's the whipping around and stuff. Yeah, I mean, I would just sell. I would sell. Just a plain old call spread like that. You make 150 max profit. See what you get.
And I'll sell that, and now we've got theta decay on both sides. My puts are still out of the money. I wouldn't have, if the puts were way in the money, I wouldn't have crossed over and had like a box or an inverted. I wouldn't have done that. But since my puts are still out of the money, adding on that call spread, it's just going to give me a little extra help.
And just to make sure everybody understands, take a fill. And my point is, just because Tom Preston's bearish on the yen doesn't mean anything. You can come up with the exact opposite opinion about the yen and be bullish on it. That's okay. Just use a high probability defined risk strategy to express that.
So, TP, I'm getting messages that we've got questions coming in on Twitter for us.
Yes, ma'am.
So, I'm going to pop into Twitter. Now, first, I had started. Again, we all missed you in Austin. Have you ever been to Terry Black?
Yes, I have. It's delicious. It's delicious.
People, the final events lunch.
I love Terry Black's. My younger daughter and I like to go there because she goes to school in Austin. So sometimes when kids are busy, but sometimes I'll meet her there on a weekend.
Oh,
but it's really busy. But yeah, she and I have fun together.
That's cute.
My older daughter's too busy too.
How's your older daughter doing? Because she started a new job.
Yeah, she's doing really well. She loves it. She is grateful that she has a job. A lot of her peers don't, they're still kind of looking, or they have, and I'm not saying what they're doing aren't real jobs, but they're kind of working in retail or something like that, which is fine, which is okay. But they would like a little bit more of a career building job, and they can't find them. So my daughter, fortunately, has a good job, and good for her. She's a bright future ahead of her. But it's hard. It's hard for these people.
Good for her. I know Logan's graduating in May. He has a lot of friends who are just staying on and going to go on and get their master's or go to law school or do some kind of advanced degree because they were having a hard time finding jobs. And, Lily and I, we were just on a tour at Notre Dame, and we were talking to some of the people in one of the programs she was interested in. And I asked, were all your May graduates, did all your May graduates find jobs? And they said, a couple of years ago, yes. This past May, no.
I mean, yeah, it takes time, and it's hard. It stinks.
I think it's tough. It's tough right now. The job market is tough right now for these.
But as far as going into like master's degrees and things like that, you got to be really careful about doing that also. Make sure that, especially if you're borrowing money, that it's a more of a career degree, that it really will make a difference to you. Hopefully like going to law school, great. But some of the graduate degrees are a little less, I don't know, less interesting.
A lot of the kids who are Logan's friends who have not been able to secure jobs are the computer science majors.
Well, Jen, if I want to, I do a lot of, there are a lot of things I want to calculate. There are a lot of research things that I calculate. And just to let you know, I'm just doing some research into PE ratios. What? Tom Preston looking into PE ratios? Why not? I don't care. I'm just, just out of curiosity. So, I need some help from the research team in doing some things, but a lot of the code, I'll just type it into, Chat GPT or whatever and get a bunch of Python code, and it's free. Or I go into, what's the other one they use? I forget. But I don't necessarily need a computer science person to do what I want to do. And I can do some coding in Python. I'm not great at it, but
you've been coding for decades, TP.
Well, but we didn't have this. We didn't have that coding. I used to code on a piece of paper. Okay, we didn't have computers when I was young. But the point is that it's a lot of computer jobs, I think, can be done by either AI or something like that. It sucks.
Well, anyway, congrats to your daughter on having a job, and I'm glad she's loving it.
Thank you, Jenny. Thank you.
All right, so we're going to go through a few. This was an older one from Ashvin that came. What a day, week, MES, so much fun to trade. Close the winners, roll for. But I think he's the one I think going in and out overnight, Ashvin.
Yeah, if that's what makes trading so fun. Okay.
Look, this is Eric, who is, he is posting all the time. He's doing the zero DTs. He's one of our big zero DTE traders.
Yeah.
Eric, also known as Blue Wackadoo. He was great. He was great to meet in person. So much fun.
That's awesome.
Oh, and there, Liz and I, here we are watching very intently as Tom's building his portfolio.
Can I just say that we're lucky to have you guys, that you're not like in Paris doing like modeling shoots and stuff. Can I just say how fortunate we are to have you still before you get pulled away into the whole cover of Vogue thing?
Oh my gosh, funny. Oh, and I don't know if you know Dude Perfect, but Liz met the Dude Perfect guy while she was one of the Dude Perfect guys while she was out and about in Disney.
That's awesome. That is awesome.
Yeah. All right, so we've got a lot.
Hey, can I just say, Liz, Jenny, can I just say, Jen, that what other traders that are either trading or just kind of or doing shows and stuff actually go out and meet their viewers or customers? How many of them actually do that? None.
By going out and meeting the customer and talking to the customer, that's how we find out what they're interested in, what they're doing, what trades they're, what questions they have. I mean, we didn't even get to them yet, but I have a whole list of questions from the viewers that I met in Austin, and I planned on getting to them. We haven't even started that yet. But look at this guy. This is Uncle B2, who he's a legend himself. Uncle B2, he's been posting for years. He was more of a celebrity out in Austin than we were.
He's big by big.
Yeah. So it was fun meeting everyone. So fun.
That's awesome. Everyone. That is awesome.
And we really missed Bob on Fire, but I don't think he lives near Austin.
He's down in San Antonio, I think.
Okay.
And I would not want to drive up I-35 on a Friday morning.
Yeah.
That's just me.
So today we've got a handful of earnings. CoreWeave, Rocket Lab, Oxy, SE, Rigetti.
Yeah, the ones that I would trade are maybe Rocket Lab. And Tuesday, Oklo I trade. Wednesday, Cisco I trade. Disney I trade. AMAT I trade on Thursday.
So in our audience, we had, and this was pretty cool, there were some newer traders. They were nuclear engineers. So one girl, she was newer to Tasty, just found it months ago, and she's a nuclear engineer. So she was all about Oklo, and she was excited about it. And she said there's someone in their group of nuclear engineers that started trading, and they are getting everyone into it. So it was fun talking to a nuclear engineer about Oklo, since Liz and I do trade it too.
That's very cool.
Yeah. So those earnings are this week. And TP, this guy, Cha-Cha, he flew from Bangkok to come to the show.
That's impressive.
Yeah.
That's impressive.
It was great.
You guys are global. The Liz and Jenny show is global.
TP.
You guys are huge.
But can you believe that he flew from Bangkok?
Yeah, I could to see you guys. Yes, I could understand that. Yes.
I mean, that's crazy.
Because you know what? Yeah. Hey, listen, if I thought that I could make a couple of bucks trading from what I learned from you guys, I would fly from Bangkok. I mean, how much is the trip? A couple of $1,000s? What? I don't know.
I don't know. I was wondering that. How much is the trip from Bangkok?
But, if you have the capital, you can make that in a couple of days trading those 0 DTEs.
Oh my gosh.
Just saying. Saying.
Mikey, Mikey, the Polish warrior. Happy Bears Victory Monday, Jenny and TP. Thanks for teaching me a new technical term, buttload of risk.
Yeah, and Mike, I also like to call it a metric buttload of risk because you can actually quantify it. So it's and it's, hey, by the way, a happy day for the Bears, and also the Patriots are like 8-2. They're top of the American League. That's awesome. Love the Patriots.
So before the season started, I bet on the Detroit Lions and the Bears making it to the Super Bowl. So that I have 2 bets going on in DraftKings. One's from the Detroit Lions not winning the Super Bowl, just making it to the Super Bowl, and one on the Bears making it to the Super Bowl. So I'm hoping one of those comes in.
You need a winner. You gotta pay for a kid going to college, Jed. You need some winners.
Yeah, no kidding. And it's crazy the difference in schools. Like for my daughter, it's going to be free or $500,000. Those are my choices.
Oh, you mean like a state school versus Notre Dame?
Yeah.
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 No, but both my daughters got a lot of scholarships and stuff. So it has been, no, I'm not, this is neither here nor there, but it's been relatively affordable for us. The most expensive thing for my daughter going to UT is the rent, living in Central Austin.
Yeah, I can
That's
believe
more
it.
expensive than the school.
I can believe it. I can believe it. The rent in Austin.
But you know what though? By the way, you asked me about my kids. So my daughter, who's studying in a STEM field, is going to get a minor in statistics because it's only like 3 or 4. I don't know how she describes it, but it's not a big deal to do it.
Sure.
And I thought you will probably use that statistics knowledge more than your actual scientific knowledge that you're getting.
What is her degree?
In like molecular biology, something or other. She does weird stuff. I don't understand, Jenny. I think they make it all up. I think it's all made up. But anyway, she's gonna get a minor, and she said it's not, she can do it. She's works very hard. But I think that's the key is you gotta have a diverse range of skills.
Yeah, right. No, you've done a good job with your kids. I mean, you had the older daughter who wanted to go into theater, but you encouraged her to also get another degree in finance or business. And look, what she's using her business degree.
Yeah, and I'm not saying theater's bad. That's not my point. But just whatever, diversify.
Okay, so this is coming in from. Is it coming? Frank Walsh usually shares from YouTube. This is probably coming from YouTube chat. How about the 243, 245 put credit spread in IWM with 11 days left? Oh, this is what they have. Okay, if it's a $2 wide, I don't really manage those.
So the 43, 45. So they sold the 45. Yeah, but it's in the money now.
Yeah, but you know what? With 11 days left, I'd put my GTC to take 50% and just leave it. I mean, it's a $2 wide. Wide is not like close at 21 days, and to me, I would just leave that.
So here's the thing: credit was $58. Right now, it's trading for $96. So you're down about $40 on that trade. That's why you trade defined risk spreads. Just like Jenny said, I wouldn't necessarily. And let's pull up the platform if we can do that quickly, and we'll see exactly what he's looking at. You go into IWM. The 11 days is the regular November expiration.
Okay, the 245, 243. If you took in 50 cents, if he were to buy it back, it's 90 cents, 96 cents. Yeah, you could take it off and take the loss and start back over and go to here, go out and sell a new put spread for 50 cents. You could.
Yeah, but see, I think you can still bet on a rally back, especially if I would be comfortable leaving this trade on. It has defined risk. If you could take the additional $100 of risk that it has, I would wait. I think we could see I think IWM could rally back in the next week.
So do you have a set spread width? Because our rules are at 21 naked options at 21 days till expiration, move them out in time, roll them out in time. Now, usually if I have $10 wide or larger, I will follow that same 21-day rule, move them out in time. If I have a $2 wide, $3 wide, I don't know if I'm following that rule as much, or do you follow that 21-day rule no matter the width of the spread?
No, I would not be following the 21-day rule with a 2-point put spread. I don't want to see this person lose money. It stinks. I get it. That's not my point. But that you're not really going to collect much for rolling this to a further expiration.
No, you have to look at it as a whole new trade, like close this one, take the loss, and start over with a new trade.
Right.
I wouldn't even put it on as one roll because that's going to be painful to look at.
Right. And I'm just saying that you've got a little bit of positive delta here. If the market continues to rally, if we see some strength going into this week, if they hammer out some sort of deal to reopen the government, IWM could be back above 245.
Yeah.
And I would hold on to this for at least a scratch.
Because if they put on a new one, if I just went to like 30, December monthly, 30 delta, $2 wide, getting 50 cents, that's like your original trade. What are you going to do? Wait weeks to get $25 out of it?
No, Jenny, you're not even going to get $25. If you think of it as a package, and I don't necessarily do this, but people do, and I understand why, that I'm rolling that 43, 45 put spread out to the 32, 34. I'm paying 95 cents for that spread, and I'm only taking in 50. So I'm doing this new spread with 39 days for a 45-cent debit.
So
I don't like that.
This is going to be here's my opinion on this. People trade like this. I don't trade like this. I don't like these trades. If I want 50 cents, I'm going to find 50 cents somewhere else. Like if I want 50 cents, it's not going to be in a $2 wide IWM put spread. It's going to be in like, here's Snap, here's December. If I want 50 cents, maybe sell 2-8 puts or something. Like I would rather get 50 cents a different way.
Right.
To me seems like an easier way.
Look at pull up Tesla. I don't know what's going on with Tesla, but it's up big today. Let's go into 30. You can get 50 cents easily in these options. Just click into a put spread if you think it's going up.
Yeah, so here's $1.04. 50% of that would be 50 cents.
Yeah. I'm just saying. So you gotta use the versatility that options give you. Go to DraftKings.
Look at DraftKings. Here's 59 cents or at that 30. It's weird. Look at the strikes. Goes from 27 to 30.
Yeah, I wish. I know, Jen, you have a lot of pull. If you can get the CBOE to just list dollar wide strikes for everything, I would appreciate it.
I'll talk to them. I'll be there tomorrow. I'll talk to them.
This weird like 2.5?
I know
that doesn't help anybody.
Oh, I'm guessing this person has maybe a smaller account if you're doing $2 wide spreads, which is why, for the smaller accounts, I like to stick to lower price products. Like here, Archer Aviation, $8. Look at this, the 8 put in the 39 day, $65, and that's using only 184. If I have a smaller account, I'm sticking to smaller products, and I'm just slow churn on these, on these out of the money puts.
100%. So one of the things that I also want to investigate that we have not done this before is there's a curve, just like you were saying, Jenny, that in a smaller account, maybe you got $2,000, $5,000, whatever. Okay, and that's awesome. That's great to start off with that. That smaller stocks, naked options on low price stocks are something you can do. But would I necessarily trade? But when I get up to a $450 stock like Tesla, I can't do single options. I have to do spreads. There's a point on that curve between low price stock, naked options, high price stock, verticals that you begin to cross. And I want to start doing a little bit more research into that to help people build portfolios suitable to their account size.
So I think for a small account, let's say there's a kid with $2,000. Let's say a kid has $2,000, and I think with $2,000, can you sell a put in Archer Aviation for 65 cents and use $187? Yes, because if it goes in the money, you can keep rolling it. Can you sell a $5 wide in Tesla for $1? No, because you can't afford to lose $400. It's too big a chunk of that account.
Right. Which is my point. Why can't we have single point strikes in Tesla?
Right.
Whatever.
Yeah.
Okay,
they say what? We don't have the bandwidth?
Well, in all seriousness, that's something that is a part of it, that you would just multiply the strikes by 5. Tesla is a very actively traded product, so you're adding a huge amount of data just for Tesla. So okay, fine, I get it. But in the world of nuclear energy and AI and all that jazz, you'd think we'd be able to have single point strikes for these
Yeah,
things.
right. Exactly. You would think that we could have single point strikes. I'll bring it up.
Thank you. Thank you.
All right, let's see. Let's try to get to some of our tweets. This came in. Oh, this is from Eric. No zero GTs for me today. Still bouncing around Texas after the Tasty event, doing OG Texas things. I did trim a meta short put though. So what is that? Dr. Pepper, Blackberry Shake. What the heck? Where do you get that?
That looks like, well, he has breakfast tacos on the plate. The Blackberry Shake, that's probably that's Whataburger.
Huh.
That's Whataburger. So Whataburger is the Texas. I don't want to talk about Whataburger.
I am going to just take a quick.
There's no upside for me in talking about Whataburger.
I took a screenshot of that and I'm sending it to my sister-in-law. Her favorite drink, which I have to have stocked in my house in case my sister-in-law comes over, is Dr. Pepper.
Is it? I don't quite get the whole Dr. Pepper thing, but whatever. But Eric is doing a couple of substantial looking breakfast tacos. That is an Austin thing. Austin hasn't necessarily invented a whole lot, but Austin invented the breakfast taco. Typically a flour taco, scrambled eggs, and then it's either sausage or bacon or chorizo, maybe a little cheese. It's very simple. Maybe a little avocado slice. But yeah, I make my own at home sometimes, but I eat a lot. So I would eat like 4 of those. I get hungry.
And you have so many eggs from all your chickens.
We don't have any chickens anymore. So I'm in negotiations with my wife right now to get some more chickens.
Did they all get killed?
Well, eventually they die. Yeah. Eventually they go to chicken heaven. I haven't had them in a few years. So I got to get back in the game. I got to get back in the chicken game.
All right. If you were closer, I'd give you some. My sister-in-law's always trying to get rid of some. She has so many.
See?
Okay, we got to keep up with this. This is coming in from David Martinez. ETHA 29.32 put credit spread, credit 91. It's been open for 35 days with 11 left. What should I do to manage? So David's the one who wrote in about the IWM spread as well. 11 days in ETHA 32.29. I mean,
yeah, that's deep in the money. You get caught in the crypto sell-off.
32.29. We've got a spread that's $3 wide. There's only 38 cents left, or what do we have? Yeah, 38 cents left to lose here. So when you've got only 38 cents left to lose, I would leave it and hope for a bounce in ETHA, or to try to make some of these losses back. What I might do is hope for a bounce and maybe put something else on that could make money if we bounce up a little.
Maybe. One of the things that I would not necessarily want to do is sell a call spread in here.
No.
I just think there's too much. You don't want to get whipsawed in Ethereum. That's what this is. ETHA is the Ethereum ETF.
Yeah.
And those things are so volatile right now. I like trading ETHA. I'll trade ETHA, but I try not to get cute with it. Just like Jenny said, you have $38 of risk left in the trade. You don't want to lose $38. I understand. If you want to call it quits and say, I just want to buy it back and move on, I understand that. In other words, take your capital and take it to go play with it somewhere else. The problem, though, with trying to quote unquote do something with this, going back to the IWM question, I'd have to pay so much to buy this put spread back that it would eat up all my credits for selling another put spread, an out of the money put spread, in a further expiration. It's really hard to keep that going. My bet would be to keep it on and see how it goes.
Keep it on. But I'd love, it's so deep in the money. I'd love to, here's my thought. And again, it's like, where do you get to the point of like throwing good money after bad? But that's so deep in the money. I'd love to have something on here where if we get a bounce, he can make money back if it goes up just $1 and doesn't have to go up $4, $5.
Sure. I mean, if you want to double down, maybe going in and selling like the 25 22 put spread or something like that.
But then I think I'm guessing he doesn't have want to take a lot of risk. I think that's my guess because these $2 wide spreads, $3 wide spreads. I'm guessing
then do a 1 point. Then do a 1 point and chip away at it.
Or why not do something like? Why not just why not do something where you have more profit potential?
You can. I mean, you're not going to get a lot of profit without taking some risk.
Like here, if I give up 50 cents on the 26 and then I give up 50 cents on the 27, or
you could do something like that. You could do like a zebra type of trade.
It's like 26, 27 and a half for 70 cents. So I'm throwing 70 cents in. But if we rally this week, I can make 80.
Yeah, I mean, there's no right answer. There are only choices, and you as a trader have to decide what choice you want to make. Would I buy a call spread in here? Not with an 81% IV rank, but that's just me.
Yeah.
That's just me. I am more inclined to sell another put spread.
And maybe just go further out. Leave your 11-day, go to the 39-day.
Go further out.
And you could even keep it close.
I would do like the 23-21 or the 23-22 or something like that. Take in 60 cents for that. Or that's a 3 point if you want to take less risk. But that's how I would approach it. Don't try to make the losses back in one trade. You've got plenty of time.
You're right, TP.
Yep.
But for me, I would try to make my losses back quick, and I would. I would probably do something like I might just buy one long. Let's say I buy this, 20. Liz and I would like to do a zebra. That's what we do. When something goes so low, when something's going so low and we're getting hit on it, we'll just put on a zebra where we sell in a 50 delta, buy 270 deltas.
Yeah.
It's expensive, but if ETH goes up, we're going to make money one for one as it runs up.
Right. That's something you can certainly do. But and each of us has his or her own way of approaching this. But so there's no right answer. Okay, you have choices. You sell a put spread, you buy a call spread, buy a zebra, et cetera, et cetera. But don't think you have to make the money back all at once. Your bank account doesn't care. The money's green, whether it comes from Ethereum or Ether or SPX or Tesla or Goldman Sachs or Oklo or whatever. The money's all the same. So I might take a loss in Ether and make my 60 cents back in Oklo.
That's a good point. You don't have to make it back here. Now, I know that Jade Lizard holds up quite a bit of buying power, but if I put on like a Jade Lizard type trade and then bought something.
Yeah, see, and you get the metric that I like to look at, and I want to see this. I would love to see this added to the platform. The theta of $1.14 divided by your buying power effect is like 0.03%.
Yeah,
that's very high.
So,
in other words, the theta you generate for $1 worth of capital is very high.
I think I'm going to send this Jade Lizard the 30-31 call spread, the 23-19 put spread. We're using $300 to make 92.
And you have a 73% probability of making half the max profit.
I'm going to send that. And honestly, after looking at Ethereum's at 3,500. So I don't know that I would just get long. I don't know that I would just do a zebra or just get long because I don't think 3,500 is an extreme. We've seen ETH at 2,000 this year. So
yeah, I mean the crypto products have been going crazy over the past couple of weeks. That's the way it is.
Here's another one. What is the time scale for the PDT rule changes?
So what that question is the Trump administration. So back in, what was it, 2001 or something like that, they came out with the pattern day trading rules where you can't do more than 3-day trades in 5 days unless your account is over $25,000. A couple of months ago, the Trump administration came out with a potential change to that rule to say that if you had $2,000, over $2,000, you could avoid those pattern day trading rules. I don't know what the status is. My guess is that with the government shutdown and a lot of stuff going on around the world, I'm not sure if they're thinking a whole lot about that right now, but I would hope it happens soon. I hate the pattern day trading rules.
And again, until then, the futures options don't apply. So like the ES options don't apply.
That's right.
But they're not settled. They expire to a future. You have to make sure you're closing them. Yeah, but also you can call your brokerage firm for more details. But we don't know yet when that's happening. I thought it was going to pass early 2026, but like TP said, with the shutdown, who knows? Okay, we have a lot of tweets. We have 4 minutes. TP, this is going to be rapid fire.
Okay, make it that lightning round.
Okay, Jeet sends a coin strangle, and it's super wide, 275, 360. So you're looking at a super wide strangle. He's collecting 545. Looks like a good credit. Naked options in coin actually scare me, truthfully, but I don't know.
So, and that's in the regular November.
Yeah.
And he's doing the 75.
This is TP. This is rapid fire. We don't even need to look at it. We got so many tweets to get to.
No, I like that trade. No, because I'm firing it up. I like that trade.
Okay. All right. Then this comes in from the YouTube chat. Bought a Palantir calendar 200, Nov 21 short call, D's 19 long call for 370 last week. Is it worth holding or better to cash out? 200 Palantir call calendar. All I need to see is like, where's Palantir trading?
It's trading 188.71 right now. So he's about 12 points off of that calendar. I would hang on to it. If you think Palantir is going to continue to rally, I would hang on to that trade.
Yeah, I mean, with a calendar, 10 to 20% profit target is what I put in for it. Your risk on a calendar is what you pay for it. Your risk is managed at order entry. So if you put on a trade and said, I'm willing to spend 370 on a calendar, your risk is managed at order entry. You put in GTC for 10 to 20%.
And then what I would look to do is roll that short November 200 call out to, let's say, a 202 call in December, create a long call vertical.
Yeah. Okay, now we've got Ash Finn, couple winners on the way back down. Nice.
Yay.
Nice work. And Florida 7, more kids today need to go to trade school versus college. After 2 years of school, they can easily get a 6-figure job, and their peers that went to college have a certificate on the wall. They're living in their mom's basement and working as a waiter. Florida 7.
Yeah, I agree. That's why, by the way, I'm teaching myself how to weld in case this whole trading thing doesn't work out.
Oh my gosh, my son, he's been working in radio frequency, and he's been working with antenna and anyway, he loves the welders. Like, he sees the welders welding the antennas, building.
He's got to learn how to weld aluminum. That's a different thing. But I think they make a lot of those antennas out of aluminum.
Well, as he watches the welders at the antenna factory welding the antenna, I think he gets jealous of, like, maybe I should have been a welder.
Rightfully so. Welding is very cool.
All right. I think, let me make sure we got to everyone on Twitter. Yes, we did. So good job, TP. I did not think we'd get through it. We never got to one of my questions from the roadshow, but I'll save those for tomorrow.
Next time.
Goodness. But at least we got everything done. As far as our viewers who might be following along some of our trades, today, our Intel Jade Lizard, we have GTCs in for most of our trades, and that's a good thing. Our Intel Jade Lizard GTC hit. Our Netflix put spread GTC hit. Our DraftKings short puts came off. And then today with TP, I added that call spread in 6J, and I added that Jade Lizard in Ethereum, in ETHA.
Cool.
TP.
Jenny, you are a machine.
Thank you for coming on today, TP. Hopefully we fix it, because the last message I've gotten from her is that she is still delayed in Florida at an airport. Delayed.
That's scary.
But we have a lot of snow here.
Yeah. Oh, do you? Up in Chicago? I didn't know that.
Yeah, we have a lot of snow. I think I got about 2 inches. I think some areas may have gotten 5 or 6.
Yikes.
Mm-hmm.
That's a lot of snow for November.
I know. It's crazy. I went from like flowers in my flower pots to this morning I threw them all away because they're covered in snow. All right, TP, thank you so much. Everyone have a wonderful day. I will see you all tomorrow. Liz will be back, I hope. Everyone remember to trade small, trade often, laugh with us, learn with us, and watch the TP and J show. See you tomorrow.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
What's up, everyone? Welcome back to the show. This is Options Trading Concepts Live. My name is Mike. I'm here with Jamal, and it is a rip-roaring Monday.
Yes, it is.
Yeah.
Yes, it is. That's right.
You bought the dip.
Thank you.
You are clapping, like you just heard.
Yeah.
Yes.
Yeah.
You closed like 7
Cha-ching.
positions today.
Did you?
All bullish positions. A lot of them were placed from Fast Market on Friday. Fast Market's always a good source of trade ideas from the people. But yeah, I mean, we were down 90, and then we were green on the day into the close on Friday. Continuation on Sunday with the futures open. No surprise to see us up 50 in the E-minis.
Yeah, it seemed to start gathering some steam, like midday, late midday, I would say. And yeah, I mean, kind of surprising, honestly, after the week we had. It was just struggling all week where they couldn't get them together, and then for whatever reason, yeah, strong bounce. I mean, we eventually went positive after the close. It was pretty remarkable.
Yeah, we were keeping an eye on, we were like, what could be driving this rally? And then we looked at the prediction markets for government shutdown ending. And right around 12 o'clock, you had the November 16th plus, so past this week into next, that probability dropped like a rock. And the probability of the government shutdown ending over the weekend or into this week skyrocketed. So we're like, okay, this must be what the market is seeing. And the market is seeing a positive bullish movement from a resolution and government reopening. And we're kind of seeing that continue today.
And that's just it. I mean, we've talked about and we showed charts and all these different things about how the government shutdown doesn't affect the market. And for the most part, it did not. Until last week, right? Like last week, all of a sudden, it was like the levee starting to break a little bit, airline stuff. I mean, all of this negative news surrounding companies, specifically companies. And that was the difference, I think. Before, it was just like a lot of legislative, Democrats, Republican stuff. All of a sudden, it became like company or industry-specific stuff that was affecting certain companies. And that eventually started to leak into the stock market. And that was why we were leaking lower for most of last week. But now we're reversing it.
Yeah. Still something that's surprising to me, looking at the FedWatch tool, we have a 60-40 split between getting a 25 basis point cut, that's 60%, or staying where we're at 37540, 40% chance that we stay. And that has increased. 1 month ago, it was only an 8% chance that we would stay at the current rate. Now we have a 40% chance that we stay at the current rate. So still some decisions to be made there. This will become more clear as time goes on, of course, but it's still interesting to see. I would have expected to see this more solidified into this rally with the government reopening.
Well, I think if the government reopens, we start getting data again. And that could change some things up. I mean, right?
Do you think they're like, maybe we should just keep this thing shut down?
Dude, I 100% started realizing that last week. I'm like, I think they're keeping this shut because we're not getting data. And like, that's the thing. And the Fed's flying blind. The Fed can't be like, well, we can't not cut. I mean, it seems like a good thing to do. There's no data that suggests otherwise. And I think that was something that started to change too.
Yeah, for sure.
Can I say one thing, though? I was looking at, I really hadn't looked at prediction markets before. I was looking at them during the Indiana and Penn State game, which I don't know if you saw some of. It was actually a really close game there at the end. Dude, that was actually really fun. I posted something on Twitter about it, too. To watch the money changing hands, they actually show you, I don't know if, I've never noticed that part, but you see money changing hands, all the bids and offers going through. It's kind of like watching our what's the futures thing that we have? It's kind of like watching the automated futures trading that's going through. It was kind of interesting. I'm seeing why a lot of exchanges and other brokerages are really interested in the market, those markets now, for sure.
Yeah, definitely. And if you've ever watched any Bears game this season, it's the same thing. It's 99% chance, 1% chance, 99% chance.
Yeah.
Same thing this Sunday.
Yeah.
But yeah, I like to just look at it to answer the questions that I have, because really it's like you can turn on any news source you want, you're going to get some biased result or some biased news, but you could go to the prediction markets and just look at the probability shifting to get the actual data that is a result of the betting markets. And it goes, of course, beyond sports, and it goes into politics and government shutdown stuff. So it was like we just were looking for any kind of shift, and we saw the shift. So I think it's definitely interesting to look at, especially for just like probabilistic outcomes if you're trying to trade certain things, just to get a gauge on what the sentiment is in those markets. But yeah, craziness. And this week, just looking at the economic calendar, speaking of data, on Wednesday, we have some Fed chairs speaking. And then on Thursday and Friday, we get CPI and PPI. Allegedly, yes. We'll see if they actually announce them, but if they do, that would be quite interesting.
Well, they're saying this potentially, I think they're calling them back to Washington for a potential vote on Wednesday, right? I think that's what I just saw a little while ago. I wonder if that goes down. I wonder if like we get a deluge of data. You know what I mean?
Yeah.
We'll see. I don't know.
Or they just push it to
next
the
week.
Next one, yeah. But yeah, real quick market update for you. Looking at the futures markets, let's talk about things to the upside. Of course, E-minis up 65, catching a bid here. NASDAQ up almost 400. The Dow and the Russell following suit as well. But the NASDAQ is the leader of those four, up 1.5%. Bitcoin up 1,500. It was up a little bit higher this morning, but still a healthy 1.5% move to the upside. Silver up almost 5%, 4% right now. Lean hogs and live cattle, third and fourth place in terms of the percentage change to the upside. 3% in lean hogs, 2.5% in live cattle. Gold up 2.5%. Ethereum up 2%. So you've got a number of futures products up over 1%. And micro XRP futures, XRP, up 7% today. Wow. Big move. To the downside, in the futures market, there is not much that's down more than 1%. Actually, there is nothing on this list down more than 1% outside of volatility. Down 6% in the VIX futures, which, of course, should not surprise anyone into this market rally we're seeing today.
We continue to see this correlation between ES, whatever you want to call it, but you could say all four, maybe for the sake of argument, just S&P 500, gold, and Bitcoin. They continue to move in the same direction, just about every day, whether it's up or down.
It's crazy. We do have NVIDIA earnings next week, so that'll be interesting. NVIDIA's up 7 points today. You got a 15-point implied move in the 11-day cycle on a $200 product, almost $200. So pretty sizable earnings report there, and we will see what they have to say next week. That should be, Wednesday after the close?
Mm-hmm.
Yeah. So we'll be tuning in for that. We'll be trading that. But I closed a ton of positions this morning. Again, just from buying the dip on Friday, getting the continuation today. And one thing I've learned over the years is when you get a 200-point reversal in the S&Ps, I completely discount the probability or the percentage that I'm getting, and I just close the trades. Like if they're bullish trades and I'm seeing 20%, 30%, I think it's a great risk-off environment when you have these outside moves to the upside, because you can see them reverse, you can see them pull back. If they continue, you're not going to be kicking yourself for taking off risk. You still hold the positions that are not yet at 20 to 50% profit, but that's one thing I've learned over the years. I mean, you see these moves, and then tomorrow, if you get a 50-point sell-off, you'll be kicking yourself if you didn't close those positions. So a lot of bullish positions I closed. Palantir, that was a 200-strike calendar spread. That was a $215 winner. The SPX short put to finance a call spread that we placed on the CBOE floor last Thursday.
Yep.
That was a $100 winner. NVIDIA, $105 winner. That was the 195 calendar spread. LE closed an 80-cent winner there. That was the short put spread, 213, 215. The Oracle the Oracle short put spread, 220, 230. Bought that back for 83 cents net profit. And then the Quad U stupid, the short put to finance the call spread, that was an 80-cent winner. So just taking off risk, removing a bunch of positions, putting a lot more capital on the sidelines in case we get a sell-off here in the market, or just more opportunities for other things.
Oh, it totally makes sense. There are some big moves happening today that are kind of almost seem under the radar, like AMD, once again, big move. Micron, some of the chips, huge moves out of some of those names.
Wow.
Yeah, the only thing I closed was just the GDXJ put that I had on for a while with this big move in gold.
Mm-hmm.
This is the biggest move we've seen in gold for a while. And this is kind of one of the things I've been wondering and waiting on, which was going to be the next big move out of gold. We saw it consolidating, and I think it's just giving us an idea where it wants to go today.
Yeah, for sure.
Oh, the other thing I'm trying to do is, I can't remember if I mentioned this, but I put on the open heart butterfly to the downside, actually, on Friday, which was pretty awesome to watch market move. And so I'm actually trying to roll that leg now. It's a 20. I'm short the 64.70, 64.50 put spread as a part of that fly. The whole package is 6,500. I'm long that. Short the 64.90 put. Short the 64.70 put, and then long that 6450 put. So I'm trying to roll the 6450 put to the 6460, and that will close off risk.
Yeah.
And then I'll be riskless.
Didn't you do this to the upside too?
I did it to the upside, yeah. So I still have that on.
Nice.
Yeah. The long strike begins at the 6950 call.
Love it.
Yep.
Yeah, that's the nice thing about these strategies. You can, with broken wing butterflies, broken heart butterflies, you can buy in the risk. So you have a 20-point wide put spread to finance the 10-point wide debit spread you bought, but you collected $1.70 for this. So yeah, if you move that 64.40, you sell out of that and you buy the 64.50 for less than $1.70, which you can certainly do here. You'll create 10-point wide spreads, which offset each other.
Yep.
So, and free up the buying power, most importantly.
Yep.
So yeah,
just did it too.
Love that. And yeah, everything else in this here portfolio, kind of just churning along. Again, I've closed a bunch of positions. I closed like 6 positions today. So it's
you've had a full day already.
Yeah. Yeah, IBIT seeing a nice little rally here, up 90 cents, up to 60-ish. But I think this might be the end of the road for this position for the year-end trade. I'm going to keep this on going into next year. This has been an amazing trading vehicle. Plenty of liquidity. It's a $60 product, high implied volatility. Started with $500, rolled up to a $3,000 net credit with a 65 straddle. So I'll be doing this into next year. And I think for next year's year-long trade, might do something in XSP and just replicate the same strategy. Just have a strangle on, never have upside risk. If we get tested on the upside, I'll just shift the whole thing up so that I turn my short call risk into short put risk and just go on from there. I think if you size it correctly, it can be a really nice trade, especially if the market's chopped sideways for a little bit.
That's pretty awesome, man, having a year-long trade. That's pretty fun.
Yeah. It creates an amazing anatomy of a trade at the end. Like, this is going to be an incredible anatomy of a trade because it's going to have my break evens just go crazy to the upside and downside. Like my break evens are literally at 35 and 95 in IBIT with the premium I've collected so far, which is insane.
Insanity,
as
the kids say.
But yeah, if you want to join us on the YouTube channel, we're streaming live there. Just pop over to tastylive. Throw in your trade ideas, questions along the right-hand side chat. If you have some friends that have yet to open tastytrade accounts, we just revamped our referral program. So now if you share your referral link, which you can find on the mobile app as well as the web-based platform, you send that to them. If they open an account with an initial deposit of $2,000, you both get $100. So it's a nice little bonus. 'Tis the season of giving. But yeah, incentivizing the person coming in, join the crew, and grow your trading community. But yeah, you can scan the QR code, or you can just click the link at the top of the YouTube chat, tastytrade.com/referral. You'll see all the information there.
Tell your friends.
Okay, so Ryan is unfortunately out today, but we can do a quick rundown of crypto. Bitcoin kind of bottomed out at that 100 level. I mean, this is a beautiful thing to see if you were trying to buy at 100K. I mean, all of these bars just got gobbled up pretty immediately anytime it dropped below 100K. Now we're sitting at 105, and it's nice to see 2 days in a row of green. But Ethereum, similar chart, like 3,200 is that base point that we saw. Anytime it dropped below there, we saw the bids come in. But XRP, quite interesting to see. Pretty big move here to the upside, 4%. And this is bounced off of that 2.2 level up to 2.5.5. So a lot of movement there. And you know, anywhere you look, you're going to see some pretty big movements to the upside in a lot of these tech and crypto products.
Yeah, that's what I've noticed today. It's and again, we've talked about that correlation between markets and crypto more recently, and of course, if Bitcoin moves, the rest are going to move just a little bit more. So, yeah, it's something I've been keeping an eye on. And again, we saw it. It was bottoming at that 100K level. You saw it really trying to work that out. I think we're out of the woods, but I don't know. We'll see. I think if we get through 110 meaningfully, I think then we got something.
Yeah. But yeah, looking at the NASDAQ 100 watch list here, like Jamal pointed out earlier, big moves to the upside in Micron, Palantir, AppLovin, AMD, Datadog, NVIDIA, Google. You can see a trend here. Tesla is the one outside of that group that's seeing a nice bid to the upside, but a lot of chip names ripping higher to a strong degree. Like these are all 5% moves to the upside.
How dare you guys say AI is a bubble? How dare you?
Yeah.
How dare you?
Market is making you pay for that if you shorted that. But you had your day on Friday. But that's how it is. You got one day. If you're a bear, you got one day to figure it out.
Yeah.
It's been insane. It's been surprising to see the rally to the upside, but at the same time, it's not surprising given volatility being so low. We're in contango, volatility's in the teens. Like this is the market I expect to see when we're in that kind of implied volatility environment.
Yeah, the moniker of the greatest market in the world was in jeopardy last week for sure, but late turnaround Friday, and now everything's up again. It is a trip. I mean, again, with this whole government shutdown thing, the market didn't care until all of a sudden it did, and I guess that's the new wall of worry. So if it's not over, they don't come to a vote. But like Mikey said, I mean, it's a good idea to take some positions off today while things are looking good because you just don't know yet. You really don't.
Yeah, could be a mirage. Could get some tweets. Could get some decisions that the market doesn't like. But all that said, I mean, volatility is getting crushed today in the X contract, but these further cycles are still sitting at 20. So I think you are seeing, of course, near-term implied volatility getting hit the hardest, but that was also the contract that was rallying the most into the sell-off on Friday. Still some heightened implied volatility over the next couple months sitting at 20. So got to stay small still. But this has been a two-sided action kind of market for the last couple of weeks. So you love to see it.
Yeah. I definitely got some things I can take off at some point. I'm just waiting a little bit, but I'm going to start getting a little more aggressive with some of these positions because, again, we might have this ability to get back into them. I mean, just might.
Yeah. Yeah. But, yeah, again, I mean, anytime you see a big move to the upside, if you bought the dip, I'm kind of waving that 50% profit target and just removing risk, getting a lot of capital back. And it's been a good move today. That's for sure. All right, I'm going to pop over to the YouTube chat here, see what the people are looking at. Yes, rocket ship emojis. Yep.
To the moon.
Do you follow any of the progress happening in Dallas with the new exchange in January, along with big financial houses moving down there?
New exchange in January?
Not personally.
What exchange?
Yeah. Give us more info.
Yeah, more color. We need more color, as they say on that.
100% doing a spread on NVIDIA. Not sure which way, though. How about an Iron Condor? Neutralize it. Yeah, I mean, if you're looking at credit spreads, I think the December cycle is where I would go, personally. The 11-day you can do, but it's just you don't have any defense. If you get blown out to the upside or downside, the trade's done. In the money credit spreads, you can't roll out in time for credit. So if you're taking a directional shot, I like going to December and just selling the spread there. That way, if you are wrong, you still have 30 days left to expiration for a potential reversal. And especially to the downside, I think if you get a wipeout in NVIDIA, let's say it goes from 200 to 180 or something like that, I think there will probably be buyers there over the course of a couple of weeks where you might get that reversal back to the upside. Short delta, I'm not sure though. If you see NVIDIA go from 200 to 220, I don't see. I think it's less probable that you get a reversal to the downside unless you have a macro event that happens. But if you're trying to neutralize delta, you can cover a pretty wide range here. Just throwing up an example: 175, 170 put spread, 220, 225 call spread for $2. Something like this is interesting. Leaning a little bit long. You got 20 points to the downside and about 25 points to the upside. Picking up $200, risking $3. These are the kind of strategies I like to do if we're just selling a spread for earnings. If you want to be directional, same story. You can move the put spread up or the call spread down if you're looking to get a little bit more directional. But yeah, picking up $1.50 to $2 is probably where I'm going if I'm doing a 5-point wide spread. And diagonals, calendars, they're also on the board. They're looking pretty good, especially like December, long December, short the November weekly, or long January, short the November weekly. If we look at the upside, let's just look at like a 215. That's where the expected move is going to be, or around there in the 11-day. Yeah, so paying $5.40 for December, selling that 11-day for $2 and change. Similar story if you went with the 210, but that's a really cheap way to expose yourself to earnings, get that volatility crushed in the weekly cycle for next week, and inventory some delta in that long option in December. Diagonal spread too. I think if I did a diagonal spread, I might go to January.
I know.
But you can do pretty much anything in here. It's not too expensive. Like even with implied volatility at 50%. In the monthly cycles in December and January, they're still pretty cheap relative to other products.
Yeah, I was just looking at the Jan D's 200, 215 diagonal. You could do that one for $8.55, which is less a little bit over half the value. It's not that bad.
Yeah, and I think selling D's you get a lot more premium, but like you said, paying $8.50 for a 15-point wide spread. Doesn't even matter if you don't get the vol crush because you have plenty of upside intrinsic value potential if you do get that rip. But yeah, we'll come back to that next week. I think for me, I'd rather just wait until November 19th to throw something on, unless you're looking for like a pre-earnings sell-off or a pre-earnings rally. That's totally fine too. Let's see. Holding a 10 lot of November Netflix Iron Condors. Okay. Short the 1100 and 1160 strikes with 20-point wide wings. How would you look to manage or hold through the Friday split? Ugh.
Wait, what is it? 10 lot?
10 lot November. 1100, 1160. If you're profitable on this, I might just close it. Just to avoid the craziness with the split, because the split is going to create some weird strikes for you. But yeah, I think for me, if it's profitable or scratch, I might just close it, wait for the split to happen, and then redeploy. The split will bring it down to a reasonable level too. You might be able to go with a strangle instead of an iron condor.
Yeah, actually, the date of the record date is today at the close. So if you still have that position on today at the close, you are going to have you're going to be subject to the split. So in this case, you'll have 100. You have 10 right now, so you have 100.
Yeah.
Of those.
Yeah, I might just get rid of it, close it. It's just going to be an ugly position with some weird looking strikes. Let's see.
I, on the other hand, have the 1200 calendar call. It's the 1200 strike calendar call, Jan Deese. I am looking forward to that split. I want to see what happens here.
Yeah, it's a nice round number. So it won't be ugly at all, actually. It'll just be 120. But yeah, I think if you are comfortable dealing with it, I mean, Iron Condor, you got 4 legs too. The more legs you have, the weirder it's going to be. So I might just close the Condor. Let's see. Bulls here are going to jinx the rally the way they talk and probably get a retest. Yeah, it's possible. Added puts on a couple of names: AMD, Palantir, NVIDIA, MU, WDC. Yeah, if you're playing for reversal, I mean, you just listed all of the products that are up the most today, or most of them. So, yeah, if you think we're going to see more volatility, you're getting higher prices to the upside to short at. So,
I mean, I don't hate that idea, honestly. One lot of puts on any one of these positions. Because, yeah, I mean, just as fast as we reversed on Friday, we could easily do that today. I mean, if some news comes out later in the day, they're not actually progressing all of a sudden, we will drop.
I think you still have some uncertainty on the table, which I think is being priced into the vol futures a little bit. But right now the market is reacting pretty positively. But I think the increased probability of uncertainty around the rate cut is interesting to me. I think you could see some market movement as that gets more clear.
I'm doing that. I'm about to play for a reversal. I think I'm going to play an SPX.
Damn. Damn.
Yeah, I'm going to do
What are
it.
you thinking here?
I mean, I'm actually
filled on your downside. You got filled on that.
Yeah, I got filled on that. Yep.
So you got that for free.
Yeah, I got both free. It's pretty awesome. I don't really feel like risking that much capital into it. I was really looking at the 67, 70. I'm looking at it from the standpoint of like if we literally reverse most of this. So I'm looking at the 67, 75, 67, 50 put spread. Still out of the money. Lower pop, I know. But, you know.
December or?
I'm looking at SP, like front month SPX today. Looking at today. Some bad news for the end of the day. You already saw, we dipped like 20 handles earlier, right? Who's to say?
Who's to say?
Who's to say?
Can't do it again.
Yeah.
Yeah, we had in SPX, we had a high of 68.12. We're sitting at 67.93. So yeah, about 20 points. Who's to say? Keep it small, take a shot.
Yeah, you know.
Why not?
For 250, let's do it. We're in.
Where are we at? I just lost my place here. Oh, here we go. PSKY calls into earnings today.
Pisky?
Paramount Skydance. Paramount Plus, baby. $15 stock. Earnings, $1 implied move, which is pretty decent considering it's a $15 product, but there's not much to do when you have these lower priced products. If you're buying calls, I think that's really totally fine. Especially with these smaller priced products, you can go a lot further out in time and it's not going to cost you really much at all. Just looking at, for example, like a February, these markets are not great.
No.
Let's go to Jan. Yeah, okay, so Jan, this thing's sitting at 15. A Jan 15 strike call, 67 days out, is at $100. If you look at the 11-day or the weekly for this week, the 15 strike call is trading for 70 cents. So like in my mind, there's no reason to not just go to January, 67 days out, pay for a lower implied volatility expiration, get a lot more time to be right. So yeah, if you're looking to buy calls, I would get out here into Jan, Feb, March, but these markets are not that great. So January is probably going to be your most liquid option, expiration. But yeah.
I don't know how much earnings matters in here anymore as much as, takeover talk. It really matters in here, I think.
Yeah. Yeah. I'm interested to see the UFC joining Paramount next year.
Right, yeah.
It's going to be nice.
Yeah.
No more pay-per-view. They're getting rid of that.
How about that?
Which is great.
That's amazing.
But yeah, we'll see. Maybe it'll just be ads on ads on ads, but I would rather watch an ad or two to not pay $80 for a pay-per-view ad.
You know, I like the way some places are doing ads now, particularly with sports, where you just do a small little, right, in the corner, and then you do the ad. Yeah, playing, I mean, that's fine with me, actually. I can live with that.
Yeah. But yeah, that's going to be, that will probably be a talking point, considering all the moves there. Maybe they'll talk some smack about ESPN and Disney and YouTube TV. Ridiculous.
What is this, the third week they're going into that right now? I've almost gotten used to watching like lesser games. You know what I mean? Like,
well, I'm checkmated because I got NFL Ticket through YouTube TV. Because otherwise I would have just gotten rid of it and got Fubo and called it a day.
Yeah.
But now I'm trying to finagle my way into free trials at Fubo, pausing my thing at YouTube TV, still watching the NFL Ticket. It's just.
Oh, jeez.
It's crazy.
It is. Well,
And I just realized I got to re-up Fubo now because ESPN is tonight's game.
Yeah. Yeah, I know, right? I mean, they're drawing this out. They really are. I mean, usually these things get solved like before anything even happens. This one's being drawn out for sure.
I mean, it's just insane to me. It's like, it reminds me of Kapalua, the golf course in Hawaii.
Mm-hmm.
Beautiful golf course. There was a water dispute, and now the course is dead. It's like
really
dead.
Really?
If you look up a picture of Kapalua right now, it's frightening.
What do you mean water dispute?
Like they had a water like the contract to get water to the course. There was a dispute in the contract, and they were drawing it out, and now the entire course is dead.
Wow.
Yeah. Sad.
Very.
Can you explain your IBIT strangle management? It can never lose? ? No, it can still. How is it different from the rolling the untested side? Want to do something like it on SPY M? Okay. State Street Spider Portfolio S&P 500. So this is a smaller product. So ultimately, if you look at, you can see this on the follow page too. If you just click on my name and then go to IBIT, you can see all the rolls that I've done through the years here, or this year. So I started here on December 23rd of last year, sold a strangle of 50.65. And I now am at a 65 straddle. So all these rolls and adjustments have just been credits piled onto this position. The one thing that I've said is I do not want to have upside risk in IBIT. So the difference between rolling the untested side up is that if I have a strangle, so like let's say with the market rallying here, ripping higher in SPY, let's say I had the 680, 660 strangle in December. If I'm rolling the untested side up, you can see my short delta is negative 18 here. If I roll my short put up and I keep my short call where it is, I am under hedging in terms of a roll. So I would pick up 10 deltas here. If I rolled my 660 put to the 670, I would still be leaning short though. So for this position, and really for like an S&P position, if you don't want to have upside risk, instead of rolling your short put up and leaning short into a move like this, if you just want to make sure that you always have positive delta in a product like SPY, what you can do is you can just buy back this whole thing. So visually, you can see that I have this tested short call. If I buy this back, in the same expiration cycle, what I can do is just look where I can sell a new strangle where my put is tested and collect a credit of $20. So here, let's just say I move this 660, 680 strangle into a 675, 685 strangle, and do that for $1.30. So I could pick up $1.30 credit, move my short delta into long delta here, as you can see. And that's totally fine. I would be picking up $1.30, whatever credit I had received previously, I'm just adding to that credit, and I'm shifting my risk from upside risk to downside risk. For me, I think if you do this and you size this appropriately, there's a couple of things to be said. In SPY, the Qs, S&P 500, it has historically always recovered from market sell-offs. These market sell-offs in SPY and the Qs, you know, they're like worst case scenario, you're getting 20, 30%, 40% in a really bad market for that year. You see that all the time in equities. Like every day you see a 30, 40, or 50% move. So here it's more predictable. I want to be leaning long anyways. I feel like in low vol environments like we're seeing, there is a bias to the upside. There's still risk to the downside, but if I don't want to have upside risk, you can do something like this. You could give up some of your credit, move your strike out to the upside further, but that's what I did in IBIT. So you're literally just shifting where your risk is in this type of position. And as long as you're collecting a small credit, you're not hurting your position, you're shifting your short delta to bullish delta. I did that in IBIT, and it's been good. Basically, anytime my short call was tested, I just shifted the whole thing up. And the nice thing about IBIT is you have pretty significant call skew here. So when I was shifting up, rolling my put up to where my short call was, and then rolling my short call out, I was able to keep that short call pretty far out of the money. And just looking at this order chains here, if we look at some of these adjustments, where was the last one I did it? Yeah, so I had the 60-70 call. I rolled it up to a 65-75 strangle. So I just moved it up 5 points and out to September, picked up 240. Same thing here. I bought back July, the 60-67, rolled out to August, 60-70. So just making sure I'm relieving my upside pressure here. Yeah, here we go. I had a 55-60 strangle in June, rolled it up to a 60-65. So I was tested on the upside at 60. I just shifted my 5-point wide strangle up 5 points, and I did it for a 60-cent credit. So there's nothing to say that you can't do that. And if you want to have bullish delta in a position like that, you're piling up credits, and as long as the market rallies by the end of the year, you're going to be in a better spot than if you're short delta.
And so you've constantly adjusted that thing, basically. Yeah. I mean, at different times. Yeah.
Yep. Yeah. So I've had this on for the whole year, and I've done 13 rolls. So once a month, I'm making an adjustment, and yeah, it's been a great trade. I have $3,000 in credit. It's currently trading at $850. Similar story could be done with the E-minis now. But the second question is, how large are you making that trade? And that's the key. You have to be able to withstand this kind of move. Yeah. You have to be able to you have to have the strangle on and be able to withstand a move from 620 down to 500 and sub 500. Like if you're trading too big and this wipes you out because buying power expands so much, or you get freaked out and you close it, you don't have the ability to get this recovery here to the upside. Yeah. So in this scenario, I might have had a strangle on in SPY, and then eventually you just take the downside risk. You just have your short put, you roll that short put perpetually out in time, the short call, maybe you just let it go. But then eventually, if the market recovers, you can re-add the short call on. If you get tested, you move the whole thing up. If you get tested, you move the whole thing up. And eventually you end up with a strangle up here, and you're still keeping all that credit that you've collected along the way.
Yeah, I almost feel like that one would probably, I feel like, would be a little harder for some people to deal with in that direction. The IBIT move that you've gotten has been like perfect, actually. Yeah. I mean, it's chopped around so much. It's the perfect example of how options can decay and the ability to be able to roll this as it's chopped around a lot. I think it's helped you in that position.
Yeah, definitely. And yeah, I mean, this thing has been sideways. If you look at 2025, it opened at 60. We're sitting at 60 now. But it's still been decently volatile. It dropped as low as 42, got as high as 72. But again, I just was never taking on short delta in here. I was just shifting the whole thing up.
I know you make me kind of want to do it. I think I'm gonna start it in January. I got the Zebra in here right now, but I might take that off by the end of the day.
Yeah. So I've been thinking about doing this for the year-long trade next year. I've been thinking about doing it in SPY. But it is a lot of buying power. It's $11,000 of buying power. So it's like, okay.
Yeah.
Tough. But these markets here, there's no weekly expirations, but these markets are okay, but they're not great. Like the 75 strike, like 50 cents, $1.25 bid ask, not great markets. Like I know. It's a little tougher. XSP, cash settled index, similar to SPY, it's going to use a lot more buying power. I think what I might need to do is do something like the micro E-mini futures and just size it correctly to where it's reflective of, $5,000 buying power requirement, something like that.
Oh yeah, that's doable.
Yeah. Or really you could just do one contract in the micro E-minis. Like this is a $33,000 product. So just one contract in the micro E-minis could work. Yeah. That's probably what I'll end up doing, is do something like this. It's going to be a different roll because you're going to be rolling into new contracts with new prices, but you would just delta match the position. So like if I had a strangle on right now, the 6,600, 7,000, and I rolled it from the Z contract into the H, you're looking at a 60-point price hike from the Z to the H. So I would have to move this up significantly higher to just delta match and make sure I had bullish delta the whole time. But yeah, maybe that's what I'll do, is do a one lot strangle and micro minis. Nice buying power requirement, and we can manage that position if we do get some big rips or sell-offs.
Market's getting super excited here.
Yeah,
strong bounce since we've been on the show. I'm going to take this.
Look at that.
Off. We are out of that.
Do you have a uranium calendar spread?
I don't have a calendar spread. I have a strangle. I was wondering what they were talking about. I didn't know if they were talking about me, but I have a strangle in there, and I think I just moved this out to D's last week. I've just been holding. And it's funny because prior to me just adding that strangle in IBIT, this was one I was thinking about maybe doing that type of deal. But these markets suck. not gonna do this in January. So at some point, I'm just gonna close the D's and be done.
Fair. 50-55 diagonal. And URA. No.
Yeah, not me.
Yeah, might have been someone else.
Never me. Never me.
Netflix going to close my put credit spread. Was going to hold it, but want to wait till after the split for the next. Yeah, I mean, if you have a spread on and you don't want to deal with it, you can just close it, wait for the new strikes, and then reopen it. But yeah, it'll be nice. I mean, with Netflix post split, we'll be able to do strangles in there or just short puts. We won't be limited to just defined risk, which is nice.
I can't remember where NVIDIA was when it split. Was it like 100 when it initially? I don't even remember what it was. I mean, it had a nice run even after the split.
I feel like it was. I thought it was like a 5-to-1 split.
So it was. So it really hasn't run that much since.
It was a 10-to-1 split.
Was a 10-to-1 split. Yeah, I thought it was like trading like with 100 handle or something like that, like 120 or something like that.
Yeah, the previous split to that one was a 4-to-1 in July of 2021. I think maybe that's what I'm thinking of. 10-to-1 in June 2024, and it's been crazy.
Mm-hmm.
But yeah, Netflix. I mean, anytime you make a product more affordable for someone to invest in or trade, it usually tightens up the markets, the options markets, and we'll see if it's reactive of a bullish or bearish move. I mean, Chipotle split, and Chipotle can't buy a bid.
Mm-hmm.
So it goes both ways. But I think Netflix probably a little more interesting than a burrito.
Yeah.
I saw a video of this guy that went to Chipotle, and he was videotaping himself, and he walked through like the whole line, and he was like, they're like, "Do you want rice or beans?" He's like, No. And then he eventually just put sour cream only on the burrito. And she rolled it up, and she's like, "Are you sure this is what you want?" He's like, "Yeah."
Weird.
It's the weirdest thing. Quite some time.
I haven't been, excuse me, I haven't been to Chipotle in probably 2-3 years.
Really?
Yeah. It went downhill.
Yeah. I mean, if you have the ability to go to like an actual Mexican joint, it's obviously going to be better.
Yeah.
Did you buy your SPX put? Did you get filled on that?
Yeah, I did. Put spread. You're welcome for me making the market go up higher. From the minute I bought that thing, market just went up higher. Yeah, I bought a put spread SPX, $250 of
0 day?
premium out the window. 0 day, yeah. It's cool.
Hey, you never know. Maybe
Feel the culture.
Maybe get another sell-off into the close.
Yeah, you know.
Could you do the same with a poor man's covered call? In terms of just like buying the call and then manipulating the short call? Sure. But that's really it. Like you don't have the same true flexibility with a poor man's covered call. If you did this in SPY, let's say you bought a Jan 2027 for next year, let's just say like a 600 call. So you're inventorying this bullish delta, and then you're selling calls against it. You do have the ability to like sell a 690 call here. But yeah, if you sell this call and the market goes higher, you can buy back the 690, go to Jan or Feb, and same kind of story. Just you're paying $850 to close it. You want to collect more than $850 to move it up. So you can go from a D690 call to a Feb 710 call, add 20 points of wiggle room to the upside, still pick up $200. And then you can keep doing that all the way up until you get to your long options expiration. So yes, in theory, you can hedge your long option pretty nicely if that's what you want to do. Wish SPY M had better liquidity. Yeah.
Wish what?
SPY M, that product we were looking at.
Yeah, I've never even heard of that. I mean, that's just
yeah, I mean, it seems as though you could do something like XLK or one of those other ETFs, but yeah, XSP is still big. MES is probably the best bet, but just be careful with your intrinsic value risk. Like you have to be able to hold this thing and withstand the variance of a 10-20% downside move or upside move. It's still a decent product. 33K max loss if it goes to zero, which obviously don't project that to be the case. But yeah, about between $1,000 and $2,000 in buying power for a position on a 30K product. So just got to be careful with the size. For me, it would just be one contract. Probably just close the call side to avoid a violent rebound. Yeah. Roll the short put in the meantime. Yeah, an in-the-money short put is a covered call. So as long as you have some extrinsic value in that position, it makes sense. These indices, you can't take stock. But if you're doing it in SPY, you could just take the stock, get the rally, wait for that thing to recover. Might take a lot of time, but you can turn it into a covered call and do the same thing. Standard 16 delta, up to you. Totally up to you.
Have it your way.
And that's the bottom of the chat. Are there any earnings today?
Ooh, good question. Yeah, we're kind of scraping the bottom of the barrel here on earnings at this point. It's like, CoreWeave is one. That's interesting, honestly. After the close today, CoreWeave, RGTI has earnings, Big Bear, BBAI. Where did I see that? God, was that a college football game or was that last night's football game where I saw like an advertisement for Big Bear, BBAI on like a scoreboard or something? Kind of interesting. I don't remember. Beyond Meat, for those who care about that, Rocket Lab, which is a name that has moved around at times. So got a couple on tonight. TeraWolf, which I know was a name that was in the news for a while there. Oxy has earnings, and this is tonight after close. Tomorrow morning, nothing really that I can see.
Rocket Lab is interesting. 6-point implied move on a $52 product. That's big implied volatility. 150% implied volatility adjusted for the 4-day. Let's see. This thing is down near the bottom of the trading range.
Ooh.
Did spike a little bit, but like, what does a 65? What does a 65 calendar look like?
This thing's in the hundreds. Wow. Lining up or no?
It's not great. It's really because this back month implied volatility is still really high.
Pretty high, yeah.
So you can't get the same cost basis reduction like we were looking at. I forget which one we did, but it was like we were buying the option for $4 and we were selling the weekly for $3. That was a nice trade. But yeah, it's still decent cost basis reduction. Like for December, if you did a 60 strike calendar, you could buy the 60 for $4.40, sell the weekly 60 for $1. Still strong cost basis reduction. You could also do like a diagonal, 55.60 long December, short the weekly for $4.90. That would be a $150, $200 winner if you get a rally. And if not, you could convert it to a calendar with the 11-day.
It's possible, as the French say.
Oclo? Has earnings the 11th.
Tomorrow after the close. Tuesday, AMC. I remember, because we always used to say BMO and AMC when I was like at a trading firm. And I remember one of the first times I was on air with Tom and I was talking about earnings. I was like, no, they have earnings AMC. He's like, AMC? What's going on with that name? I was like, no, not that AMC. Like AMC, like after the market closed. What? What is that? I've never heard that. I was like, you've never, and Tony was like, you've never heard that? I was like, it was so funny. So funny.
He's like, BMO? Oh, yeah.
Yeah.
BMO Harris?
Yeah, exactly. Yeah. He's just like so thrown off, but.
That's funny. But yeah, Aklo tomorrow after the close. Beyond Meat. I mean,
It's a dog. It's a dog with fleas.
They have crashed here.
As they should.
I mean, it's $1. There's nothing to do there. Unless you are punting. Just buy 100 shares. I don't think I would short $1 stock.
No. Not at all.
But yeah, you could buy 100 shares in here or whatever, and it's $150 if you want to do something like that. But I'm going to pass on that one.
Pass. Respectfully.
Since I mentioned going long strangles to now, there have been many opportunities. Would you consider long strangles now? I mean, they can be good if you get realized moves that are greater than implied moves. I think the first thing that comes to mind is like gold. Back like in this crazy rally that we saw, implied volatility was not adjusting to this realized move. So like a strangle in there would have printed for sure. S&Ps, I think it's harder. I mean, you've had some whippy two-sided action, and IV rank of 18%, implied volatility of 17%. Like you're getting moves that are strong relative to implied. Like SPY, for the rest of this week, you're looking at a 7-point implied range. You're getting more than that today. And we're 4 hours into the trading session. So I think there's opportunity, but you have to be quick about it. And you have to be nimble and available to your platform to where like when you get these 20-point rips in a half an hour, like your P&L is going to change drastically. Can you point to content that explains futures trading strategies more in depth than the courses? Looking for a trade strategy, navigating expirations, backwardation, contango. So if you look at the series, we do have futures trading series on tastylive.com. If you just type in futures, you'll see the actual shows. There's one with Katie. Pete has done a bunch of futures courses, not necessarily courses, but just like shows where he talks about everything there is to know about backwardation, contango. Mm-hmm. You can also find those shows if you're searching for backwardation, contango, or delta matching futures. I would look at that on the Tasty Live website. You'll see a ton of archive shows. You can watch them chronologically, or just pick your spots where you want to find more information. But yeah, it's going to be on the Tasty Live website for sure.
It's there.
Or stay tuned in 8 minutes where they talk about futures and whatnot. BBAI makes me feel a little bearish. Is their product isn't soda or wings? Bearish on a $5 stock.
I know, right? It's tough. It's tough to do that, man. I just... But at the very least, if you are bearish on that, you can just easily buy puts. I mean, I would say, honestly, it's the easiest thing you can do. I don't know how much further you expect it to go.
Yeah. I mean, this is the problem with these moves. I mean, when you have a $5 stock, if it goes to $3 and you bought a put, like sure, you're going to see that put value increase, but you're also dealing with a lower price stock. And I don't think we talk about that enough. Like when you're buying puts and you get a big downside move, yes, you can make money on that for sure, but you won't make as much money as if it was an upside move. Like if you get BBAI, if you bought an 8-strike call and it goes to 8, you're gonna make more often than not than if you get the downside move with a lower price product. This maybe not so much. There's so much call skew here that a 3-strike put is 3 cents, where an 8-strike call is 30 cents. So you have a 10-to-1 skew here for a similar move.
Wild.
Which is going to kill your upside profit potential relative to the downside. But yeah, I mean, if you're playing for a pretty decent move here, these puts are basically 0 bid. Like you can play that more easily. But when you have a regular skew environment where there's no skew, you're going to make more on the upside because an increasing stock price is increasing extrinsic value across the board. The opposite is true for the downside. Are you out of your natty gas strangle? Or are you still in it?
Still in it. I am short the 330, 510 strangle in the D26 expiration, so which is really Jan futures. Yeah, still in it.
Tree
330.
Nice.
Yep.
Yeah, I mean this has been a nice range. You got 510 up here, so you're covering the high that we saw in the summer, and then 330 is below where we've been on this Z contract. Love to see it.
God, we're gonna be up 100.
I know this is something else, people. Yeah, Bitcoin up 2K, Nasdaq up almost 500 now, E-minis up 85. We are chugging along to the upside here. Wild to see. Thomas the Tank Engine just ripping higher. But yeah, that's all the time we have for you today. Thanks for tuning in. If you've got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Jamal's at Jamal Chandler. Click that link at the top of the YouTube chat. Referral program, refresh, check it out, send it to your friends and family. Bring them into the trading ecosystem. It's always fun. It's a beautiful time. But yeah, stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. We'll see you same time, same place, 11 a.m. Central tomorrow. Peace.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
My most controversial market opinion is it's probably more political.
What's your most controversial market opinion right now?
My most controversial market opinion is that I shouldn't be following Mike and Nick. Just kidding. Love you guys so much.
The hottest take of this market? I gotta think about that. I don't know. I do like to trade the leverage, but that's not controversial. I don't know what controversy means these days. Like, I don't know. I'm sitting on cash. Like, I'm still sitting on a lot of cash, and I think that's generally seen as like frowned upon, but like I'm still doing it. I know market's been bouncing back up. I know things have been looking clear, but no, trust issues.
I honestly don't know if I have one. I'll say the fact that I like to trade earnings or direction as opposed to vol.
My most controversial market opinion is it's probably more political than it is anything else. So, I would say that, unlike others, I think the current political environment in this country is dangerous for the long term.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
It was a great show. It was very inspirational and motivating. I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event.
I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
In the world of investing, a beast lurks between the numbers.
ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
To another always wonderful installment of Risk and Reward. I saw eMedia say in chat that I'm scared of futures. I got a guy sitting across from me that can help quell those fears a little bit. My wonderful co-host, Errol Coleman. Errol, how are we doing today? What's going on?
Pretty well. It's Monday. We got a little bit of snow. Hope everybody else is doing well. Woke up this morning, saw some snowflakes from last night, continued into today. But we're getting a rebound in the market here too, so a little bit of mixed emotions.
Yes, for those fortunate enough to live in warmer climates, we have some serious snow going on in Chicago right now. I mean, not like serious blizzard serious, but 2 to 4 inches was the forecast last night.
Catch you off guard, yeah.
Yeah, we've definitely come. It's definitely come down to that level, if not a little more than that. It's snowy times here in Chicago. We also are here for only 30 minutes today, and from here on, because today is the long-awaited return of Chris Vecchio and Futures Power Hour, which will be coming on right after us at 12:30 p.m. Central. Be sure to stay tuned. But we have all kinds of exciting stuff to cover before then. yeah, where do you want to start?
How do I get into the Discord? Do we have any more details onto what's to come with that?
The Discord?
I know we've been getting a couple more questions in here.
Yeah.
We're going to get more info here soon, right?
Yeah, more info soon to come. There is a Discord. We are we're working through some regulatory stuff, but very soon Discord fully accessible to everybody. We'll have links posted everywhere. The links are posted, Reddit, YouTube chat, all that good stuff.
Beautiful.
It's going to be exciting. It's another place we can all talk and BS with each other outside of when Errol and I are on air, outside of market hours, whatever it may be. It's going to be us. All the Tasty Live hosts will be in there. It should be a fun time.
Perfect. NASDAQ. We got a rebound over the weekend so far. We had put in some lows last week. We have some heightened volatility. But with that being said, we've had to manage our risk a little bit tighter, especially beginning here in this week. So we can go ahead and jump into the TradingView platform and just take a look at VIX, maybe some of the gold, some of the metals, and the overall market here. So what's going on, guys? What's going on, Jared? Big deal. Soul Train. Classic.
Soul Train makes me think of the song "Hey Soul Sister" by the band Train.
That's gonna be stuck in my head for the rest of the day. Now. It's a classic.
Yeah, it gets stuck in my head all the time when I read Soul Train's name. So now you're in it with me.
Yeah, there we go. The market has rebounded on the day so far. We had that extreme sell-off from last weekend. Market's rebounding to today. We had a pretty aggressive sell-off into midday, and then got another rebound. So the market's been pretty resilient.
Yeah, just a gap right back up today. Yeah, I mean, like you alluded to, we saw that on Friday. It seemed like the bears kind of ran out of steam on Friday, and that sentiment seems to have held up into today. We're holding pretty strong at these levels too. When I saw us open this high, I was like, oh, okay, this is going to be an open high drawdown sort of day. But we've held these levels pretty strong.
No, we definitely have held them pretty strong, and I mean, we're not even that far off of all-time highs. I hate that we keep talking about all-time highs, but just with this bounce here, I mean, we're just 25,650. All-time highs is sitting at about 26,394. So it's really not out of the question if things get carried away here. So
yeah, we're pretty much 100 points on the nose away from all-time highs on SPX. So yeah, we're right there.
It's in the question. It's worth the conversation. But with that being said, the market is rebounding on the day. We'll plot some of our levels of value here in a little bit. That is the NASDAQ market. We can take a quick look at the S&P 500 as well. I know we don't take a look at the S&P 500 as much as NASDAQ. We give NASDAQ a little bit more love. But we like our ES traders as well. I know you keep an eye on SPX, right?
Yes.
There we go. If we can get ES in there.
It should just be that first one, no?
Yeah,
we're good friends with the CME group.
Apparently not today. There we go. ES trading at 6,840. Again, all-time highs on ES, sitting at about 6,952. So we never got to that 7,000 number, that round 7,000 number everybody was talking about. But again, I still don't think it's outside of the conversation that we can have about it, because another uptick, another leg up, we could be sitting at that all-time highs. And then with VIX sitting at about just sub 18 right now. Volatility been very short-lived too at these highs.
Yeah, the vol contraction sort of to be expected, I suppose, moving back towards all-time highs. And it's mostly, to my knowledge, the government shutdown looks like it's easing is a big part of the reason for the bullish momentum today. I've seen the FAA canceled more flights as well, so probably not a great day for airlines. But the broader market is happy at the news that we seem to be just one vote from ending this government shutdown. When I was looking earlier today, Polymarket was pricing in a high 80s. I don't remember the exact number, maybe 87% chance that this government shutdown ends November 12th to 15th is the bracket that they have, which is Wednesday to Friday.
Okay,
yes.
Wednesday to Friday. I was curious about the airlines. I'm surprised they didn't get a little bit more volatility than I would have anticipated some of these names to be getting, especially with the government shutdowns, all the headlines about the delays with flights. Not to mention, it's holiday season right now. People are booking those flights. You got to book those ahead of time too. Some of you guys might ran into some issues already with that. Maybe we get a little bit of a resolution this week, though.
Yeah, it is. I am surprised to see that things aren't getting whacked a little bit more. I mean, I guess Boeing has kind of been getting whacked over the course of this entire thing. But yeah, you would think that with, growing cancellations, and that's the thing, is it's not like it's obviously no airline's fault that there's cancellations. It's short staffing at the FAA that's forced them to have to ground a lot of flights just so that they can, manage them all.
Right.
But it's interesting that in that situation, you wouldn't see more volatility with the airlines because they are so helpless to stop it. It's like your flights are canceled. sorry.
Yeah.
Like, and there's nothing that they can do. It's not organizational. It's nothing that they've done or that they can even seek to rectify. If anything, I think that they'll probably just take a loss on all these canceled flights. So yeah, it seems like a pretty bearish situation for airlines, and perhaps something to keep in mind as airline earnings circle back around. That perhaps there was, almost certainly there was a lull in sales here and maybe even a loss.
No, yeah, they're definitely going to take a little bit of a hit here, especially when it's an inconvenience like that. This is a learning season, though. I mean, government shutdown, holiday season, debt at all-time highs. This is going to be a learning season, so we'll see how everything digests. With that being said, we're getting a first initial pullback on the overall market. We're trying to rebound here, but will it be enough? I don't know. I'm curious to know how you guys have been managing your positions over there. We put on another short QQQ call spread. So last Friday, we got long some QQQ. We sold in out of the money put spread. It was kind of more near the money. It was more of an at the money put spread. Market gapped up over the weekend. We rallied into the highs today, so we ended up taking that one off. And then we ended up putting on another short call spread. So got some long delta on short-lived. Now we got some long delta on from last weekend. That was short-lived. Now we have a little bit more short delta on going into the rest of this week, just depending on how these levels can hold. If these levels can't hold, then we'll take that position off a little bit early. But if not, we'll probably manage that risk to the upside early again, because I don't want to get stuck trading at these all-time highs. So we'll take those spreads off a little soon if need be. Other than that, anything else exciting on your end there, Gus? We're going to plot some of these levels of value just so we can pay attention to.
Yeah, worth noting, all-time high is not the value area there either, which a lot of people think as we race towards all-time highs that it's like that's what it's going to take to get a resistance, but that does not seem to be the case. No, nothing really catching my eye. Rivian is doing it again. I'm not even excited anymore.
Rivian is doing it again.
I'm always just it really just fills me with dread whenever I see Rivian moving up, because I know that it's going to be a giant stain on my portfolio the very next day when it inevitably collapses.
Right.
But they are testing the 17 level as they love to do so much, so maybe we'll get a confirmed break of 17 and I can finally quit complaining.
For Rivian, what did you end up doing in Rivian again?
I just have leaps.
Oh yeah, right. Yeah. Giving that some time.
What?
Giving that some extra time.
Oh yeah, plenty of time. I mean, yeah, my 12 call, which is in the money and has been for some time, is September 18th, which is still 312 days, and then I have a 25 call that's 431 days. Both are green to Rivian's credit as well. They just fluctuate between being fairly green and deeply, deeply red. But I'm holding my convictions. I might, on this rally, exit one of them to just be down to one leap left. We'll see.
I mean, that's nice. At least you can scale out of those positions too. You're a little flexible.
Yeah, exactly. I could easily scale out of it would probably be the near-term one that I would do first.
Yeah. No, you're flexible. Let's check gold over here. I know I still have a couple positions on in gold. Gold near its highs right now. Gold's been going on a rally. I don't know if you got any thoughts over there, but we could take some highs over here. On the daily, at least. Let's zoom out, give us a larger time frame.
Yeah, I'm happy you brought this up, because this is actually what I'm most shocked about today, market-wide, is that, again, I mean, it's just gold is moving as a correlated asset, and I kind of theorized this whole time, and I've put dollars into that conviction with a trade, that the end of this government shutdown would cause at least a little blip in the price of gold and silver as certainty returns to the market in that regard. And clearly, things seem to be the opposite. It seems to just continue to move correlated with the broader market. So be interesting to see what happens there. But my silver shorts are probably sunk.
We still got a little bit of time in there, though. It's really going to be interesting, especially around 4,100, 4,800-ish. Once we started to really slow down, still kind of trading inside of a range right now, but maybe we can make another all-time highs, maybe not, but we're getting some actual movement from these metals now, so we might get a little bit of a conclusion here.
Wolf asking about my GOAT P-Sky. Yes, I am still long P-Sky. I am not doing anything in particular surrounding EPS today, no. Just going to let it ride. I'm trying to find this position. I got too many freaking positions.
Trading about $15
P-Sky,
right now.
there it is. Yeah, so I have, things have cooled off a little bit. I did exit one of these. I had 3 leaps, 10, 15, 20 initially, all January 15th, 27. And now I have just 2, the 10 and the 20. But my 10 leap, these were all bought out of the money. My 10 leap is up 3x. And the 20 leap is up orders of magnitude, like maybe 10x or something like that. But yeah, looking good. Obviously bleeding a little tiny bit today, but yeah, I'm holding strong, Pisca. The move came way sooner than I thought. Is kind of the whole thing. Is I bought these contracts with the thesis that sometime like Q2, Q3, 2027, Pisca would have some good news come in, and this would rip up with the UFC merger, and then it just ripped off the UFC merger initially and gave me straight up 50% of free play, basically. Right. So. Yeah, I'm happy to continue holding those, and I think the 20 in the next year is very much in the equation.
Yeah.
Maybe Beyond will moon our leaps and make up for our disappointments. That's true.
Beyond's probably one of the more disappointing assets in the portfolio right now on my end. Other than Oracle, I chopped that one already because that one took a left turn. So Beyond.
Yeah, Beyond is unched today. Up a little bit yesterday. We did kind of find a bottom. We were not. We being myself. Are you long Beyond as well?
I think I am long a little Beyond.
Me, you, and Jared.
I might have a zebra on Beyond. Let me double check. I might.
That sounds right.
I may.
Yeah.
Yeah, I do. Down about $60 on that one. So we really haven't gone. It hasn't been too volatile. I feel like, again, we missed most of the volatility.
Yeah. Well, yeah, and zebras are especially attractive with something this cheap as well because a $1 move is,
exactly.
is a lot. You know, it's not as scary as leverage.
To your point, it's really boring right now, but if we get a gap up randomly one of these days, this week, next week, a month from now, take advantage of that, but check underlying too.
Absolutely. But yeah, it seems I was a little bit overzealous with my entry. It seemed like it was catching a bid. 203 is the spot on my entry, and I just have shares. I didn't even do anything option specific.
No, I got you. Other than that, Beyond, I know a little bit of UNH. UNH has been a little bit disappointing lately. Nokia, this is another one that hasn't been disappointing, but really hasn't played out or hasn't played out in a way we probably hoped in this time frame. So kind of sitting up $6 on that one would pretty much break even. Another one was, again, gold, just sitting in that one. Baidu was another name that we have on. Sold an out-of-the-money call spread on Baidu. Sold the 130, bought the 135. Kind of on the dance floor right now. We're testing that 130 call a little bit. But that one seems like it's going to come down to the wire. Sure, we're going to get a lot of that gamma kicking in this position too. 11 days left, down about $50. So that one can see some pretty big swings here soon. But I think other than that, that's what's standing out on my end. Nothing as exciting as really NASDAQ. NASDAQ has been exciting.
Yeah, anytime Nokia is mentioned, I'm obligated to mention my BlackBerry position, which... Just BB. Yeah.
I knew we were on it somewhere.
Yeah, I have 450 puts, like $4.50 strike puts, that's to say.
Right.
And man, it just keeps testing it. I think that I've done a very good job of identifying 450 as the level, like when I got into these, but we just cannot get the break below it, and it wants to so bad, but now we're kind of bull flagging, and I don't know, I'm a little bit scared of this one, but feeling optimistic at least that I have picked the level correctly, and hopefully we get a confirmed break below it sometime in the next 11 days. So we'll see.
And we may get something in here, especially BB. Was this one in any headlines recently, or was it more of just the Nokia, I think, cell phone headlines were beginning recently?
Yeah, no, it was Nokia. Nokia popped on something legitimate, and then BlackBerry ran like on sentiment, I think, is what happened. And then I was like, why the hell would BlackBerry move on this? This is dumb. And I got short. And apparently it's not dumb. So we'll see. They are basically same sector now, telecommunications.
Yeah.
BlackBerry doing military telecommunications, guys. Levels to it. That's how they're still viable.
Military communications. SLV, taking a look at silver again here. The gap up on the day and then the run to the highs. I don't think I'm positioned in anything in silver, just these gold positions. Just double checking on that.
Bitcoin finally is moving a little bit for me as well. I mean, IBIT is what my exposure is in, but...
Let's see, what do we got over here? I know we're trading around 105,000 right now here on Bitcoin. Take a look at Ethereum after this. Again, I know we can take advantage of the futures on some of these Bitcoin products too. So I know we have the micro Bitcoin. Let me go over there. Let's go MB, micro BTC, maybe MBTC. Melanated Bitcoin. Not that one. Not that one.
If we're talking crypto, I would also draw attention, and I tweeted about this morning, but...
What was that?
MicroStrategy and GameStop both have just cratered since their highs when they announced that they were going to become crypto treasuries. I said it
when they announced they're going to come.
Yeah,
that's pretty much what their strategy was.
Well, that is. I mean, that is the entire strategy. I mean, especially in the case of MicroStrategy, GameStop.
Business on the
Yeah, I mean, GameStop still has some core business, I guess, but MicroStrategy, yeah, I mean, they were just like, we're nothing. We're going to buy all of the Bitcoin in the world.
Yeah.
But both of those companies, which decided to make themselves into Bitcoin treasuries, have cratered off of those highs, north of 30%, 40% in the case of MicroStrategy.
Right.
Actually, that's not even the highs. The amounts I'm citing are just when I wrote the article on May 28th of this year. The highs are higher. But since I wrote the article saying that you should just buy Bitcoin and not use the treasuries on May 28th, MicroStrategy down 40%, GameStop down 33%, and Bitcoin is down 1%. So that was kind of my entire point when I was making those theses at the beginning, is that there is other risk when you tie a company to your crypto. You're not just getting crypto exposure, and if you wanted just crypto exposure, go get it. There's even ways to get leverage.
Right.
I don't know if Flock is traded, but I keep seeing these cameras pop up all over town. I'm not sure what you're talking about, Big Deal. Flock, when I think of Flock, I think of Flock chicken chips. They do, it's like chicken skin potato chips.
Okay.
They're like high protein. They're
Flock
good.
chicken.
They're tasty. I get them. I'll do it. I'll do it like on a plane. Like
tasty.
Yeah, they are tasty. They're endorsed by this Tasty. But yeah, I like to do those on a plane. The salt and vinegar. It's like a good protein snack that doesn't smell up a plane.
Yeah.
Can't stand. And I'm one who really cares about my protein and needs to get it all in. You don't need to open a Slim Jim on a plane and make the whole plane smell like a meat stick. Like there are other options. I promise. Anyway,
no, that's completely valid.
That's my soapbox. But I don't know what Flock is. Big Deal. If you give me some more clarity, we can see if they're publicly traded.
As you do that, as you pull that up, we're going to mark off some of our other levels of value that we're going to pay attention to for the rest of this week. Today was a trickier day. We were able to get a couple trades in on NASDAQ. If you missed those, you can check out the Twitter. We posted the executions over there on there. But it was a little bit more of a difficult day, especially on the short side. Got chopped up a couple times today, looking to short near a value area low. But the market was on hard mode today. And I feel all you can do when the market is on hard mode is just manage the risk best as possible until you get something that moves your way. See if you can pull some of these up. There we go.
Yeah.
What were you looking up over there again?
Oh no, I wasn't looking anything up. I was waiting for further information on Flock. If anyone was going to come in,
That's what it was Flock.
Yeah, I'm not familiar.
All right, let's see. Grab these levels of value. So what we need is 25,641. 25,641. 641. We're going to put one down over here. 25,641.
Square changing their name to Block and changing their ticker to XYZ has never really sat right with me.
Say that one more time.
The way that Square just all of a sudden said, "Oh, we're going to be Block now, and our ticker is going to be XYZ," frustrates me.
You're not vibing with it.
What?
Not vibing with that.
I think it's a cop out. I mean, your ticker now has nothing to do with your name at all, and you so clearly just took XYZ so that every single finance article in the world would have to change.
Right.
Would have to change their example ticker. It just, I don't know. I see the marketing element. I don't know. Doesn't
I didn't know they were going to even come out with a reason. I thought they would have just let our imaginations go crazy, right? Just like how we assumed. It's probably just a marketing scheme.
AI street camera company.
26,006.90. We got that one in.
Flock Safety.
That one, 25,641. 25,651.41.
Flock is not public.
Are they not?
That's the answer.
65,000.
This is interesting, though. I mean, they just do. I mean, this is just surveillance state thing. That's what this seems like to me. Is that it's a AI surveillance state thing.
What is that? Flock?
Yeah, Flock. Like they do cameras like in cities for. Well, they say to like help stop crime. I'm sure it is primarily to help stop crime, but
okay. But obviously, those can be used for different use cases.
Yeah, I never trust that there's not ulterior motives with the AI-powered cameras going up all over town.
Yeah. I trust the tech. I just don't trust people.
Flock cameras equals Big Brother. Yeah, there you go. Exactly what I was saying.
Main level of value here.
You know what? We live in a surveillance state anyway, so If it stops crime, sure. I'm not a criminal.
He said, turn the cameras on.
I suppose the 1987 minded aspect of that is you're not a criminal until they change the laws so that you are. Perhaps. Perhaps.
All right, cool.
ChatGPT said they might go public. No SEC filing yet. Yeah, I saw that. I saw they're throwing around $1 trillion valuation.
For which company is that?
OpenAI.
Oh, right.
Which, honestly, yeah.
$1 trillion?
Yeah.
I mean, I don't think
that's too crazy for OpenAI.
I'm honestly surprised somebody didn't say a more lofty number than that. Honestly.
Well, yeah, it's like, I mean, I guess that their like revenue streams aren't as set up yet. So, I mean, that's maybe worth considering. But, I mean, holistically, yeah, I think they're taking over the world. I think they're a day-to-day part of lots of people's lives, myself included. I think $1 trillion might be fair.
Yeah, I mean, I was re-downloading the ChatGPT, the Sora, I think it was.
Yeah.
I'm sorry, what was it? It was the ChatGPT Atlas. Got it right here. I never went through with the fully downloaded version of the Chatlas Atlas, because I was looking to get that integrated into a little bit more things that I'm working on. So.
Yeah, I'm seeing 500 billion looks like it would be a more realistic target. That seems to be the
500 billion.
Yeah, 500 seems to be the number that they're throwing around. But OpenAI themselves are throwing around the 1 trillion number.
You guys think the expansion of the NYSE in Dallas going live will affect anything? Don't see why it would, but who knows what's bullish or bearish anymore?
Oh, really great point. You mean Y'all Street?
Y'all Street.
Yeah.
You mentioned that
Y'all
not
Street.
too long ago.
Yeah, Texas Stock Exchange.
That's good.
No, I think that you said it best, really, Jared. I think that I don't see any reason why it would, but yeah, I think that that's incredibly well put. I couldn't said it better myself. You never know what could move things these days, but I don't see why that would have any tangible impact.
Yeah, I'm pretty much in the same boat there. I don't see why it would have any tangible impact, but at the same time, who knows what's bullish or bearish anymore? But I would assume so. No, maybe not. Maybe the 0DTEs being introduced gave us a little bit more extra volatility. Maybe there's an argument for that to be had. But in terms of the Y'all Street, maybe not.
Yeah. Yes. Yeah. Maybe. I mean, like, is there a liquidity element to be had? Like, there might be some angles. NASDAQ Texas is here too.
There might be some angles.
Yeah, I agree on the AI cameras, by the way, guys. I didn't mean to come off like a bootlicker just saying that I don't mind it because I don't commit crimes. I do agree that this is probably a dangerous thing for broader society.
As a bootlicker.
I'm just saying, yeah. I mean, I stand by my original statement as well. Like, for the time being, I don't see a problem with it because I don't commit crimes. But, you know, if we get into some kind of situation down the road with less checks and balances in the government or whatever it may be, all of a sudden you're dealing with a surveillance state that you do not want.
Yeah. We marked in some of our levels of value. Big deal. I know you're a little bit more involved with these levels of value as well. We're trading at our value area low right now, so we'll see how the market digests the rest of these moves in the market for the rest of the day. Yeah. Tasty, can we get Vecchio back on at 10 a.m. slot over the? You know what?
I didn't even know what 10 a.m. he was talking about at first. I was like, Options Trading Concept Live is awesome.
Nah, Andrew, we're gonna have you on here one of these days, brother. We'll have a great time.
You get your hour of Vecchio like right now. That's the whole point. We're the openers.
No, that's funny. With that being said, anything else top of mind before we start to wrap for the day, brother Gus?
No, I don't have anything else.
Cool.
Get excited for Vecchio. He's coming on next.
Yeah. Be sure to stay tuned. Vecchio coming on next. I think that's it from me on my end. We'll see how NASDAQ wraps up the rest of these levels and digest this market news.
All right, sweet. Errol and I will be back here tomorrow. Same time, same place, 12 o'clock p.m. Central. We'll see if we chase higher highs or if this is just a little blip and we go for lower lows. Thanks so much, everybody, for watching. We dearly appreciate you taking the time out of your day. Stay tuned for Chris Vecchio and Futures Power Hour coming on next. We'll talk to you guys soon.
Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on tastytrade, named best online broker for options trading. Genius loves company.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at Tasty.
De você, eu já não sei esperar. Madrugada chegou. Madrugada chegou. Madrugada, madrugada, madrugada chegou. Madrugada, madrugada, madrugada chegou. Não quero mais, não quero mais, não quero mais. Não quero mais acordar, não quero mais. Não quero mais. Madrugada chegou. Madrugada chegou. Madrugada.
We are back. It's still Monday, November 10th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Thomas Westwater. Thomas, it's good to see you on air again.
It's good to see you too. You're back. I mean, this is huge.
It is huge. You know what, Josh? We can go right to the slides. We have to ask the question today. Guess who's back and better than ever? It's not me, Thomas. It's the U.S. government. The shutdown may be ending. What joyous news to come back to on my first full day back at the office.
Yeah, I mean, maybe there's something to it. You come back, the government comes back. You never know. But this is...
Don't ask too many questions.
Yeah, right. And, the market likes it. We've seen before the markets usually brush off government shutdowns. The longest on record right now, the second longest, just short 4 or 5 years ago, really, I think. But the market did well during that shutdown tune, and now it looks like we're going to be, at least ending the shutdown on a positive note with the markets rallying, especially led by AI stocks. What better sign to get bowled up than some Nvidia and all those other chip stocks getting just hammered to the upside.
Well, I got to ask the question. It kind of feels like everyone's still a little gloomy around here. I couldn't help but notice when I was gone, earnings for the third quarter are accelerating. The Mag 7 blended earnings growth rate is 23.5%. The S&P 493's blended earnings growth rate is 11.8% right now, with 84.8% of companies having reported. The question I'm asking myself here today is, why is sentiment so sour? We just saw that the fear and greed index on the very publicly available CNN.com has switched out of extreme fear territory. New York Times is pushing an agenda. The Trump is pushing us towards a crash. It's going to be 1929 all over again. Even The Economist, why Wall Street won't see the next crash coming. Did something happen when I was gone? Because I see faster earnings growth in Atlanta Fed GDP Now growth tracker sitting near 4% and a slew of rate cuts from the Fed in the rearview mirror as well as ahead of us. Why are people so down right now?
Yeah, I think it's not just one thing, and I'm not sure if it just only one thing happened while you were gone, but we have some still lingering uncertainty, especially around trade, and that's what drove the market a lot lower earlier this year. The Supreme Court, they could potentially say, and some of the justices did sound skeptical, that they might issue a ruling that says the tariffs are not legitimate. That would not only have to force us to refund a lot of those tariffs, it would put the trade policy of the U.S. president in a very weird spot, because what would he do next? I think that's one thing that's overhanging the market right now.
Yeah, the tariff stuff to me is it's a whole interesting game of expectation setting. He's been flaunting, parading around this potential for a $2,000 rebate. Who doesn't love a good stimmy check? The problem is, Thomas, you have to get the government to open up and pass legislation to apportion that money. And then when you put it in the context of the Supreme Court potentially striking down the tariffs, it sets up an interesting dynamic where Trump's going to be able to turn around in a few days and potentially say, hey, I wanted to help you with the cost of living situation, but the courts got in the way. So fun news cycle ahead. But today is all about relief, because sentiment is sour, and going into the news that a government shutdown was potentially coming to an end has provided a spark here. This is a really technically clean bounce, Thomas. It couldn't have worked out better for the way that I'm particularly positioned right now, especially as it pertains to the S&P 500. Thursday on Overtime, Thomas, I laid out the case for getting long stocks as we had re-entered the zone for both the S&P 500 and the NASDAQ that had become so familiar for support for buy the dippers in recent months. Going back to the May lows, whenever the S&P or NASDAQ has entered that area right around its 1 month moving average, the 21 EMA, as well as the 50-day moving average, highlighted here on the screen by the yellow and blue lines, it's been an area where, dip buyers have been rewarded. So having gone down there last week, first blush, what do you have to do? You're off 3 to 5% from the highs. VIX has popped above 20. My instinct was to fade it. So I'm still sitting long here. I'm enjoying this position and this move today. I'm liking the fact that volatility has come in with an 18 IVR right now. I do have a lot of questions, though, about how long this bounce can last, because I see a world where the government reopens and then we have that barrage of weaker U.S. economic data coming down the pipeline. That to me seems like a boogeyman lurking around the corner. So I don't know how too cute I would be if I'm looking at a market that's rallying right now in the short term. There could be a little bit more turbulence ahead. If you weren't long, maybe you are, because I actually don't know right now. But do you look at this action today, and I see a beautiful Morningstar candlestick cluster in the past 3 candlesticks here. Is this giving you enough confidence where you'd want to look long for another attempt back at 7,000 over the next few weeks?
Yeah, if I was taking long right here, and I think I'm going to, I think, you're shooting for the previous high for it to break that. We have a pretty clean bounce here off these EMAs. The nice little doji and Morningstar candle pattern you noted. I think, it's a place where you get long. If you drop to the 50-day SMA, you cut your losses, but you take the shot here because we've seen this before. You have these patterns highlighted on your chart, and it's a pretty clean and readable trend of price action once this happens. So I think, if you say something like, I have 60% odds that the market's going to go up and break the previous high, and then maybe we can run a little bit more, that's certainly possible. We got, still some big names on earnings. We got NVIDIA next week. If they blow it out in the water, that could light some fuel on fire for this market. I think it's a good spot for risk to reward.
Yeah, the earnings this week are probably inconsequential. I don't know if people are looking towards something like a Disney to be a bellwether for the broader market, but Cisco is coming up Wednesday after the bell. And that probably gets some attention given the fact that it is a bit of an earnings desert otherwise. But it's your NASDAQ that's leading the way up here today, Thomas, up by nearly 2% right now. The S&P up 1.35, your Dow up by 0.6, and the Russell up 1.2. Volatility a little bit more elevated here on a relative basis compared to the S&P. It's at 23.4 IVR. And then you look to the Russell, it's an 18. So rare is the occasion that the NASDAQ leads with the highest IVR. That's typically, at least in recent years, that seems to have been reserved for the Russell 2000. But very much like that S&P 500 counterpart, volatility is coming in substantially today. We do have to note that the high IVR from Friday was 35.8. Now it's been down to 23.4. So vol crush is afoot. You're getting that vol crush with that nice little reversal candlestick trio here. We're seeing that we're pulling back above the 1 week, the 1 month. We're pulling back above the 50. And the rate of change, right? The slope of hope, if you will. We see that the 5 EMA now has a positive rate of change again, and so too does the 1 month, something that you couldn't say for the past, week and a half. So some technical momentum on the upside is reasserting itself. If there is a fly in the ointment, a blemish to all of this, though, I'd have to point out that this is a rally that's broadly concentrated for the Mag 7. When we look at RSP and QQEW today, you're not seeing that kind of performance you're looking at with the headline market cap weighted indexes. So the equal weighted S&P, for example, is up by 0.46%, but that is nowhere near the 1.38% the S&P 500 headline is garnering right now. And the same thing for the NASDAQ, up 2.01. We go over to QQEW as a comp, and that's only up by 0.89. So it's not a perfect rebound by any stretch of the imagination, Thomas. It's one of the reasons why I say if we're long, maybe not get too cute with it. If we can get it bounce up towards 69 or 70, 7,000, I suppose, then it's probably worth taking some profit or taking some semblance of profit if we're thinking about the move off of Friday's lows, if people had bought it on Friday. In the follow account, I have the single MES position on, so there's really nothing to do to cut in half right now. I'm going to ride it for the foreseeable future, but I don't think this is necessarily everything we've asked for if bulls really wanted to feel secure in today's price action.
It's not everything we asked for. It's not perfect, but you usually do not get the perfect setups.
Fair point.
A lot is going to happen over the next few days with these headlines around the government shutdown. Once it ends, how quick all this economic data comes out. It could be a chance, of course, for higher volatility because you never know what happens overnight. A conversation breaks down along the way, and all of a sudden, we could be back just as easily to the government is staying shut down. And, but it looks like for all intents and purposes, Johnson is calling House members back, telling them to get back to DC. I mean, I'm hopeful. You mentioned hope. I think you always have to have a little bit of hope when you're trading. Don't bank on that, but it's just naturally human. I'm long NVIDIA. So, I'm staying concentrated in that Mag 7 space. I think it makes sense to do that right now, especially with government reopening and how intertwined government and AI spending is becoming. So I think that makes sense that, we're seeing headlines that the government shutdown is ending, and you're seeing the Mag 7 rally and really carry this market, carry more weight than perhaps we'd like it to. But that's what's happening. And I think, if you're playing off what you see in front of your face, these are decent cards to take a bet.
You mentioned NVIDIA up 4.81% today with a potential shutdown coming to an end. We see that semiconductors right now are broadly leading the way higher, up 2.87%. And what a clean bounce, by the way, in the semis. If we're taking a look at the technical uptrend from the lows that we have, April 7th, tariff day, swing low that you have at the start of September, I can't think of a cleaner bounce. This has been drawn on the chart for months at this point in time, folks. And you see that 50-day moving average, that nice pin bar down here. We'll call that a hammer candle with that follow through today. We get through the high in SMH 360.15. You're talking about a market that really technically in the short term doesn't have much standing in the way. For NVIDIA, that'd be 197.62. And then you have across the board the big names that are carrying you here, coupled with those indexes. These are nice little potential bottoming efforts. Microsoft could be the key to this all, Thomas, because I look at this recent move and maybe it's a double top coming together. Maybe it's a period of sideways congestion, which we've seen Microsoft go through long periods of just trading sideways. But so long as we're holding the 490 level, something that Nick and I discussed yesterday on First Call, you start to see how, okay, maybe there is another swing up here in the short term. So for a name like Microsoft, getting back above that 1 week moving average, something we haven't closed above since October 29th, it'd be another one of those little green shoots that maybe the next few days stocks can bump up a little bit more, particularly some of the bigger names. But once we get that bump up, I got to say, I'm not sure how long I let this run for. We got our gap fill from the 24th to the 27th. So that's complete. Maybe we're talking about the swing highs up near 68.85. What's your level of comfort here for staying long right now? Because sentiment seems to be bad. And when sentiment's bad, there's always more room to the upside. This is not an overcooked market from my view, despite having not been around here the past 2 months.
Yeah, I mean, the fact that sentiment is a little down in the gutter, it makes me more confident to get a little bit long right here. Because you figure if you're trading off sentiment, and that's not always doesn't translate to how people are positioned necessarily. But if people are banking on it being a short market, and you get some upside, you start squeezing those people out a little bit. Of course, you could get to the recent high in October, and you could get some profit taking. People that were buying on the way down after breaking up to a new high, trying to just get out of their position. If I'm riding this higher, and I'm close to maybe just rolling my NVIDIA, which is the way I'm probably playing this through single equity names instead of the ES. I'm probably just rolling my strikes up and doing something like that. But yesterday's low, if you go down there and break that, of course, I think that's definitely where you take some risk off, or maybe even 6,700. I mean, this is a position where I put on, I expect a continuation throughout the week. And play it short term, in and out 2, 3, 4 days. I would love that.
And in terms of your sector performance today, we talked about semis leading the way up, and to a certain extent, this looks like a pretty growthy kind of day right now. We'll leave aside gold and gold miners, which, though, nice to see you again, gold, after having been gone for some time. Semiconductors up 2.88%, tech 2.35%, telecom 2.16%. Discretionary 1.25. The losers, there are only 5 of them. And for folks who haven't been around for some time, or this is your first time watching Futures Power Hour, we do track 25 sector ETFs here. The biggest loser, consumer staples, down by 0.67%. Utilities, home construction, these are off by barely 0.2%. It's not exactly a weak day. So at least in terms of what's going up, yes, it's the mega cap names, it's the large cap names, but underlining all of that is this general shift towards things that are a little bit growthier right now, buying the dip in the winners, and the things that have struggled or lagged are, not getting quite the favor right now. I do want to ask your opinion on what's happened though in the Russell, because the Russell to me is by far the most interesting set of changes next to Bitcoin over my 2-month hiatus. I pointed out because going into the conversation that you, me, and Ilya had on Thursday, the Russell was only up by 0.2% during my reprieve. And so there was a point on Friday morning where the Russell had actually gone negative in the 2 weeks or 2 months when I went on paternity leave, Thomas. And so I found that lack of upside performance in the context of what's been a market rallying what I see in the news, the headline, stocks new highs, NVIDIA new highs, $5 trillion market cap. These small cap companies haven't been doing all that well. Do you think that if traders are looking for a more meaningful downside opportunity, if they're a bear, would you feel more comfortable playing it in the laggard, the Russell, or would you try to call a top in the high-flying, ever-expanding NASDAQ 100?
I mean, if there is a broad market down move, I think whether you're in the NASDAQ or the Russell and your timing is somewhat right, you're going to do okay. In a lot of cases, and especially in single equity names, I would rather get long the one that's been lagging or get short the one that's been up a lot more. But here, I think I would go with the Russell just because the environment, even though rate cuts have crept in and we've got some, and that's usually good for small cap stocks. I think there's still concern with how the economy is going to perform, and particularly we still don't have a clear sign on how exactly these tariffs are going to push inflation higher. Now you start talking about stimulus checks and things like that. I'm not a big fan of the Russell. I mean, it was looking good back in October, early October, September. It was looking nice. Recently, these past couple weeks, dropping down below the EMAs, the SMA, just doesn't inspire a lot of confidence. I mean, if you're going to take a long shot, I want to do it in something that's been leading. So yeah, I think that's my view. If we get a broad market sell-off, I think it is driven by something in the economy, something how it's affecting rate cuts. So I think the Russell would be a good candidate to really take some pain there.
JP Morgan today put out their private sector jobs tracker. They see jobs growth for the last month at minus 35K. The single most important thing, and I feel like it's been long enough where it's actually worth showing again. Just give me a second to pull this up on the screen. Forgive me for the poor display here because I'm going to bring up an Excel spreadsheet for the sake of just doing this expeditiously. But when we take a look at what happens after rate cuts, yep, you're going to come with me over here. Okay. When the rate cut is maintenance, it's positive returns for the stock market a month out or a year out. When the cuts are recessionary, that's when things get hairy. Stocks do not like rate cuts for recession reasons under any circumstance, over any time horizon. The rate cuts have to be there because things are, well, good. They're going well. Inflation's come in and growth is still positive, so we can reduce rates without worrying about fanning inflation. That's why last September, the Fed declares inflation's done and we're cutting rates. Stocks boom. So that, to me, Thomas, is what we're watching for the next few weeks. The Russell's struggling amidst this impulse of weaker private sector data trackers with the absence of government data. It suggests there could be some uncomfortable information coming down the pipeline soon. And if that's the case, all of a sudden we start talking about that December Fed meeting and that potential rate cut. And is the Fed doing it because inflation hasn't gone up and it's an adjustment, a maintenance cut? Or are they doing it because they're worried about recession, because jobs are contracting? Have you been listening to Powell, what he's been saying with respect to jobs and AI? I'm curious on your take on that. Do you think that Powell is right to call out jobs growth as being effectively nothing because of all the AI coming into the economy?
Yeah, I mean, I think that's an important thing to note for him, just to get it out there to a lot of people, a broader audience. But I think he's right on that, perhaps to probably at least a moderate degree. And I mean, I don't hinge my bets on the market on exactly what he says, but if we do indeed, this economic data starts to come out and all of a sudden it turns bad, it turns sour, very little chance the market wouldn't react to that in a negative way. And because it's, we get this backlog of data, I think that increases the chances that it's going to be, more of a body blow to the market rather than getting one data piece at a time and getting small hits that kind of nudge you in the direction of recession. But I mean, so far the market's reacted in a way where these Fed cuts are maintenance cuts, right? They haven't been for recessionary reasons. So if that script flips to where we're now cutting, and especially if, we get bad data and then the Fed comes out and says, all of a sudden you're cutting 50 basis points or doing something even crazier like an emergency cut, which isn't likely at this point, I don't think. But, I think that would derail not only the Russell, but the broader market.
The Russell could be problematic. So if you're going to be a bull like I am, Thomas, like you are, maybe something to have in the back pocket here is looking out to the RTY H6 contract. So we're thinking about the March 26 expiry here. The low that we had on November 7th is 2407. Okay. And yes, that's just from Friday, and the market has rallied quite significantly since then. But if I wanted to look at the loser and say, if this thing were to come back in, let's say stocks, they get their exuberance for a few days, reality sets in, the economy weakened during the government shutdown, even if all the workers get their furloughed, the furloughed workers get their back pay, it's still going to mean net aggregate demand is a little bit softer. We already have this jobless growth situation right now. Maybe stocks do need to come in a little bit. I mean, I'm thinking about this today. I don't want to do it at this moment because of momentum here intraday, and the market is still quite strong. Nasdaq's up a firm 2% right now. But if we start to see the market roll over, I'm keenly interested. This is definitely on my watch list for the next 2 or 3 days. Looking at that long 2400, 2350 put spread up at 46 DTE in the RTY H6 contract. I don't think there's a reason to be too cute about this. I'm not going to directionally be a bear by any stretch of the imagination. That seems off brand. But sizing up all of the other asset inflation type of trades, if that is wrong, then having something that can reduce the beta weighted deltas of the core positions may not be the worst thing in the world. So it's a feather to keep in the cap right now, not actionable per se. I'd much rather be leaning long the stocks with those bottoming patterns coming together and having just received the move off of that 2150 EMA envelope. Okay. If it were to fail here, that would be a change in the market's behavior than we've seen over the past 6 months. And that'd be all the more reason to be bearish. But until the underlying bull trend persists, as long as the underlying bull trend persists, what does Soros say, Thomas? When you see signs of a bubble, what's the most rational thing to do?
Go long.
Rush towards it. Go long. So it hasn't hurt us thus far this year. We'll keep running into it.
Yeah, and I mean, if you think it's a bubble and you see some, big names on Twitter, like, the past few years, like Michael Burry or something, who said it's a bubble, I'm getting short. And it's like someone else sees that and they're like, oh, I should get short too. Well, most retail traders don't have this account size to wait so long to where that bet could play off. I think if it's a bubble, usually you get a long time before it bursts. So it goes back to what we've talked about before. When you're in a bull market, trying to time the top is exceptionally difficult. So, I mean, the trend is your friend. That's saying it's overused perhaps, but it really drives home the point, this fundamental truth that statistically you are more likely to perform better if you're just staying long in a bull market.
Hold on tight. The market can stay irrational longer than we can stay solvent. I mean, what was it? Almost a year ago. It was the beginning of this year. So we're 10 months away, but we talk about the analogy being close to a 1998. Everyone running around screaming it's .com bubble. Why does it have to be 1999 already? So 1998, if this is 98, that means next year's 99. That's when the fun begins. So
yeah,
I love this circular thing, by the way, where it's like, okay, well, the Fed's cutting rates because the economy's not growing. The economy's not growing because AI is accelerating. And AI is accelerating, meaning there's more corporate earnings, so the value of the equity market's going up. But when equity markets are going up, it necessarily means then that jobs growth is weaker because AI is embedding itself deeper into the economy. And so you have this tail, this like Ouroboros, a snake eating itself, except this time it's a positive feedback loop. Stronger stocks, weaker jobs growth, more Fed rate cuts, which creates stronger stocks and incentivizes companies to keep pushing forward with AI. Oh, what are we doing here, Mr. Westwater? It's going to be fun. It's going to be fun the next few weeks. Let's talk about bonds, though, which are bouncing back a little bit here. I'd remind everyone tomorrow is Veterans Day. So we do see that the bond market is closed. Keep an eye out for that. Treasuries are bouncing back intraday here. And there's some new positions on the board as of this morning over in notes and bonds. These are over in the March expiry. So right now, as of this morning, for ZB, sitting long the 118, 119 call spread. For ZN, short the 111, 115 put spread, and long the 114, 115 call spread. So a little bit of a double bull there. I'm feeling good about that. Just I also have a little bit more capital to play with here because it's been a really good run. So I'm taking some swings, Thomas. But I see 112 as a line in the sand for ZN. That kind of makes a lot of sense to stay long against there. I like the short put spread way because he had IVR north of 20 when I put it on. But likewise, we could have a situation where the market just goes sideways and holds 112, and then those 114, 115 call spreads expire worthless. So at least I get something out of it. But that is my line in the sand for notes. 112, do or die. If we're above it, I'm bullish. If we're below it, I'm out. Not going to overthink it. But I do like the fact that we're holding 112 on numerous occasions over the past few months, going back to early September. In fact, the last time that we saw 112 was September 2nd.
Yeah, I'm long ZN via short put spread as well at 112, 112.5. So I'm 46 days out. Right now, I feel fine with it. I think you're right. 112 is the line in the sand. If it closed below there, and the subsequent day it didn't rebound, as in it kept dropping, that's when I would close the position on it. But yeah, I'm long. I think I put that on last week, so I got plenty of time with it. I see it holding 112 for quite a while.
You know, we don't have the government data, and even when the government reopens, we're not going to get the data right away. It's going to take some time for people to come back in and turn their machines on and get all the numbers whirring, okay? It could be weeks, quite frankly, which means in the absence of that government data, in my view, I would be looking to the bond market as our guide here, right? You get higher treasury yields. Is that because Trump's talking about stimmy checks during a high inflationary period? Or is it because tariffs are being knocked down? It doesn't really matter. What matters is that this is perhaps the best arbiter we have for the collective us feeling the way we do about the state of the economy. So for check-ins this week, we did have a 3-year note auction here at the top of the hour, which not usually something that we pay much attention to. It was the biggest stop through since February for what it's worth, even though there's no 3-year note futures. You could look to ZT, you could look to ZF, which is the 5-year futures. ZF here today off the lows. Later on this week, tomorrow, in fact, Wednesday, in fact, we are going to have our 10-year note auction. And then Thursday, we're going to have our 30-year bond auction. So serendipitous time to come back to work, Thomas, because we will have both notes and bonds on the docket here the next few days. Quite frankly, holding 112 through Wednesday's note auction is really all we could ask for, at least in the short term. There's a lot of time to expiry on the way that I'm chasing this market right now. But if by Wednesday afternoon it's a bad auction, we're through 112, I'll just cut the losses and move on and try to find something else to do.
Yeah, I mean, I pretty much agree with everything you said. The 10-year, the 30-year bond auction, those are always the big events in the market for, auction wise. You don't focus usually on the 3, the 5s, stuff like that. But I was thinking about getting long ZB too. I held off on that idea last week when I was looking at ZN. I just think the structure in ZN is a little cleaner there.
Little cleaner. It's also, the vol's better. I mean, I really like what notes and bonds are doing here at the long end. They still feel kind of constructive. When we're looking back over the past 6 months, they're clearly uptrends. You can't take that away. And at least in bonds, 115.5, 116, it's kind of a band here that's been working itself into play as, we'll call it that, right? You hold 115.5 in bonds, you're feeling pretty good about stuff too, but it's an 8 IVR. So I suppose that's the difference here. Typical Tasty way right now, notes are the better bet as far as I'm concerned. If you're looking to do things and say like an out of the money call, get some convexity if this market goes back up to 119, that's how I'm structured here because I don't think the juice is worth the squeeze. But for people who are just trading treasuries for the first time, it's worth noting that ZN tends to be the more approachable product for retail traders. A little bit, not just on the volume side, but in terms of the expirations, the strikes that you're getting into. It's also the tick size. You're talking about a $15.62.5 tick value, whereas for bonds, for ZB, it's 31.25. The overnight buying requirement is likewise about half for notes relative to bonds. So if you're trading treasury futures, take a look at ZN first. It does fit the Tasty methodology a little bit better because of the additional volatility baked in. Again, 17 plus IVR versus 8. And then just in terms of trading, it is a more approachable product for the typical client, Thomas. So it is worth highlighting that here. Of course, if you don't like notes and bonds in the futures market, you could always head over to TLT or any of the other related treasury ETFs. But this is a future show, Thomas. So we stick to ZN and ZB around here.
Yeah, we have to.
We have to. They make us. Don't. Josh is in my ear right now. You better not show TLT on the screen. It's like, okay, it's my first day back, please.
Yeah, and you know what they do to us.
I feel not allowed to say that on camera. Are you surprised by the lack of significant reaction one way or the other in the bond market for the past 41 days? It feels like we start the government shutdown here. We close, 116 and 19 ticks. We're 116 and 30 ticks. Did you learn anything about bonds being a safe haven over the past 41 days?
Not really, but we're kind of still flying in the blind. Bonds too. It is what it is. I haven't read into it too much about anything.
We'll see with these deficits. Maybe paternity leave was the best thing for me, Thomas, because thinking is just so stressful and time consuming. And when you buy deep out of the money stuff, sometimes the best thing to do is just sit on your hands and not get too worked up about it, which is why those 42, 43 call spreads purchased in July in silver futures couldn't have worked better. And not being able to trade from September 15th onward, just because I didn't have the dedication. So I said, you know what? I'm just going to let things ride. I'm not going to make any decisions. Silver's at $50.31 here. Now, getting over the back padding, okay, the current trade is what matters more. So let's go over to the current trade. We go over to SIH6. On Thursday last week, we talked about how there was a new position initiated in silver at 43 DTE, long the 50, short the 50.5. This is one of the call spread ideas that we have been just milking all year long, slightly out of the money, giving yourself enough time for it to decant and open up so you can enjoy the full flavor profile of the gains because it's an uptrend. It's not going to work in every market, but this year so far, buying the slightly out of the money stuff in gold and silver, absent a 4-month window from, let's call it May onwards until August, painful. But you know what? This is back working again. So I'm in on silver, Thomas. We're seeing vol expansion today too as price breaks out. This is a pretty decent 4.5% gain. So we get the IVRs going up from the high 20s now. We're back into 41.7. Beautiful. I think this is a market that's telling you everything you need to say. The entirety of this year, what's been the worldview for gold and silver? It's what we refer to in the macro world as the Mundell Fleming model. You basically just look to see what's going on with fiscal policy and monetary policy. If monetary policy is getting looser and fiscal policy is expansionary, asset prices tend to go up and people tend to go into things that store value, aren't going to be eaten away by fiat erosion. And so that tends to be base metals and precious metals and hard assets and real estate and stocks. And Thomas, if the tariffs are struck down, the government now has this bigger deficit problem they have to deal with. They have to return all this money to these companies and consumers, right? And let's say they're not fully struck down, but Trump decides to send out $2,000 checks to every American over the age of 18. that's adding a ton of demand into the system when we are bottlenecked right now. More deficits, more inflation. Why shouldn't silver finish the year near 55 is my question.
I think it should and it can. I got into a silver position on a short put spread on October 13th. We had a big rally that day. Kept on going up for a few days. I was really happy thinking about selling it. And then we get the big plunge. I've been waiting and waiting for this silver position to come back. It's been causing me a lot of pain. And waking up every morning, seeing that's doing nothing. Finally wake up today. I'm happy. I just took it off. And I would have rolled it to stay long, except I want to get into a long call spread. I don't want to keep my short put spread on it. So I went from a big loss to a pretty decent gain on this position, holding all the way from October 13th, longer than I wanted when I initially got into the position. I should have taken it off a few days after I put it on. But now I'm going to shift for exactly the reasons you mentioned. I mean, fiscal policy, monetary policy. You got central banks buying gold and silver. I think it just makes sense. I think before this was a profit-taking event that really was a big profit-taking event after months and months of, going to the upside. But I've said it before, nothing has really changed with the story for silver and gold. And, if you liked it at a higher price and nothing has changed and then something drops, I still like it. I don't not like it just because it's at a lower price, Who said something like that? Warren Buffett? I don't know.
Well, speaking of Buffett, he announced today he's done writing the annual letters for Berkshire, which is, he's getting up there. Thomas, silver's breaking out. We're getting that move that we were talking about the other day. We finally get the swing here. Maybe this is an inverse head and shoulders pattern. Thursday afternoon, we discussed how you have your left shoulder head, right shoulder here. And with the move down on October 28th, that particular topping pattern on the 4-hour time frame is complete. Instead, the attention shifts to the left shoulder, head, right shoulder of this inverse head and shoulders pattern. And if we were to take a simple Fibonacci retracement here, and we'll draw you from there to the breakout point, you're talking about a move that can probably carry us to 52, which is what serendipity. Where do we have the recent swing high? Recent swing high is about 51.85. That seems like a perfectly reasonable place to look, at least for a short-term move higher. So silver, it has the tenets of another attempt to the upside in place. And it did last week, which is why we got long last week. But in terms of this having some ability to run, I think it's there. On pullbacks, as long as we're holding above 49, I think you got to stay long. You get it in gold too. It's a 52.4 IVR today. So like with silver, you're getting the vol expansion as prices are breaking out. Breaking out from where? The identified range comes in about, we'll call it 39.25 to about 40.50. Add a few bucks on either end. Today, you get the move through 40.50, 40.55. That swing low that you have on October 24th comes in at 40.55.70. And then it's off to the races, which is why, like in our silver counterpart today, you may have seen this hit the tape. Where are we in here? GCG6. This is also now on the follow page, long the 43.50, short the 4400. I think you got to just keep pressing the trades that work. And these are now showing signs of having broken out again. So gold and silver, they're looking good. Buyer on dips because it's worked thus far.
Yeah, don't overcomplicate this story. I mean, it's been in a long trend higher. It's had its sell it moment, and I think nothing's changed. And this is just a good place if you've wanted to get long to finally get in. If you've been waiting the past few weeks.
It looks pretty decent as far as I'm concerned now. Yeah.
And don't worry about, sometimes, in stocks you're saying I see one of these big moves higher after consolidation period. You think it'll cool off for just a little bit before resuming. Silver, we've seen these moves, 1 day big moves, and where it can continue that extension, no problem. It's just, clearing the previous high is going to be, kind of the point where something needs to be decided. And I think the story is still going to be the same when it comes to that. So I think it won't have too much of a problem.
Kind of like the S&P and, assets that tend to do well during inflationary periods. You get the pullback into between the 1 month and the 50-day moving average, gold and silver. You saw this in silver back at the end of July, August, pullbacks into that area. We can mark this off. This is another hold here. The trends, right? Even though they're getting a little away from us, silver was up near $54 an ounce. I can't believe that. Well, yes, I can. That's why we're buying the out of the money the calls there, Thomas. We want to do things that we can't believe aren't possible. But you get that pull back into that 2150 zone, and the market then catches itself. So I'm not going to overthink this that much. That's where to get long. That's where to buy the dip. They're trending. You know what's not trending? Crude oil. Crude oil. Crude oil. What have you been doing here recently? Came in and not surprised that crude's still sucking around 68, sucking wind a little bit lower, sucking wind a little bit higher. It's out of breath. It's been out of breath since Iran and Israel marked the end of their war back in June, Thomas. It feels like you get that, shock here back on June 24th. And 61 has been a good price. I saw this chart and my first inclination was to come in here and put on the short iron condor. It still works, even though it's a 19.4 IVR. My strikes short the 55, 65 guts, long the 53 and 67 wings. If you were to put this trade on today, it's basically a 3-to-1 risk to reward, sitting at a 62% probability of profit. So maybe that's not enough for some people. Maybe that's too much for some people. But my point is, with only a 19.4 IVR and a market that has gone nowhere for the better part of 5 months, you got to bet on more of the same happening. It's not the most appealing trade in the world, saying that nothing's going to happen. But as it pertains to oil, that has been the best bet. It's yeoman's work. So why not keep putting it on? I put it back on. If I'm wrong here, it probably means that I'm wrong about a lot of other things, because if oil goes down too quickly, probably going to be bad for stocks. If oil goes up too quickly, probably going to be bad for bonds. So we want oil to just bob back and forth here and do nothing, as we've been asking it to do nothing for several months now.
Yeah, I'm in a short call spread on oil, 60.5, 61. It's I'm going to keep it on there, but I think I like the iron condor, adding it anywhere around 55, 56. I think it makes a lot of sense. The market is confused. We've had these Russian sanctions, a few weeks ago, helped the oil market, but now it's concerning because Russia has found ways before to avoid the sanctions. There's clever things they could do to still get the oil out of their country. The real problem for oil, as you said, if it goes down too quickly, that's probably bad for stocks because it means that the economy is slowing quickly. One thing that has been helping oil, and it's interesting, not too interesting because there's not enough diesel, but HO futures, heating oil, which is pretty much diesel, that's really been keeping the crude oil complex alive because refiners, if you need to make diesel, you still need to take in oil. You produce diesel, you produce gasoline, jet fuel, all that stuff. So, crack spreads for things like the diesel crack spread, they've been going way higher. And that's kind of helping keep, supply incentivized, especially in the US, near record production. You have OPEC saying they're going to keep producing more. You have a bunch of forecasters saying we are going to be in a surplus market by Q2. Some are saying by Q1. So, the time where oil gets back to 80 is pretty much over for the next year. I don't think that's a high likelihood. I think it's going to bob around, 60, 55. I'd put more likely than not the chance for it is to go down if it doesn't stay the same. So that's the way I'm playing it.
I'd sell the 339 DTE $80 calls, Thomas, for $1.28. That's something you're interested in.
Wow. Yeah, that's like a year away. I don't even know where I'll be at in a year.
So, crude's in an interesting position right now insofar as it's done nothing. I did see a headline come through that Trump granted Orban an exemption to buy Russian oil. Is that really what we're pinning our hopes on as bulls? I guess that would mean that there's more supply in the market, marginally speaking, but we're not doing anything today. I'm more interested in natural gas, Thomas, for a myriad reasons, including the fact that I recall the story of one of our former coworkers who tells me that he's buying natural gas, and as he's buying natural gas, it's 20 degrees in Chicago, and he goes and opens up the tastytrade app, and he sees that his natural gas position is down 10%. So it's snowing a lot in Chicago these days today, and I couldn't help but notice that natural gas has given up all of its gains. So hopefully folks who look outside and say it's cold, they disabuse themselves of the notion that has anything to do with the price action in the market. But this has been quite the run, right? We've gone from 360 up to 440 or so in the span of a few weeks. That's not nothing. It's more than a 20% gain. Is this because of inventories in the US? Is this a reliable bottom? Should traders look at the 46.9 IVR and take this opportunity to deploy some capital in a space that really has no correlation with any other segment of the market?
No, I got 14 days left in. I got a short put spread that I bought a couple weeks ago, 3.85, 3.9. The position is doing really well. It's about ready to get taken off and for me to make another decision on that gas. No, Europe needs a lot of gas. U.S. exports are at very, very high levels. So, demand is being fueled externally. On the other hand, the weather forecast actually looks really mild for going into the middle of November. It looks really, besides for, the Pacific Northwest, I don't know. If you look at something like the 8 to 14 day outlook from the NWS, it's just all red from the Mississippi to the East Coast. So I don't really think demand driven after a rally, I don't think you're going to get another extension higher right away. What I'd be looking at doing once I take this position off is kind of maybe selling a call spread just for a short time, maybe a week, and do that around 4.6, 4.7. But we've had this really nice extension higher. And, I think this winter is going to be pretty bullish for nat gas. I think we'll get back above 5. I don't think we'll do that until maybe December, January, but I think it's coming. There's always volatility in this product, so you have to stay nimble, keep watching it. It's not one to put on and just forget about. But of course, everything matters here. The weather, not only here, Europe, things like that. And I'd be hesitant to get long again after the past couple weeks, just because we've had these moves completely retrace, or almost all of them retrace before. So it could knock you out really quick. So I'd just be strategic with how you're setting your timing and your strikes.
Yeah, you mentioned Europe needing a lot of natural gas. Right now, their storage levels are 3,239, so 3,239 billion cubic feet. That is the second lowest level that we've seen since 2020. Second lowest level that we've seen since 2020. So we're going into winter months, and their inventories are fairly low. You mentioned the warm weather here. I saw that earlier today, too. Right, looking at that 8 to 14 day forecast, it's why for myself in natural gas in the F6 contract, right now I'm looking at a short put spread. I'm with you though. I want to put on a short call spread here too, given the price action, and I really like that 5 area. This would technically turn this into more of this would be a short iron condor then, right? So if I had to do 5-5-1 to bracket it off, it would turn the trade into something a little bit more directionally neutral. Given the reversal today, yeah, I think this is actually the prudent thing to do. We usually don't do things this way around here, but the short put spread, I'd rather turn this into something directionally neutral and look for more chop between the 3, 7, 3, 8, and we'll call it 5 levels here for the next few weeks. Thomas, we have to keep this train rolling, though, because we do have to end a few minutes early here for the production team. Dollar mostly weaker here on this Monday. Interestingly enough, when we look at the breakdown, everything up versus the US dollar except for the yen, even though the yen has just seen JGB 10-year yields rally to their highest level since June 2008. Typically, widening yield spreads would be something good for a currency, but in the yen's case, it increasingly seems like it's a sign of fiscal mismanagement and issues bubbling up across the Pacific, which for us, that's not necessarily in our purview. But you know what, Thomas? I've hated the yen most of this year. So to see it sitting down near the yearly lows makes my heart warm on this cold, late fall day. As it goes, I'm sitting along a slew of long dollar exposure here in the currency market. Short call spread in the pound, shorter call spread in the Canadian dollar, shorter call spread in the euro, long and out of the money put spread in the yen. That's at 60 DTE, the 64.65. I like having a little bit of long dollar exposure because it's still among the most hated trades. So as a contrarian, in certain regards, that's definitely something we will embrace. Outside of that, though, the dollar has got to do something more with what it has in front of it, because it feels like this is a bottoming process that's been going on, and we're trying to carve out a bottom here, and we can't quite turn the corner yet, but it's awfully close. So if we see DXY through 100.50, then I could say with more certitude that we're looking at a better outcome here for the greenback broadly. The euro's got to be the place to play it, though. In my view, it's the one that has the most potential to the downside. You breach 114.75, and this thing is goodnight nurse. That looks like it would be game over for the foreseeable future.
Yeah, it's being rejected off that 21-day EMA. Got rejected a couple weeks ago. It's getting rejected again from there now. I think the short euro is technically it looks like a great short right here.
It's the 118, 119 short call spread is working. It needs to be rolled by the end of this week. So I will be going out to 60 days, putting on that trade today. It's not quite a 3-to-1. It's a little closer to 4-to-1. So maybe a small adjustment to get better risk to reward and closer to that 60 to 65% probability of profit there. And this is exactly, 2.25 to 1. But Thomas, we're going to have to cross that bridge tomorrow. You're actually here with us now, Monday, Tuesday, and Thursday on Futures Power Hour. Jamal joins us on Wednesdays, and then we get Ilya on Fridays. And of course, for those that notice the new Futures Power Hour time, 1:30 Eastern, 12:30 Central, every Monday through Friday. So be sure to come back the same time tomorrow. Tomorrow, even though the bond market is closed for Veterans Day, stock market has normal hours, so we will be here. Taking a look at the calendar, government data is not coming back yet, but we do have the ADP employment change for the weekly basis. So that could move the market. One Fed speaker, otherwise some things to keep an eye on out of Europe and the UK, but not too much to report about. And again, Cisco is Wednesday. No Treasury auctions tomorrow either. That's it, Thomas. It's like riding a bike. It's good to be back. Good to see everyone. We'll be back for overtime later today. Again, 4 Eastern, 3 Central. Myself, Dylan, and Ilya. Thomas, thanks for covering for me when I was gone. And hey, let's go back to making some money.
Yeah, great to have you back.
Cheers. Good luck trading, everyone. See you in a little bit after a brief break. More Tasty Live coming at you.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on tastytrade, named best online broker for options trading. Genius loves company.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Man, welcome to the new time edition of the program. It is indeed a Monday at a brand new time, and what an exciting moment in your day, in my day. Like, we're all here. We made it. We made it to the new same show at a brand new time. So maybe it's going to be kind of a new show. I don't think we're going to figure out what it is we're trying to do. I don't know that the new time slot is going to help us in that regard in any way, shape, or form, but you still made it, man. Like, you made it. We're here. We're doing it. I think this is going to be the new time slot for the indefinite future. And so we're going 1:30 to 2:15 for my central time zone bros and bro sets, and then 2:30 to 3:15 for all my Eastern time zone bros and bro sets. And then if you're in Hawaii or like Colorado or like Italy or whatever, man, you are on your own. I cannot figure that out. But thank you guys so much for being here and being a part of what it is that we are indeed trying to do. If you're watching over on the Tasty Live Network, now we're actually bounced on over to YouTube because you can join the conversation and join the discussion and communicate with your brethren who are also watching the program. You can, of course, celebrate if you are a bull. You can commiserate if you are a bear, but it is a good time had by most. And of course, you can hop in the YouTube chat and you can ask me any questions. You can drop comments, stories, jokes, any trolls that you might have up your sleeve. All is welcome in the YouTube chat. So Josh, bring us into the market. How are we doing? Man, nothing like a little face ripper to kind of keep you on your toes. Even the S&P is up 98. Risk-free instrument, also known as the NASDAQ Futures, extremely high-risk product, at least in theory. But in practice, up another 520 points. You got the boomers up 350. You got the Russell 2000 Futures Index up 33 on the day. All is well in the world. Man, you got bonds down a little bit, but who cares? You got notes down a little bit, but who cares? You got oil up 40 cents, but who cares? Take a look at the Shifties, up 110 on the day. Man, where are my Hunt Brothers at? I got me some Hunt Brothers pizza over the weekend, a little cheese and pepperoni. I had to help out the cause. I was like, I don't know that they're going to make it. Oh, they're doing just fine. Silver up 229 on the day. Wow, that is a move. Silver back over 50. You got gold back over 4,100. Like, all is right in the world. Man, we're getting Trump stimmies. Man, we're doing 50-year mortgages. Man, I'm ready. Are you ready? Man, I'm 100% ready. Inflation, 17% by the end of next year. But who cares? Doesn't matter. Man, let's get after it. And so there you go. There's a little market commentary for you. It's not going to help you one bit, but it's on par with whatever you might find elsewhere. So the volatility future is down $1.23. And then you've got volatility, spot volatility, the old VIX. Is VIX still in business? It's kind of running that Snapchat business model. Yeah, it's still there, barely. Down $1.37 on the day. So the VIX down to 1770. And there you go. So, all right, so what I want to do today, man, they pumped it. Man, they pumped it hard. Government reopening, blah, 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 like all these kinds of things. And it's crazy. It's crazy stuff. And so what I want to do, let's go through the portfolio. And we'll go kind of one by one position. We'll kind of see where the wind blows us. And then I want to get to you guys got to give me a little bit of time here because I'm so used to the 2 to 245 window, right? So that's nice because I know right around 222 or 223, that's when I want to kind of shift over to, YouTube chat. Like, let me see where you guys are at, questions, comments, stories, jokes, and all those things. Now, man, I got to do like some Julia Spina math because now we're like running over into like a new hour. And it's like, man, so that the halfway mark. Let me think here. If we start at, hold on, where's my calculator at? Let me at least get my fingers and my toes out. If I start at 2:30, hang on. If I start at 2:30 and I go to 3:15, that's still 45 minutes, right? So there we go. Half of 45 is around 22. So that puts our midway point at 2:52. Man, what a janky number. We got a janky strike now baked into the show. Right, so 252 and a half is the halfway mark of the show. Man, that is about as janky as it gets. And so I kind of feel like one of those option chains, like after an extraordinary dividend, where you see like, okay, I could sell the 125 strike, or I could sell the 125.71 strike. It's like, I don't know, man. Like, let's go ahead and have a little good time with it. But anyway, I digress. And so I'm excited too because I got a little. So we went with the tried and true today. So we went with the sour pink lemonade, which I've talked about this many times before on the show. So if anybody's affiliated with Ghost or anybody knows somebody that knows somebody that knows somebody that's affiliated with Ghost, I'm still looking for a sponsorship. So hit your boy up. I'm ready for it. Sour pink lemonade is number 2 behind sour green apple. Oh, which is, I got a little ghost in the eye there, which is good. It's really, really high on the list. All right. So anyway, let's do something trading related. Let's take a look at the portfolio. And I see you guys in the chat, by the way. You guys made it to the new show, man. Look at the core position. The core position is unfazed. I see Flower Power in the house. Danish Dynamite, kind of a new addition to the core position. Wolf, Sergio, man, Ash Finn, Sam L, Orgdenu in the house. Man, scramble everything in the house. Emmett Morrison, the core position, you guys are unfazed. That's what a core position is supposed to be. Like, you're supposed to just roll with the punches. Like, you're supposed to be there through thick and thin. Like, you're supposed to be there, come hell or high water, and you guys are here. And so that's some pretty good stuff. But let's go through a couple things. So number one, let's talk about our MES strangle. So, we put on these couple of positions last week when volatility was high. Obviously, the sky was falling, blood in the streets. We were like 3% off of all-time highs. I mean, the fear index was like, I don't know that it's ever been higher than what it was last week. And so we put on a couple of, high volatility plays, selling that high volatility, and we did it through the futures options with MES and MNQ. So with MES, you've got the stock or the index, I should say, up 100 points today, up 97 now. We've got the 6,400 put and the 7,000 call. Now, right now, you can see that we are comfortably situated between our two strikes. Like, there's still a ton of room between the put strike and where the stock is and the call strike and where the stock is. Now, obviously, with the stock being or the index, I should say, being so strong today, we're not tested yet. I don't want to really use that term because it wouldn't be fair to being tested. But we're kind of catching a whiff of an iota of a morsel of a possibly getting threatened to be tested. We're still 150 points away. So should we do anything? This is an interesting question because, some people within the Tasty, universe and some of my own, brethren and the show host on the network, they like to be aggressive with adjustments that meaning once their delta gets kind of out of whack too much on one side, even if they aren't tested yet, they'll make an adjustment. they'll make an adjustment to neutralize the delta, be a bit more delta neutral, and put a greater emphasis on the extrinsic value in the position. Do I think that's wrong? No, I don't at all. Do I do that? Not necessarily. And so this kind of gives you a couple of different ways to look at the markets. It gives you a couple of different ways to consider your positions in terms of the adjustments and the management of a given position. You can be hyper aggressive with neutralizing delta and like in this case, rolling the puts up when the call side is, again, it's not tested yet, but the market is moving in such a way that it's getting closer to potentially being threatened to possibly potentially being tested one day in the very distant future. And so when that happens, you can be aggressive. You can roll the puts up and you can neutralize the delta. Personally, I like to be a bit more patient. And I honestly think it's equally as effective. And maybe there's, studies and maybe there's research and maybe the Tasty research team has shown the Dr. Jim method is completely bunk. Like, don't listen to Dr. Jim, but you guys already know that. If you've been following the show for any length of time, you already know not to listen to me. You already know that you should be doing the exact opposite of everything that I say. But still, I'm going to tell you the way I see it because that's the way that I see it. I kind of like more of a hands-off, laissez-faire approach where it's like, hey, if the trade is working, if the options are still out of the money, there's not a great need. There's definitely not an urgency to get in there and start fiddling around with the strikes to neutralize directional bias. I would much prefer, given my outlook on the market, it ebbs and it flows, and I still am a short-term trader. I'm taking a ton of heat on the Monday morning show, by the way. If you guys saw it this morning, I took even more heat. It's like, man, it's like talking to the momentum bros now. It's like, wow, it's like, this is crazy. I'm standing on an island all by myself. But still, I will stand there just like Tom Hanks did way back in the day, and we'll just see what we can do with Wilson and ourselves and just do the best we can do. But when it comes to looking at the market, that wasn't my best analogy, but it's, that's right there in the B- lane, and we got a new time, got the same B- analogies. I mean, that's a little bit of familiarity for you guys there, so there you go. But if you think about the market ebbing and flowing, and if you also kind of think, all right, after it goes up, it tends to kind of come back down a little bit. After it goes down, it tends to kind of come back up a little bit. I would much prefer right now, rather than rolling the puts up, I'd rather just sit tight, just in case some things go down. Now, of course, you may think, all right, all is well in the world. This thing is never going back down and all those kinds of things. Yeah, I mean, you've got to, inject your own personal bias, on top of all the things that we do. And so this is how I see it, though. And I really like when the options and the positions are still out of the money, not doing anything. Like, let me sit tight. It's working. And it is doing exactly what I have politely asked it to do. And so I don't see a great reason to go in and kind of usurp and kind of override that process. And so that's how I see it with MES. So there's about 11 minutes to basically say we're not going to do anything. So new time, but you got the same long-winded verbiage that you had at the 2:00 spot. So, there's a little bit more familiarity for you guys. So MES, there you go. All right, MNQ. Now this guy is a little bit different. Because again, I'm no Julia Spina, especially given, the time clock math we tried to do earlier on the show, and I'm pretty sure we botched it. It looks like we're at about 50% of max profit already. Like, I think we put this trade on like Friday or Thursday of last week. It's only been a couple of days. In fact, let me bring up the chains here really quick. Let's bring up the Allison chains and let's see. I think it was Friday. Hold on. It was, we did this trade back on 11/7. Okay, so 11/7. Wow, it was Friday. Man, that is crazy stuff. Well, obviously, you've got a 530-point zipper to the upside in the old NASDAQ. Forget about that negative skew garbage I was talking about this morning. This is some positively skewed market action if I've ever seen some. But you've got November 7th. We did this guy for 423 points. It is currently marking at 209 points. Again, I'm no Jacob Perlman. I think we got there. I think this is what we've wanted the whole way. Right, we've got about 50% of max profit, and then, that's going to be that. So I think we close out of MNQ, and we move on to greener pastures, potentially. Let's see. Let's go in here. Now, the MNQ markets, man, they can be bad. They can be really, really bad. Okay, this one's actually not too bad. Before I close this out, let me pause and look at the bid-ask spread differential. We've seen some crazy markets lately. Like, if you saw the show, if you go back to November 7th, go back to when I was putting this trade on. I mean, I just had it there in the chains. It was like 215 or 220 or whatever. When we were putting this trade on, I remember we were looking at the markets. They were like 300 bid and like 900 offered. Right. Again, these are the Vinny Batista markets. He does the MNQ pits on Friday afternoons. And so these are Vinny's markets that would explain why we're 300 bid, 900 offer, because he's learning from the best. He's learning from Tony Batista. What do you think Tony Batista did back in the 70s or 80s or 90s or whatever? He was slinging jeans out of his trunk in the evenings, and he had 300, 900 MNQ markets during the day. Like, that's what my man was doing for years, decades on it. So obviously he's going to have Vinny follow down the exact same path. And so for us here to see MNQ only 8 or 9 points wide, that's pretty nice. Like, I think we're going to be able to get filled here pretty, it should be about a lot easier than it was on Friday. Now, MNQ is still not amazing to get filled. So, like, if I go in at the mid price of 208.50, I don't think I'll get filled. I think we're going to have to do a little bit of discovery on that, which is fine. I don't mind doing a little bit of discovery, but I don't like to do a lot of bit of discovery. That's where I kind of draw the line. So 208.50. Let's try 209.25. I think we might get filled, actually. I think it's possible. Yeah, so there you go. We got filled at 209.25. So again, not too bad. Like, not too bad at all. So there you go. There's a little MNQ action to start off the day. Let's now talk about Apple and Amazon. Again, I'm just going to kind of go top down, and then we'll probably, wherever we leave off, we'll pick up with that guy tomorrow. Tomorrow's a weird day because it's Veterans Day. So thank you to all of our veterans for all of your service. I mean, the reason why America can be free is because of all the things that you guys have done. So thank you so much for your service and your sacrifice. Like, it really means a lot to me personally. And so thank you to everyone out there that is either current military, ex-military. Like, man, thank you guys so much for your service. But with Veterans Day tomorrow, I think the bonds are closed. Bonds are closed. Equities are obviously open. Options are open, but bonds are closed. And so that changes the liquidity dynamics a little bit for, the daily trading. We're not quite as liquid as we might normally be otherwise. I don't know that's going to have a super pronounced effect on what's going to happen. But anyway, that's a little something going on tomorrow. But for Apple and also Amazon, let's do these two guys together, because with Apple, I am, with Apple, I'm short a 275, 285 call spread. And you can see right here, we're still out of the money, barely. Josh was telling me there was some news about Apple kind of halting or slowing down production on, MacBook Airs or whatever else. And you can see that the stock is not necessarily following suit with a super, super strong market where you've got the NASDAQ index up over 2% and Apple is barely up. It's up, what, about 0.5%? I mean, that's a laggard if I've ever seen one. And so Apple only up a little bit. That is helping our call spread here. Josh said it was the iPhone Air. But he told me it was the iPhone MacBook Air Pro 17. That's what he told me before the show. Now he's changing his story. And so whatever Josh is saying, it's his first day back, man. Like, you got to cut my man some slack. Like, he's been on a 4-week vacation. My man's been just chilling for 4 weeks, just watching Caleb Williams highlights for like 24/7, like just back to back to back. Now there's only like 2 or 3. So he's watching the same 2 or 3 like over and over and over again. That's a tough go. That's a pretty tough vacation, but he's back. Chris Vecchio's back, man. Everybody's back. Like, look at this. And we got booted to a new time slot. Like, I don't know what that says about us, but here we are. We're doing it. Apple 275, 285 call spread. You got the stock at 269. We're up a little bit on this call spread. I'm going to sit tight right now. I don't want to take this off yet. This was a piece from the Apple earnings a week ago or 2 weeks ago, whenever that was. And let's just sit tight. There's no reason to do anything, I don't think. We can just, again, it's out of the money. Unless your bias on the stock or your thesis about that company or whatever has fundamentally changed, I don't really see a good reason to exit early from a defined risk position. Now, again, if this gets to like a really economically significant number or it gets to 21 days to go or whatever, that's a different story, I think, and you can kind of handle that on a case-by-case basis. But for right now, we've still got 39 days to go. It's still in a pretty good spot. We've made 50 cents on the trade, but I don't see any reason to kind of, pull the ripcord on this guy. It's so early. Because, if you do that across the board just over and over again consistently, then it can be really difficult potentially to make money in the end. And that's what we're trying to do. Like, we're not trying to win a bunch of trades. We're trying to make money. Like, I'm not trying to mitigate my losers. I'm trying to make money. Now, winning a bunch of trades, I'm thinking is going to make me some money. Mitigating my losers, I'm thinking is going to make me some money. But it's important to remember that these are all just means to an end. Like the end is the portfolio return. Like the end is, are you making money? That's really what ultimately matters at the end of the day. And so all the things that we talk about, of course, we're doing that for that sole purpose. But when you think about, the simple fact that, I'm up 50 cents, I'm up 60 cents on the trade, I could take it off early. One thing I've seen and kind of a stick in the mud that's really kind of surprised a lot of traders is they'll manage their trades like super early, like before 50%. So 20%, 30%, 33%, whatever, which is fine. It's all well and good. But you just, again, here it is again, for the 147th consecutive day, you've just got to know what you're signing up for. So if I'm going to manage my trades even earlier than 50% of max profit, which is already, that's reasonably early, right? I think we can all agree that you're not riding it out to the end. I'm not looking to squeeze every penny out of this position like I'm taking it off early. If I'm now taking that off at 35%, 32%, 37%, 28%, whatever, I'm going to need, and this is just math. This is not my opinion. This is not Dr. Jim conjecture. This is just math. You're going to need an even higher win rate to make those numbers work in the end. That's just a fact. You're going to need a higher win rate to make those numbers work in the end. Now, thankfully, we're equipped to do that. Like, thankfully, you are already set up on that path. So that's the good news. But you have to understand what the gotcha is here. We got the gimme. What's the gotcha? The gotcha is I'm going to need that higher win rate to make these numbers make sense in the end. Because ultimately, does it really matter if you have a bunch of winners and some losers and you don't make money in the end? I don't think so. Like, I really don't think so. So anyway, there's a little soapbox, brand new soapbox edition for the 2:30 slot. I'm going to say it was about the same quality as what you would find at 2 o'clock slot. So right there in the C+ to B- range. So Apple, there's another 11 minutes to basically say we're not going to do anything. So we've actually burned half of the show already, and we haven't done a single thing. So if I've got new viewers, you guys are probably looking for Jamal. I am not Jamal. And now sometimes in the summer, I'll have a pretty nice tan. So you might pop in and be like, okay, that could be Jamal, but not in November. Like not now, not even in Florida. In fact, tomorrow, the high tomorrow is like 45 tomorrow in November in Florida. I mean, that's some Windy City stuff, man. Like, I didn't sign up for that at all. But unfortunately, that's what Mother Nature has in store for us. So if you're brand new to the show, welcome to the show. I hope that you stick around. I hope that you stick around, whether it's my show or a different show on the network or whatever. Like, thank you guys for being here. It's only because of you guys that we can do what we do. So I really, really, really appreciate you guys so much. And so that's Apple. Let's talk about Amazon, and that might be it for today. So for Amazon, we got Amazon 248. We've got a short 235, 245 call spread. And, this guy is not looking so great, and it was looking better coming into today. But with the extreme market strength today, obviously Amazon is kind of following it higher. Amazon's up a little less than 2% with the overall NASDAQ index. Look at ES up 100 now. Man, look at that Hondo right there. It's just staring you right in the face, man, just ripping people's faces off. 1,000,000%. Like we all thought they were going to squash him last week. And then Trump was just sitting there, man, counting up his Trump coin. He's like, I'm not going to let it happen. Not going to let it happen. We're going to pump it. We're going to pump it over the weekend. And so even the S&P is up 100, NASDAQ up 531. It's crazy stuff. Amazon up $4. With our short call spread, you can see I could save about $3.50 off of the maximum loss if I took it off right now. But for the same reasons as I'm going to hold on to Apple, I'm just going to hold on to this guy too. Now, this one's a little bit different because it's a bigger call spread. Instead of being $5 wide, this guy is actually $10 wide. And so obviously there's more risk on the table. And that's definitely something to be mindful of, which actually that kind of triggers like kind of it's somewhat related. This isn't a completely unrelated tangent, which I can't guarantee that will be the case for most of my tangents if you are brand new to the show. When it comes to your position sizing, one thing that we harp on a lot is, hey, you want to stay small. I talked about that with Nick and Tony this morning, of course, because it's very important when it comes to guarding against the big outlier moves. Like whether you're a momentum trader, contrarian trader, like however you see the markets, man, you've got to have your position size in check. If you don't have your position size in check, it's just a matter of time. It's just a matter of time before they take you out behind the woodshed, and that's all she wrote. And so when it comes to position sizing, we very frequently say, 1 to 3% defined risk, 3 to 7% undefined risk, or, some range that might be close to those two. Those are the ranges that I personally use, but there may be some kind of, give or play around the edges on those ranges. But one thing I think doesn't get enough love, and it's my fault too, like I should be talking about this more often, the position sizing consistency. And I'm not really talking about undefined risk because the buying powers can vary quite wildly from one position to the next, even if it's like a similar price stock and like a lot of things about the two underlying stocks are similar, but one might be super high volatility, one might be a lot lower volatility. So obviously the buying power effect is going to be different between the two. It's more challenging to match like dollar for dollar or even get close for that matter with undefined risk. So let's leave that on the shelf right now. We'll pull it back down. We're not going to put it behind like the molasses where we're never going to see it again. Like we'll bring it back down at some point in the near future. But defined risk, you can be a lot more consistent with your position sizing. Like you just can. Like, you know, you can basically kind of fine tune this thing to whatever you want it to be. And so like you guys can see with like Apple and Amazon, that's kind of a problem here. Like one of them is only a, $5 spread. The other one is a $10 spread. So essentially, the Amazon trade is notionally worth about double the Apple trade. Now that can obviously be good or it can be bad if it works or it doesn't work. But when it comes to figuring out like what happens in the end, like figuring out probabilities and wins and making money, losing money, whatever, this is another thing that I've seen happen to a lot of traders. They're like, hey, like I feel like I've got a good handle on my strategy. I feel like I got a good handle on the adjustments, the probabilities, like everything is kind of shaking out, but I'm not where I thought I would be. Like what's going on? And then you kind of pop open the hood and you kind of dig in there a little bit with like, some carburetors, some serpentine belts, maybe a spark plug or 2 or 10 or however many spark plugs you have under your hood. I have no idea. Once you take a look though, or I have someone else take a look in my behalf or on my behalf, what you find is the consistency is not there. Like there isn't the same notional value matching from one position to the next. And that can just be a problem. And so, you're never going to get it to the dollar. Like you can't necessarily fine tune it like just like that, like perfectly from one trade to the next. But if you're consistently running like $10 or $15 spreads over here and then $3 to $5 spreads over there, that could become a problem in the end. If you end up, catching some losers on the big ones, but some winners on the small ones, the probabilities worked out, but because of the position sizing inconsistency, it just, you didn't kind of get where you wanted to go. So that was just something I kind of wanted to bring up there. So, all right, let's go to, let me see where you guys are at though. Man, where are you guys at? I see you guys. Let me try to surprise and delight somebody in the 230 window. Man, where are we at? 230 window. Let's see. Danish Dynamite is in the middle. Says Dr. Jim, cancel crash edition. That's correct. We got the cancel crash edition. We've got the EMSP is up 106 now. NASDAQ up 550. Danish Dynamite says, think we will stay in this range for a while. I just put on a delta neutral double calendar in the SPX. I'm looking for 10%. I'll tell you what, double calendars, I haven't done this strategy before. I think this is something that Mike likes to do a lot on Options Trading Concepts Live, which, by the way, if you're looking for Jamal, he's not just wandering aimlessly around the streets. I mean, he may do that in his off time, but in terms of where you can find him on the network, he is with Mike now for Options Trading Concepts Live. And I know they're on the SIBO floor. I think every Thursday morning they're on the SIBO floor. And so that show is going to be amazing. No offense to little Nicky Batista, but a little uptick on Options Trading Concepts Live for us to get Jamal in the Options Trading Concepts Live. But then we also had an uptick on the morning show by getting Nick over Tom. And so, man, again, not unlike this market, there's just upticks everywhere. It's a bull market everywhere. It's the greatest bull run of all time. This time is different. It's never going to end. And so don't worry. Of course, we're going to crash like 15 to 20% pretty much any day now. But for now, just ride it while you can. And so double calendars, though, I think it's a very interesting way to kind of create a bit of a strangle-like strategy, but it obviously has more subtleties and nuances to it that I'm not quite well-versed in, and so I'm not even going to pretend like I am and try to kind of muddle through what's going on with that strategy, but I like it, man. Like, I think Mike's had a tremendous amount of success with that strategy. And so, all right, let's see. Let's go to the beginning, though. Where are we at? We're in the very, very beginning. So I'm going to the YouTube chat now, by the way. If you guys are brand new to the show, I usually do the YouTube comments about the halfway mark of the show. And so we are we're beyond the halfway mark of the show. And I have to get done a few minutes early. So lots of changes are happening. But let's see. Org Denu's in the house. What's going on there, Org Denu? Greetings from Italy, Dr. Jim. I'm watching your show with my wife. I hope you have a wonderful weekend. Man, that's amazing. Thank you. And man, thank you so much. So hello to Org Denu's wife. And thank you so much for, allowing Org Denu to persuade you to watch the show And your husband is part of the core position. He's here, I think, every single day or most days. And it's amazing. I've emailed back and forth with Orgdenu as well. And so I appreciate you, my friend. I appreciate you so much. Sam L's in the house. What's going on there, Sam L? Happy Monday, Doc. How was the weekend leg day or dad bod preservation mode? Yeah, I'm not necessarily trying to preserve the dad bod. I'd maybe like to move beyond the dad bod, but we may just settle back into kind of, some dad bod mean reversion. But did we hit the gym or just hit the fridge for some high protein recovery snacks? Yeah, we did a little bit of both. And see, that's the problem, right? That's the problem that I think a lot of us face. It's like, man, I really, really, really love training, and I really love squats, and I really love presses, and I really love, lunges, and I love all that stuff. But man, do I ever love me a chocolate chip cookie or 2 or 3 or 6 as well. And so it's a very interesting bit of tension that we have to kind of navigate on a daily basis, but we're doing our best. And by doing our best, I mean, we could do a whole lot better. And so hopefully we'll figure it out. But Sam L says, did Vecchio take Dr. Jim's spot? Not the same. B- humor, energy, too much logic, and not enough creatine and cast. Yes, too much logic for sure. I can definitely agree with you on that regard. No, we just have a new schedule now. So like I said, I think this will be our slot moving forward. And so scramble everything. Nothing says Monday like Dr. Jim and the Power Hour show. Man, yes, Dr. Jim's Power 3/4 of an hour. Glad to see you and appreciate you. Hope to see you Thursday in the after show where B- humor thrives. Yes, I will be there. I will absolutely be there. I got the green light from the wife, and I'm very, very excited to pop into y'all's Discord, and we could talk about whatever you guys want to talk about, man. I'll give you guys the recipe for Daddy's chicken if you want. We can do whatever you guys want. It's all good. I could even give you guys the recipe to tuna fish and applesauce if you want. Although it's fairly straightforward. I think we've already got that covered, but we can talk about that too. It's whatever you guys want to talk about. So let's see. Oh, Sam L says, Doc, our favorite triple threat earnings lineup tonight. Let's see. We've got Rigatoni has earnings tonight? No, there's no way. And then BBAI, never heard of it. And then Wolf. That's not even the Wolf, though. That's Wolf with a U. That's like a Jeff with one F or like a Scott with one T. It's like that's not the real thing, man. Like you're trying to pawn off a generic, substitution, a generic swap. I see what you're trying to do there. Time to burn some stacks of cash and maybe summon the Fade Doc strategy for one last encore. One last? No, man, we're just getting started. But I'm going to pass on all that garbage, especially Rigatoni, because, man, did we ever get burned on Rigatoni? Let me bring up my activity page here. It was RGTI, right? Yeah. Rigetti Computing. Let me go back like 120 days, and you guys can just see. I mean, it was bad, man. It was real bad. Like, we started the trade there for $3. We rolled it, and we finally retired it for buying it back for 16. I think we ended up losing about $3 on the trade, maybe. Let's see, what is that? 7, 12. Yeah, $2 or $3 on the trade. So ultimately, it wasn't too bad. We could look in the chain to get the exact number, but it doesn't matter. Like, we lost a couple bucks on the trade, but man, it could have been a whole lot worse because we were riding this thing through like Rigatoni, like figuring everything out. Like, I think Rigatoni like bought out Penne. It bought out Bowtie. I'm like, this is not good, man. We're seeing the consolidation in the noodle space like before our very eyes. And this is not good for us because we're short Rigatoni. Like, I need Penne to come back. Like, I need Farfalle to make a comeback. And they must have at the very end there because we got out for a very small loss. And so I'm pretty happy. But I'm not touching Rigatoni earnings. No chance. And so, but I appreciate you, my friend. Big Deal Donut says Green Shirt Monday. Nope, no Green Shirt Monday. I had to keep you guys guessing. I know you guys were waiting for it. It's right over there, actually. I could put it on like mid-show, but we're not quite to that point yet. I don't think we need the clicks that badly. And that will probably backfire in a really, really big way. And so let's see. Let's go. Oscar everything says get ready for that ratio spread for earnings and Wolf. Not touching it. Time to gain back some stacks of cash burnt up in Chipotle. Not touching it. I'm not touching Wolf. I'm not touching Chipotle. I'm a new man. I got a new time slot. Like, I'm ready to go. Like, y'all talking about logic. Like, this show is just going to be, it's going to be all logic from start to finish. Like, everything is just going to make logical sense. And you'll see, we'll probably start tomorrow. And so, Sam L. Doc, when's the epic mashup between the momentum traders and the B- humor traders? That collab might just break the market, or at least our P&L open bros. It might break something. Again, I don't know how to navigate my momentum trading brethren now. It feels very, I don't know how it feels. I can't really describe it, but I'm going to stand my ground. I'm going to do my best. But now, I mean, I'm not taking on one Batista. Now I'm taking on two. It's plural Batistas. Like, that may look easy on your end. Ooh, it is not easy. It is not easy at all because I've got and I got to make sure that I understand like the Italian ins and outs, not one time, but two times. I got to make sure I understand Italian ins and outs from like, the 60s and 70s with the, the elder Batista. And now I got to understand like the Italian space for like, the 2000s and the 2010s for the younger Batista. So it's challenging, man. It's very, very challenging. It's a pairs trade where it just never quite works out. Like you're always kind of getting burned on one end. It's like, this doesn't even make sense. Like, how am I never not winning on this trade? That's exactly what Monday mornings feel like now. And so, but let's see. Oh, Scramble Everything says, where is the wolf guy? Yeah, that's true. Today is his day to shine. Emmett Morrison, Dr. Jim, today we get to find out if our rigatoni is uncooked rocks, overcooked mush, or cooked to AI Dante perfection. I see what you did there. That's very, very good. Monday night, surely you'll show us which way not to order this entree. I'm not touching it, man. I'm not touching it. We're not trading earnings anymore. It's over. It's done. Like, I'm not doing any more earnings. Now, I don't know what's on the slate for tomorrow, so we'll take a look at what Tuesday's schedule looks like, but we're not trading anymore, man. I'm done. I'm not doing it. Not touching rigatoni, not touching any of that stuff. We're just doing indexes. We're just keeping it really buttoned up, and that's just, that's what the new show is going to be all about. And so let's see, Scramble Everything. Dr. Jim, make sure to check out CRWV. Is that CoreWeave? And the leftover BPR special for their earnings. Selling a December 85 put is like free money. Oh, yeah. What could go wrong? Love me some free money. Love it. Free money disguised as, we're going to be testing on this for the next 3 to 6 months. And so if I go to CoreWeave, is CoreWeave today? Oh, yeah, today. Not touching it. Not touching it. Man, you guys are trying to goad me into doing this. You guys are trying to coax me into doing this. Not touching it. Not interested. Thank you. But check back tomorrow. We may do a little something. And so if you go to, there's Wolf. What's going on there, Wolf? You made it, my friend. Appreciate you. Ashvin, what's going on there, Ashvin? Very excited about Thursday. And so thank you again for the invite. It's going to be super fun. Whatever you guys want to talk about is totally all good with me. And so eMedia, House of Fence, are they done? No, they're definitely not done, but he's got some panels up. I'm very excited about this. Again, I've been taking some serious heat on this fence, man. Like in the beginning, like my strikes weren't tested, but I started to move, right? Like Autumn would say some things, and she would this and that. And I'm not going to do it myself. Like I'm a numbers guy. I'm a math guy. I'm a B minus humor guy. I'm not a putting up a fence guy. Like it would be a train wreck. Not only would it take me 7 times longer than a guy who knows what he's doing, but it would all be janked up. It would be complete, just like my time slot now. I'm trying to figure out the midpoint of my time slot. Same type of deal. And so it's like, I got to get somebody out here to do this. I got to get somebody out here that, can do this much better than me. And so he's not done yet. He's probably going to take the rest of the week, but we've got some panels up. The old fence is all gone. And so it's very, very fun. Kids are very excited. Everybody's excited. And so, the fence is going well. So we'll see. I'll keep you guys updated, of course. Sergio says, greetings, Dr. Jim. What's going on there, Sergio? I appreciate you, my friend. Thank you so much for being here. Joel James, Dr. Jim, how does one manage a leap? Specifically, if you are early in the trade and a huge move up happens. Thanks for all you do. Plastic fences are ugly. Yes, I agree. But they're not plastic though, right? They're vinyl. Is that the same thing? I've always seen in the fence world, which again, I wouldn't even consider myself like a random traveler into the fence world. I am just a passerby just on the outskirts of town. So I may have no idea what I'm talking about. But I think it's wood and vinyl are your two options. There's no plastic option. Obviously, there's a chain link fence and stuff like that. Like if you're, from like 1982 or whatever. I mean, my parents, the house I grew up in, when I saw Mama Schultz and Papa Schultz like a couple weeks ago, they've still got the chain link fence. So I'm pro chain link fence. But I'm just saying, like 2025, it's like, all right, we're probably going wood, probably going vinyl. I didn't even know plastic was an option. But Joel James says, how do you manage a leap? Specifically, if you're early in the trade and a huge move up happens. Okay, so I'm assuming you mean a leap call because I think you would have specified that this is a leap put that you're getting crushed on. If you have a leap call and you get a huge move up, you have to keep in mind this is exactly what you want, right? This is exactly what you want. So in my opinion, I would treat this very similar to how you would treat a naked stock position that you plan on holding for a while. If you plan on holding it for a while. If you plan on holding this for a long time, and I'll address you if you want to get rid of it quickly too in a second, but if you plan on holding this for a long time, then, thinking about if I had a stock, if you just had shares in the company, right? And this is something you want to hold for a long time, that's an important distinction because there can be times when you're like, hey, I'll just hold the naked long shares. I'll just hold the naked long call leap or whatever. And I like having the the unfiltered kind of, completely clean delta to the upside, so that if it keeps running higher, then I get paid, not dollar for dollar because it's a leap, but I still get my 90 cents on the dollar, my 95 cents on the dollar, 87 cents, whatever it is in terms of the delta on the leap. If you want to do that, you should do that. But then if it's an investment style covered call or an investment style stock or an investment style leap, now when the stock runs up, you have a lot of leverage kind of in your corner here. And so you can use the huge run up as an opportunity to sell a call and just be, and just cover the position. Like get another avenue of profitability kind of working for you. What if it's a trade? Well, I'm going to say that that's not going to happen as often because by the simple fact that you chose a leap, you're obviously, kind of in this to win this. You're obviously kind of in this for probably a few months. There can be times, I suppose, when traders might choose a leap, and if they get a huge run up, like they're done with the trade. If that's the case for you right now, then, I would just potentially be done with the trade. Based on what you said here, Joel James, and I'm kind of speculating, I guess, but I'm assuming this is kind of a longer term play. And so if it is, if it's a trade, it's one and done, you got the move you wanted, just be done with it, don't think about it. But if it's more of like an investment thing, you could go either way. You could keep the uncovered delta, so you get the clean move higher on the 95 cents, on the dollar or whatever, or you could cover it with a short call. It's up to you. I don't know that there's necessarily a right or wrong answer. It's very similar to if you have naked stock in a company that you feel good about and you're going to hold this for a very long time. What do? Do you just hold the stock, or do you, sell calls against the stock? You could go either way. It's really going to be your call. Man, I'm getting 2-minute warnings from Josh just jamming me up. I got it, man. Don't worry about it. And by that, I mean, I'm going to run all the way to the end now, just for that 2-minute warning. But anyway, Ashvin says, no, I appreciate you, Josh. You know that I do. So Ashvin, let's see. Lumping Colorado in with Italy. That's pretty similar, I think. Adam Armfield in the house says, I too would like to see an entertaining CRWV trade. I have an 85 put on. Hey, good luck to you guys, man. Good luck to you guys. Not touching it. But obviously, if I was going to play Core Weave, you got to be super bearish. How can you not be super bearish? I don't even know what they do. Do you know what they do? Nobody knows what they do. And so you got to play this thing to the downside, man. That's the only way to do it. So let's see. I see Danish Dynamite. There's Flower Power. Let's see. We had an emergent. We had a Lost Dog sighting? No way. Crazy stuff. All right, there he is. He's back. He's 100% back. Okay, good stuff. And by 100%, I mean he's about 20% back. And so Big Deal Donuts, let's see. Adam Armfield says CMG strikes are very weird in the later expirations. Hold on, let's take a look at that. And I see you guys in the chat. If I didn't get to you guys, man, come back tomorrow. I'll try to get to as many of you guys as I possibly can. But let me look at some Chipotle. Nah, that looks kind of weird. Or that looks kind of normal. December. Oh, look at that. Thank you, Adam Armfield. There it is. Look at that. You guys see those strikes? Look at that. Look at those strikes. It's exactly like my show now. I don't know when the midpoint of the show is. Do you? I have no idea. It's just like a Chipotle strike in the January cycle. Look at these strikes. 27.20, 27.60, 29.40. Like, that's crazy stuff, man. That's really, really crazy stuff. And so, but I guess I'm like out of time. I see you guys in the chat though, man. Look at Wit 7 in the house. Man, I appreciate you guys so much. Thank you guys for being here. Mikos, Ranch. I appreciate you guys. If I did Premium Decay showed up, man, look at you guys. If Andres is in the house, appreciate you guys. If I didn't get to you didn't get to you today, please come back tomorrow. Come back tomorrow. Get your comments in as early as you possibly can. And I'll try to get to as many as I can right around the second half of the show. But I appreciate you guys. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week. with the Forex platform that adapts to your style. And speed. FX marks the spot. Trade it on tastytrade.
tastytrade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Love me, love will love you, love you. Love will love you. Love you. Love you. Love will love you. Love will love you. Love will love you. Love you. Love will love you. Love you. Love will love you. Love you. Love will love me. Love will love me. Yeah.
Hello everybody, Tim Knight here, and we're, I guess, going to end the government shutdown real soon now. It was a record shutdown, over 40 days. I haven't checked the very latest news, but it sounded like maybe another day I'd be back in business. It's a Band-Aid. From what I understand in the agreement, it's going to last until January. So we're in November already, December, January, and then back to this insanity again. But for those of us expecting relatives on planes, Thanksgiving is saved. So, and the market, for whatever reason, is rallying mightily on this news. Why it would be such a big deal to the financial markets that the U.S. government's going to be back in business a couple of months, I don't know. They must have really assumed to be shut down for a long time if this is the big news. But we are green across the screen, triple digit up on the ES, many hundreds of points on the NQ. The two things I'm kind of relieved about are, one, I did lighten up on Friday considerably, and two, I went long palladium. And that helped take some of the sting out, because today's lift in the market pretty much undid all of last week's drop right quick. So I think it's pretty ephemeral what's going on, but time will tell. And I've pulled some charts together to sort of catch up. And as we've got I guess a couple of weeks left of full trading before we get into Thanksgiving week, and just the general malaise and the slowdown of the holiday starts to sink in. So let's check it out and see what's cooking out there in this federal government blessed market. Here's the spider. It is up big. We're up 1.64% on the spider. As you can see, going back here to Monday, Tuesday, Wednesday, Thursday, Friday, we had quite a fall over that week, and boing, up it goes. So we're almost exactly where the lower portion of this red rectangle is the open from last Monday. We've almost exactly Control Z'd the entire drop. So big move up, not at lifetime highs, but a lot closer than it was. And of course, this all pertains to the broken wedge, and that's kind of the key pattern that I think in the longer term expresses what's going on. The cubes are up even stronger, 2.2%. These blasted higher, and then we can zoom in here. The drop was more severe on the cube, so instead of undoing all of last week, it's pretty much undone Tuesday, Wednesday, Thursday, Friday. We're back to where we were here. Again, not at lifetime highs, but undoing a lot of the damage. But the broken trend line, I still think, is very important to heed, because a lot of the oomph behind the bull market, semiconductors, AI, that got some rust on it over the past couple of weeks. And I do not think the fact that Chuck Schumer is going back to work solves all our problems all of a sudden. I also thought it was kind of amusing that there was this announcement, well, not an announcement, just sort of amusing that, oh, we're going to give everyone a $2,000 dividend check based on all these tariffs we're getting. That must be right along with the Doge check that never arrived. So I wouldn't spend it before you got it. That ain't going to happen. But that also caused some level of excitement. Even one article I saw declared that this would mean a big crypto rally because everyone who got the check would turn around and put it into crypto. So the world has gone crazy. But yeah, ain't going to be no check, promise. As far as emerging markets go, also up pretty good, 1.74%. We did get below the trend line on Friday, but we're above it again. So we got a little bit of damage here, and it's really never closed even one time below that trend line in all this period from April 7 forward. Now over in precious metals land, kind of good news, bad news. And of course you can reverse that polarity if you're a bull or bear, but let's just go bullish on this and say good news, bad news. The good news is that this is the kind of fifth positive day in a row, and today in particular, quite strong. GDX, for example, the miners, almost 5% rally. So the good news is that the battering that miners got, gold and silver, all those got, seems to have abated about a week ago, and it's been healing nicely. The bad news is that unlike back here, it wasn't just open air. This level here does represent some minor resistance for this. So if it just sails right by it, fine. But there is a bit of a stopping point here that it has to conquer in order to push higher, because this bounce back is just an answer to this plunge that it endured. So I don't think it's all clear quite yet. XME, which is a blend of precious and non-precious miners, also up nicely over 2%. But here again, we've got a broken trend line. We've got a general downtrend. So, and most of the healing actually took place here on Friday. But all in all, if you look at GLD itself, obviously it's quite similar to GDX and GDXJ and SIL, etc. We've got some positive things going on here. It's conquered this gap already, so that gap's done for. And the next major one is the gap that was created on the highest day here. This was the record high for gold back on the 20th, and then we had a gap down to the 21st. So that's the next little challenge there. But all in all, precious metals a good day, triple-digit day for gold too, just like the ES. So the front month is up $105 an ounce at this moment. Silver in particular is up very strong. Silver's up 4.54% on the front month. And palladium's a lot closer to gold. Let's pull up PALL. PALL is up 2.5%. And let's go back to the good news, bad news thing on this. The good news can be had if we respect this line. This support line, let's just call it 124. Because the bid ask on PAL is pretty wide. This is not a penny wide type market. It's 30, 40 cents typically. A few 100,000 shares a day kind of market. But 124 is important support. Should that break, it completely opens up the prospect of a drop to say 115, 116, that neighborhood. If it holds, and if it pushes past this level, then it really opens up the prospect of a much more substantial rally, which itself is an answer to this tremendous bullish base that's formed here. And we've seen this base many, many times. This is about 2 years wide. And you could absolutely picture this just blasting higher with $200 in its sights. But let's not get ahead of ourselves. As it is now, we've spent weeks just banging around within the confines of support here and resistance up here. So that's the challenge for that. So if gold does succumb to the kind of resistance I talked about, I think palladium will get kind of dragged down into the water with it. Let's look at a few individual items. Early today, I opened a little bitty short position in CoreWeave, CRWV. I like what's going on here. So we have this top, and which sends it much slower, and then we have a very similar top. which top itself is lower than this one. In other words, the recovery wasn't strong enough to create new highs. It's the entire recovery is lower than this beast back here. I believe they report after the close today. That's not why I'm shorting it. And just to be clear, this is probably my smallest position. It's just because I like the chart, but this is a young chart with very little history, very risky. It's the kind of thing you could turn around and it's up 20% after hours or down 20%. So just let it be known that I've got a little position there, and it's based upon that nice rounded top. And as I say, if my data's right, they report after the close. I also noticed that these sort of alternate energy sources, as it were, nuclear especially, are looking pretty toppy themselves. Now, with the whole AI push, what's been made clear is that the choke point for AI isn't developers or chips really, or even applications. It's juice. They need power. And so utilities, and especially newer energy providers, nuclear especially, have had a wonderful year. But in recent months, it has been carving out, I think, some tops here and there. OKLO is one of them. These aren't companies that have been around very long, so there's not a lot of history to go on. But this isn't a bad little top, and I've got a small position on that. One I'd never heard of before until today, I was just kind of thumbing around charts, is this one, NNE, nanonuclear. And this too has a cute little reversal top there. I was going to put in a little position to short that as well, but you know what? The borrow rate was like 23%. So I'm like, forget it. It's that hard to come by. But another one is New Scale Power, SMR. And you can see these charts look awfully alike. In fact, this is the pattern itself, but as I look here, it's really more of a long-term range this has been working with. So we could actually drag it back like so to more of a breakdown beneath that range. And one last one, which I've pointed out before, Vistra, VST. And I think I mentioned the weird reason I didn't short this last week is because the quotes on it stink. I happen to use a data service for my quotes to power my portfolio spreadsheet, and the VST quotes are just loony. So I just chopped it off the watch list just because I can't deal with that, but it's still a really good looking chart. What else is going on? You know, as bad a day as this is for any equity bears out there, there was one little sliver of sunshine, and that was something I shorted last week on Friday, I believe. Centene, CNC. This is, I believe, a competitor to United Healthcare. This is an HMO or something close to that. It doesn't really matter. I mean, I don't base my trades upon, studying the management, the industry, the products. I just look at the chart. But I think that's what they do. And this company had fallen a lot already. In fact, as we go back here, you may wonder, why on earth would you short this thing? Because it had already fallen from nearly 100 down to, it's lost like 2/3 of its value. But I just really like the chart long term as a bearish play. And so zooming in here, it had gapped down massively like so, recovered, pushed a little above that level, and then has kind of sputtered since then. So I did short this on Friday with a stop just above Thursday's peak. And I don't know what news came out, and it really doesn't matter either. But it's had a nice gap down today. It's down almost 10%. So that was the one good whack that I got in my short positions. A few other odds and ends. Just one general thing that I've mentioned from time to time is that as lofty as this market is, and as potent a year as this has been for the equity bulls, the IPOs still on the whole are pretty lousy, which I think is indicative of the poor breadth we have in this market, because you've seen it. The smaller and smaller concentration of stocks that are providing all the muscle to power this higher has become vanishingly thin, just a handful of positions. And as you look at the broad market, and especially to IPOs, you can see under the surface that this is just not a really healthy market in a very broad sense. These weren't hard to find. I mean, here's one, Six Flags. You've probably been there at some point in your life. Symbol FUN. It's probably the best asset they have right now. It's the ticker symbol, but this has been pretty much on a one-way ticket south. So that's FUN. We Ride, which sounds, just from the name, it sounds like they would compete against the likes of Uber and Tesla self-driving technology. I believe this is a Chinese outfit. And it too, actually, as young as this chart is, it actually has a very toppy-looking pattern like so. Let me just tidy this up a little bit. So it's already taken a plunge beneath that. That's WRD. Fig, which is Figma. This was a very hot IPO back when it came public. I guess on the last day of July in this year, but this is skidded down, as you can see. So I think today, even on a strong day like this, I think we got another lifetime low. And so you get the idea. I would also point out as just sort of a kind of an object lesson, a company that I've mentioned in the past as looking bullish, but let's update ourselves. This is Oscar Health, OSCR. Now, Oscar had formed this very good-looking bullish pattern here, and it finished, and it sort of pushed itself higher. And then it began the process of another smaller, but also quite well-formed rounded bottom on that as well. So it was kind of getting ready for a next leg up. However, this is a good example of why it's important to wait for patterns to complete instead of anticipating their completion. Because in this case, as good as it got was about a month ago, and then it started to falter. And importantly, it broke away from the pattern. It basically escaped that setup. And since then, as you can see, it's been pretty nasty. And today alone, down almost 18%. So this is what you would call a failed pattern. Not even a failed breakout because it got close, but no cigar, but it actually slipped below and away from the pattern, as opposed to here when it was a nice clean breakout. So just a good example of why it's important to keep an eye on these things and also not to jump the gun and assume it is going to complete, because it never did. Tesla is recovering nicely today. It's up about $15.50, 3.5%. Not at lifetime highs, though. It's been grinding away in more or less this range for months now. So it's what it's got to do, based on whatever news it may require, is to get above this prior peak from about 11 months ago. And I would also say Rivian, which I've been saying good things about for a long time, but they can't seem to kind of get up off the mat, is having a good few days here. We had our big blast higher last Wednesday and is augmenting those gains today. I don't know if this will finally be the one, because it has time and again, here and here and here and here. It's finished a pattern, a bullish pattern, and then started to launch and then just flopped. On a more positive note, though, it has respected this long-term uptrend, a series of higher lows. So maybe it'll eventually kind of dust itself off and really blast higher. Let's just wrap up with RTY. And things are confusing, things are messy, and why is that? Because the market cannot make up its mind. We've got down, up, up. The longer term, though, is what I want you to pay attention to, because in a lot of cases, we have broken and stayed below these bullish uptrends, and so there is some damage there. And I think this kind of snapback rally we're seeing today, based upon the government, could well be just kind of a one-day wonder. So we will see how tomorrow shakes out now that this news has been fully absorbed. All right, well, good. I will see you here, and thank you, as always, for coming by, and I look forward to hooking up again on Tuesday, where we can see if there's still some government thrills happening or something else has grabbed the narrative. So I'll see you then. Bye-bye.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily, covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with Active Trader Mode. Smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Ring the alarm! Hey, ring the alarm! Boys, turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Jamal, my friend, we are back for the closing bell, and man, has it been just an all-out assault to the upside. You can't get enough of them right now. You've got E-mini S&P 500 futures up 102. We're about 3 or 4 handles from the highs. We got as high as 68, 64, so about 10 points higher from here. NASDAQ up 537. It's the strongest of the group, an over 2% move to the upside. You got some big moves, bounces back really. In NVIDIA up $10 and change. You know, Microsoft is pretty strong today. Amazon has looked good. Google is at 290, approaching that 300 handle. Even like Meta, which has been just a dog, having a nice little day today. Apple has remained strong. It's been just an all-out rally to the upside. Dow up 363. You got the Russell up 29. So everything up around 1 to 2%. The NASDAQ really the outperformer of the bunch. Oil catching a little bit of a bid, Ford/CL up 38 cents, 60.13 per barrel here, higher end of where it's been trading today. Volatility has just been whacked. This 2-day move has just been incredible. Volatility futures down $1.15. We're at 1865. The VIX is now below an 18 handle. We saw this in the 23-ish handle, 22 handle in the sell-off on Friday. So we've had just vol just getting smoked throughout the session today. Bonds are down 5 ticks. There's been some two-sided action there. They've kind of bounced around that 16 handle a couple couple times here. Gold and silver both rallying on this move. You got gold up $107, a little over 2 2/3%. Silver up almost 5% here, $2.23, and Bitcoin, along with pretty much everything else, moving in that same direction. $2,400 on the futures. The spot is down slightly from the open, but man, today has just been. It's the full rebound we've been so accustomed to time and time again. Nvidia down $10 one day, up $10 the next. Microsoft down $10 one day, up $10 the next. These dips are quick.
It's all up. I mean, it's all up, like you said. I mean, look, it's nice because we're getting the two-sided action, right? I think for a couple of weeks there, we were like kind of annoyed that market literally had no bias to the downside at all. We're getting some two-sided action here. You got to wonder on a day like today, if your stock's not up, what's wrong with it? I mean, seriously, you really got to wonder. I mean, there's some surprises, I would say. Walmart's not participating. Costco's not participating. Just looking at the heat map here, PG, and these are stocks that, as far as I know, don't really have any news. UPS and FedEx, big kind of. I would think I would call this a big move to the downside on a day where the market is up like it is, and all these other names are. UPS and FedEx are down 3% and 2.5% respectively. That's not good. That's clearly something related to their industry. And while we're on that subject, something we were talking about right before we started the show, UNH, HCA, Humana, CNC, ELV, these names are down pretty decent today on some potential news, I think. I haven't been following all that kind of stuff. I don't know about you, but I know there's a lot of stuff going on with Medicaid, Medicare, and I don't know, drugs as well. I can't follow it all. I just know they're down. There might be a trade there. I just don't know when you step in because I don't know enough about it.
Yeah, and it's like, how do you even look at something like UNH has been an interesting trade, short puts wise. I closed out some today, even into a down move. You have volatility contracting there, but it's hard to occupy your mind space with UNH when you got TSM at 300 and Nvidia at 200 coming into earnings here. That's really been like the stuff that I've been looking at. Microsoft, another one. It's like, you get these kind of moves lower, and if you don't jump on it, it's you miss the boat. I feel like a UNH, like you can buy some now and buy some in a week and buy some in a month or 2 months, and it might, it's probably going to be a similar price. These things are moving, 3, 4, 5% a clip. It seems like the trader in me is focusing more on these than some of those names. But I'm sure we're going to have those points. Like, Trump had his Pfizer announcement thing a couple weeks ago, like 2-ish weeks ago, where the stock rallied up to like 27 and change. It was this big bar where I was like, oh, shoot. Now I got to think about healthcare stocks. Yeah. I'm sure those will come back into play here. He kind of did that with Lilly too. I mean, that's been kind of the more recent one.
They will, and I don't know. I don't know any other way what to do than besides play them to the upside. I don't know how I want to do it yet, but even though I know you're being kind of facetious, and it's true, you can get some of these, and they might still be at the same price. I want to maybe get something small now. Because look, what's going to happen is going to be an announcement, and it's going to happen overnight, and that's how it's going to go, and there's nothing you're going to be able to do about it. Either UNH or Humana.
UNH puts around the 300 strike have been where I've been trying to trade them. I've played it to the upside with call diagonal spreads as well, but I think the puts is probably the way to do it. You could do a wide put spread if you wanted to. But that at least lets you benefit from some of the chop that kind of has been in play here with some of these names.
Actually, that could be the move, the diagonal spread. Either that or the put spread. You're right. I mean, the put spread is probably cheaper overall.
A little less directional,
Yeah, a little bit. But yeah, it's been a wild day, man. I mean, like Micron, for example. Why in the hell is that up the way it is? Oh my God, I'm glad I stopped trying to strangulize Micron a while ago because it just was not working, and it just continues not to work. But I couldn't help it, Nikki. Like here, I got to get a little bit of short delta. I sold a a decent SPX call spread. The 7,000. What did I sell? I think I sold the 7,710. 70. Sorry, okay. 7,070.10 call spread for like $3 and change. And then that was like maybe 20 handles ago. And then I was like, okay, well, let me do a little bit of something else. And I did earlier today do a near-term put spread for $245 just to mess around because, again, we did fluctuate earlier this morning. We did drop like 30 handles at one point. We bounced back. So I decided I'm going to go to the end of the week, and I did a put butterfly. I did the 68.25, 67.75, 67 quarter put butterfly, which for all intents and purposes, we could have another 7,500 handle up day, and that'll get vaporized. So we'll see what happens. I had to do it, though.
Yeah. I hear you, man. I mean, it did look like they were going to it was going to be a buy the rumor, sell the news event. They sold off about 20, 25 handles from the high. We were only up like 40-ish or so. It did look like they were going to take a little bit of air out of it. But since that point, it's been just kind of straight up from there. I know my Taiwanese source, Frankie, in the chat talking about, pretty big volumes across the board in pretty much everything. We had 10 million SPY contracts traded, 5 million in the queues, and that's options, and then 4 million in SPX. Only about 1.2 million. We're at 1.3 million here on the E-minis themselves, just straight up.
Seems a little light, right? On a day like today?
A little bit light. I mean, on an up day, you typically do see lesser volume, but above 1 million is usually like a normal day. So we're like right in the normal day range, which is, I guess, good to see. But it was kind of a news-driven weekend, I would say, across the board.
The one trend that I keep noticing over at least the last month is S&P 500, gold, and Bitcoin, same direction. Don't matter if it's up or down. They've been going in the same direction for like the last month for sure.
All on, all off.
Yeah.
Yep.
I said that's a little weird, isn't it? Like, first of all, it's really weird for gold and stocks to do that. For the longest time, it's been an inverse correlation, right? Bitcoin, not so much. I mean, once the adoption really came on, Bitcoin's been moving with markets, but this gold move has been, I can't really figure it out. But I do feel like gold finally broke out of that range that it's been holding, that 4,000. I think who knows where the next move is, but I think we're going to get big moves in gold again.
Yeah, and they've kind of, we talked about volatility in gold kind of coming out over the last week or two into this move. You've certainly see that volatility expand. I just pulled up, roughly $100 out of the money in this 14-day expiration. You can see you got about a 10 or 15% premium on the calls trading at 33 and the puts trading at like 28 and change here. So they're certainly pumping in some juice into gold here into this move, which is not a shock. I mean, you get a 2 or 3% move in gold, and you expect to see volatility expand a little bit there, especially on the upside. Gold's a tough trade. It's one that at these prices, I feel like it's priced me out for the time being, and especially with the volatility where it is. I have to be directionally neutral, which is tough to do when you're seeing 3% moves in gold. I think it's still a relatively low volatility asset at 23%, 26%. You're seeing these realized moves that are just off the charts.
Yeah, it's hard for me to trade gold directionally neutral. I just I like picking a direction. That's why I don't have anything right now, because I don't have a strong bias here. But I can't do it. I can't do it direction. I just can't. I just can't. It's like for me, gold is like I don't want to say meme stock, but it's like one of the Mag 7s. I mean, it's like those for me. I mean, it really always kind of has been. I just play it like a momentum stock for sure.
It's funny that you say that, because I think prior to this move, nobody even thought about gold or looked at gold like normie mind space. I don't think that was part of the move. I think now it's a lot more talked about, and even Bitcoin too, putting Bitcoin in that basket as well as like the Mag 7, gold, and Bitcoin. Like, that's what people talk about now, right this moment. Like nobody's talking about the Coca-Cola as being cheap or the UNH as being cheap or like stuff like that. Like nobody is that isn't in the mind space. It's Mag 7, it's Bitcoin, it's gold. Maybe you put silver in that basket too, but that hasn't made it to the mainstream media. I hear them talking about gold, so I know that it's part of that basket now. So I kind of agree with that sentiment. That's a good one. We do have one earnings coming up at there's a handful, but one that's more interesting than the rest. I did a short put in CoreWeave, reports earnings after the close today. Stock is kind of on the lower end of where it's been trading. Just to name a couple other stocks that are.
I thought about doing a strangle in there. I feel like I might be crazy, but I don't know. I didn't do anything. I ultimately haven't done anything, but I thought about selling vol in here just to see what happens.
I'm with you on a day like today in a NVIDIA Circle funding name. I don't know if I want that upside risk. It's one of those that gets looped into like.
I know that.
I put some upside risk in MBIS, which is Nebius, which is another kind of Circle company in the web of OpenAI, NVIDIA. And so I do have a little bit of upside risk there, but that stock is near the higher end. So I'm a little spooked by CoreWeave.
Hey, what is it going to do? Is it going to go up 100 tomorrow?
That's the risk, man. That's the risk I feel is like the upside tail I feel like is mispriced here as at least cheap.
So that's the reason why I didn't do anything, because you can sell the D strangle, and again, that's not earnings, but it's still like it's in the 45-day window. You could sell the D's 80-150 strangle for $6, $6.72 or whatever, $6.70. Let's call it, right?
How could it be wrong?
I know. And then I'm gonna be like, this will be the one that I don't play to the upside on calendar call that absolutely goes ape. So then I just talked myself out. I was like, I'm not doing anything. I'm just gonna sit from the sidelines. If it does something, whatever, I'm not gonna do anything because I feel like I'm gonna mess it up no matter what I do. It feels that way.
I know it's a spooky one. Some of the other names are Big Bear AI. I know that's one that's kind of been in the headlines. It's kind of the meme names. Beyond Meat is another one that has whatever the earnings are or lack thereof. Rocket Labs, ASTS, which is AST Space Mobile. That's another one on the list today. These are some of the kind of frothier names, in my opinion. I know there's some people that love these sort of stocks.
You did anything in Big Bear?
I am not doing anything in Big Bear. I know the only reason I really know about it is Gus. Gus has put me on this stock, has put this on my watch list. So
I traded it at times throughout the years, last like 2 years.
Have you? How do you trade it? What are you thinking here?
Well, I don't have anything now, but before I felt like when it was in the double-digit range, I think I might have had some calls on at one point in time. I don't know. It's been a while, but I haven't done anything in a while. It's an interesting proxy, right? Like, I don't even know what it does, but obviously it has AI in it. So it's like an interesting proxy. If I were to, I'm not doing anything, but I could probably be convinced to buy stock in here just for the hell of it, 100 shares, see what happens.
Yeah, that's actually probably the way to do it. I could do that. BBAI. We'll buy 100 shares and play it as just a binary trade,
why not, right?
And see what happens. We'll let that work and let it come to us. Some of the other names like these, Rocket Labs or ASTS, I think you got to be directional in those too. Like there's so much binary built into that. Do you have any interest in it in like MP? It's kind of back in the scene here. It had a nice little sell-off. Volatility contracted significantly. It's in the Trump basket.
Yeah, no kidding. I've been short of putting here for the longest time.
There's my big
yeah,
there.
Same. Me too. I've been short of putting here for the longest time, so it was nice to see this thing bounce back today. I'm probably gonna mess this trade up too. I've been short the 70 put, and after the 2-day move here, I sold the 70 call against it. So I basically got the straddle on now. Straddle for 15 bones. We'll see. We'll see what goes on.
I like that. What are you in December?
Yeah, December. Yeah.
Yeah, they've certainly taken some vol out of here, and this is another stock where just skew off the charts. You go $10 out of the money to like the 55, or you go to the 75 on the upside. You know, calls trade 2x what the puts do. So that's what the market has been. The market has been an upside tail risk, and so it's not a shock to see that kind of priced in here.
I know. I wonder if this trade is over, though. I mean, at least see that's the thing, right? A trade like this, you know, meaning like the rare earths, right? These all have the same chart now, and they look terrible. This one obviously has bounced back some, but you know, after all, the U.S. and China at least seemingly coming to the agreement on a lot of things, you wonder if this trade is over, or do we get a tweet at some point in a month and say, you know, China's reneging on this, and these take off again? This CLF took a huge haircut. Remember, they're a steel company, but they said all of a sudden, oh, we're going to go rare earth style. And that's what happens when you do that.
Yeah, Cleveland Cliffs. That's one that I haven't traded in quite some time.
Yeah, right.
Yeah. E-minis here up 106. We've been chopping around this range. NASDAQ kind of at the highs here. I think actually just off the highs of the session. They just sold off in the last like 5 minutes here from the highs. Dow up 369, the Russell up 29. Oil has been strong throughout the session. Volatility coming in significantly there. Any other stocks that you've been looking at, that you've been putting positions on in that?
Actually, the point I did want to make, you talked about basically we're at highs, right? The one thing I noticed maybe about hour ago was as we were continuing to make highs, you know, being up 90 in SPX and all of a sudden 96 and 100 and 100 plus, I noticed that the Mag 7s didn't necessarily follow. If you look at the day chart on Apple, Apple has not made a new high here towards the end of the day. Microsoft is sitting on highs. NVIDIA did. But Amazon, same chart as Apple on the day. You know, Google is sitting at high. So you kind of got like a mixed bag. Some of these names, they got up and they just stayed at a certain level. They didn't necessarily trail the S&P that much higher. You know, Tesla's off of its highs, right? So just stuff like that I kind of noticed. Oracle, again, Oracle actually just went positive. This thing was red most of the day. But yeah, AMD, you know, like a lot of these names didn't necessarily keep going higher as the market went higher. I'm not really sure what pushed it higher with the last 20 to 30 handles. I seriously don't know. I don't know if it was all of a sudden oil turning around on the day and then maybe the Exxons and all of those of the world catching up. Not really sure, but I was just trying to figure out how this rally was proceeding higher without certain names not leading the charge.
Yeah, Apple's been a funky one. Even into Friday's sell-off, it didn't really participate. I mean, we've kind of pinned this 270 mark. I did get a little bit of short delta there on Friday, just as my thinking being everything else has mooned and this or was getting killed, and this one wasn't. If we do see some downside, maybe this one moves more. Yeah. And then here on a day like this, where everything looks like it's mooning, Apple's not moving anywhere. So it ended up not hurting me into this up move too. So that correlation works both ways.
That's actually a good rationale, though. Like on a day like this, where you know you have certain names that are moving big, the ones that aren't participants. Let's just call out Apple and Oracle, for example. If we do turn around tomorrow, you expect those to be red first before everything else.
You would think so.
You would think so.
You know, it's hard to get long them.
I know.
Here,
yeah,
but yeah, into a downside move where they haven't, you know, like Apple near highs hasn't really had any sort of move lower. You would think that that's the pot odds, as one would say, but who knows?
Who knows?
Going into the close here, we're back at highs. Come on, even a 10-point dip gets gobbled up here in 15.
Wow.
I mean, 110. You think we get the 6,900 mark into the end of the week? I mean, what's your thoughts on the government shutdown? Is that a buy the rumor, sell the news event?
I think a little bit. Yeah, I think so. I think what was fascinating about that is, like we showed and we told about all of those things in the beginning of the whatever this started 43 days ago, how that doesn't affect the market, and it didn't, and it wasn't until last week, where it was hitting airlines and a couple of other things, and all of a sudden, you know, it was affecting a few stocks here and there, and a few industries, and now it's become a thing that's affecting the market. 100% that we're up today because of the promise of ending it. Wednesday is supposedly a day they have a vote. That's why I did the SPX put butterfly for the end of the week, because we could easily reverse some news here. So yeah, I mean, if that's any measure of how I feel, I had to get a little short delta here just because of that.
I mentioned on the morning session today, Polymarket had an 88% probability that it ends between Wednesday and Friday of this week. So it seems like, to your point, this was kind of the relief rally, and maybe it is kind of a buy the rumor, as in over the weekend, sell the news type event into Wednesday, where we had that, where they have that decision coming down to the wire.
If you go to the options tab, you could see Thursday and Friday got a little more of a bump than the rest of the week. See it?
Oh, yeah.
It tells you everything you need to know.
It's amazing how markets work. It's almost like they price in this stuff. Like, we're not the only ones that know that they're having a vote on the government shutdown on Wednesday. It's beautiful.
I hope we have another big day tomorrow. That would be nice, actually, because that totally sets up for something at the end of the week. I mean, I hope so.
You want another big downside or upside?
Up. I want another big up. Let's do it. It's getting solved, Nikki. Let's do it. Let's do another big up day. Give us something to do.
I felt naughty today because I took off a lot of long delta. So now I'm by default a little bit more short than I was coming into today. So I think for my position's sake, if I'm speaking my book, I would like to see a little bit of a dip so that I can buy some of that and get long into the end of the week. I think that's a move. But you got the round number 6,900. You got the 7,000 on deck through the end of the year. It seems all too easy.
I mean, you know what's going to happen. We're going to trade up to 6,900 tomorrow, and then they're going to fade them. You know what I'm saying? Like, it's going to happen.
Hey, we could have said it at 6,850. We could have said it at 6,800 today. I mean, we were at 6,772. We opened at 6,788. Could have said 6,800. Was the spot. That was the hold spot. But blasted through that thing.
Yeah. They purposely did it because tomorrow's setting up for another update. I'm telling you. Feel it. I feel it.
I'm with you here. As we go into the close here, E-mini's up 103. You got the NASDAQ up 550. You got the Dow up 367 and the Russell up 24. Oil up 41 cents, actually the high of the session here, just off the highs. Volatility futures down here at 1854. The VIX itself at 1774. Bonds basically unchanged here. They're down 2 ticks. You got gold up 108, silver up $2.23, Bitcoin up 2,200. Oh man, more up tomorrow. It feels that way. Volatility too crushed, market too strong, too many news headlines hitting the tape soon.
I feel like I'm not going to be happy with myself if I don't try to get some Humana on. I'm going to try a diagonal. I'm looking at it and I'm like, I'm going to try a diagonal. I'm trying to get the Jan when I got a minute. I got less than a minute. Oh, it means I got to step it up. I hate when that happens.
Get it in.
I hate when that happens, but whatever.
It's a better buy than it was on Friday.
There we go.
There you go.
We're in there.
One last ding as we go into the close here. CoreWeave earnings come out 5 after. You got RGTI. That was another one I forgot to mention.
Oh, yeah.
One of the quantum stocks. Rigetti comes out 5 after. Big Bear at 15 after. Beyond Meat's about an hour after. You got Rocket Labs and ASTS Mobile at 15 minutes after the close. So those will be coming in shortly here. E-mini 68.56. Are they going to sell them into the close here or just squeeze them higher?
Just a touch.
Goose them into the close here?
Oh, yeah, just a little bit. See, that's how you know we're going higher tomorrow.
I'm with you, man. And there's our bell. E-mini's up over 100. What a beautiful day.
Yeah,
we're so back. The market's back.
We're so back.
We're going to take a quick little 90-second break. We're going to come back with more content. We got Overtime with Chris and Ilya coming up next. You're listening to Tasty Live. We'll see you in the morning tomorrow. Peace.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Okay, cowboy, here's an earnings event. Keep an eye out for them when you open your trade. They're fast, they're loose, and they can take you for a wild ride. But that's no reason to steer clear, because you can be your own personal earnings event if you take the bull by the horns. What makes earnings events so special? Before the event, people will start guessing how the stock will move once the earnings report is released. That, in turn, makes the options IV rank higher. Like way, way higher. The nearer the event, the more the speculation, the higher the IV rank. Then right after the event, IVR goes the way of the buffalo. If you sell high premium options right before the event, when IVR is really high, you can take advantage of inflated prices and lock your profits when volatility disappears. Only if, and this is a big if, the stock doesn't move against you. If it does, well, sometimes you eat the bear and sometimes the bear eats you. Earnings events can hit you hard. They can also pay off big and fast if you play your cards right. Pretty simple.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
New from tastytrade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new tastytrade account. The Money Match event starts now, exclusive to new tastytrade customers.
Guess who's back? The U.S. government. It's Monday, November 10th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan, here to take you through the rest of this half an hour. New schedule for Overtime, Monday through Thursday, 4 to 4:30 Eastern. A little bit more condensed of Spivak, Vecchio, and Radigan all together, but we're going to make it work. We're going to speed run this here today, guys, because there's a lot to get through as we look at a market that rejoices over the U.S. government opening back up. NASDAQ up over 2.2%, the S&P 500 up 1.6% as we turn to the screens. Your Russell is even rallying, Ilya, up 0.97%.
Yeah.
Bonds notes off the lows, but gold and silver surge, which is music to my ears, of course. Nothing's changed in that regard over the past 2 months.
Oh, I'm with you now.
We head over to the currency space. The dollar is a touch softer, although the yen weaker. Generally speaking, a risk-on day, but Japanese yields, at least the 10-year JGBs, at their highest level since June 2008. Oil meanders, natural gas comes back in despite Chicago getting walloped with a storm. Warmer weather does lie ahead. So there's a lot to talk to about on this Monday. Dylan, I want to go to you first. It's good to see you, my friend. We have news that the U.S. government is opening back up. 7 Democrats and 1 independent, Angus King over in Maine, crossed the lines to get the government reopened. The House will vote on it this Wednesday. The markets don't seem to have a problem with the government reopening. Is this good news?
Vecchio. First of all, you think you can just go off and reproduce, disappear, and then just show back up like nothing ever happened?
It's true.
I have been, and Ilya can speak to this, I have been bearing the burden.
He has been bearing the burden. Can you imagine?
Every day, because I believe in your right to reproduce. I have openly and expressively expressed absolute indifference to any rational data point or any possible objective analysis, and simply said, buy them, buy the dip, buy the stocks, buy the things. So before I get into my sort of analysis, which is probably worth what you pay for it, which is, I think, zero, I would like to say welcome back. It's nice to see you, and it affords me the ability to be slightly more skeptical, because I have been bearing the burden of unadulterated optimism for many months, or weeks anyway, which is a tiny price to pay for this. Look at the kid. Look at this kid. I mean, I will be falsely optimistic for years.
For years.
Because I appreciate you and your ability to reproduce and the glorious child that you can create through your various activities. With that said,
more art than science, but go on.
I mean, listen, it's
so it goes.
More biology than anything, but anyway.
Kind of like jazz.
Or kind of like biology. But anyway. There's 2 worlds, Vecchio. There's one world which is Ilya's world, which is based on facts and thought and analysis. Rates are not going to go down as much as they should. Multiples are way too high relative to expectations. Nobody knows what's going to happen.
They don't make money in Ilya's world, though. Not on stocks, anyway.
It doesn't mean Ilya's wrong.
No, it does not.
Not making money. Rates are going to be higher for longer. Multiples are overextended. It's absurd. It's 7 companies trading $1 trillion between each other. It's a con job. And yet, who makes money? Long Mag 7, long calls NASDAQ. Ilya can speak. Ilya, have I not been openly and optimistic?
Oh, certainly. And rightly, I might add, because so far, what we've seen is the dip's been bought. Now, obviously, the dips have been of various depth. Not every dip is a buyable dip, depending on what your sort of threshold has been, but the outlines of the trend from the April lows, as you have them on the screen here, they've broadly held. So the trend continues. It's being tested. It's had its probably most vigorous test last week after a very vigorous test in early October, but it continues to hold. And so the mantra of not thinking continues to prevail. In the equities space, I want to highlight again and again.
The interesting thing is the
equities space.
And the contrast is thought would lead you to multiples are overextended. The cost of capital is too high. The labor market is weak. And inflation is persistent and, dare I say, nefarious.
All of those things, yeah.
And yet...
So the same story all year long, basically.
Basically, you've missed nothing. I'm sorry to tell you.
Makes sense. Well,
baby back here. Have another baby. What do we care?
Dylan, I said this to Ilya yesterday. Maybe it was Thursday last week. Aside from the fact that Thursday in overtime, while I was missing you, you know that we got back in and bought some stocks Thursday, which now looks better on the other side. But the best thing that worked out for me was the not thinking over the past 2 months, because I couldn't dedicate the time to trading. So a lot of the stuff that I had purchased previously kind of just was sitting around being held. One of those things, of course, was silver, which Ilya, last week on Overtime on Thursday, we were talking about the possibility here of what looked to be like a breakout coming around the corner.
Oh, yeah. I got long
maybe
this morning.
We have this nice left shoulder head, right shoulder inverse head and shoulders pattern, which now breaks out. Silver had an astounding 4.75% gain today.
Yeah.
So
very good day.
Measured move is up towards $52 an ounce. That's near the highs that we have in October 20th or so. I guess that's the question. The market gets its news that the government shutdown's ending. The tariffs may be knocked down by SCOTUS. Trump wants to send out $2,000 checks. Dylan, this is just like acid inflation. We're going to get rate cuts in December. They're going to be pumping money into the market. I mean, why not, from my view, just dust off the playbook of where we left off in September? Why not just buy stocks, buy gold, buy silver, get the crypto, get the things that are pumping, even if it's irrational and valuations are high? Should we just keep doing it?
Becky, you're breaking my balls, okay? So the question is not what do we do? The question is how do we use capital efficiency to expose ourselves to the benefits of the obvious non-thinking based exposures. So it's not about should I, shouldn't I? Of course, you should be long the Mag 7. Of course, you should find a long crypto position. Of course, you should find yourself a long Microsoft, a long Meta. Now, Ilya is being respectful because of your return, and he's trying to offer some basic respects. And so we'll take advantage of that. But the question is not what to do. The question is how to do it in a tastytrade-esque, capital-efficient manner. And so I think the question is less what to do and more like how to get the most bang for one's buck, as they say.
Bang for the buck here in silver, I think, is to the upside still. And Ilya, with gold prices doing what they're doing today, that has to be the play as well. We break through that 40, 55 level discussed on the last show.
Play this morning. So I had a little bit of short exposure on the way down, and I took profit on it this morning and flipped over because clearly something is changing here. We took out the prior range. I made some money on this down move. Great. Not a lot, just a little. I caught the very tail end of it, but so it goes. And great. Off to the other thing we go. So I'm long gold here through the 1 ounce futures directly, just long the future. And I'm long silver through an SLV call vertical here because that was the in Dylan's exhortations to capital efficiency. That was exactly the thinking, that SLV gives you tremendous bang for your buck here. You can get better than 2-to-1 risk reward on an SLV call vertical. So if you're going to put something on here and manage for size, mean, SIL futures are still a little large, even though they're the micro silvers. SLV, the ETF, perfectly fine. So I've got that on here. That was the meat of what I did. I took, and we'll talk about currencies in a moment, but I've backed up a little bit and took profits on selling commodity currencies because they ran with stocks today. And so last week I took off my Canadian dollar short. This morning, I took off my Australian dollar short. Again, profitable positions, but it seems like they've, for now at least, run whatever course there was to run.
Yeah, I peppered out everything today across the board. Stocks, bonds. The only thing I don't have exposure to the follow account right now, I guess, would be crypto. But looking
I'm short a little there because if you look at Bitcoin, it's kind of soggy in this risk-on day.
Yeah, I put on a short iron condor and natural gas, which the volatility there is in the 46 IVR. Copper, the same thing, another short iron condor, because if you go over to CPR, it's not going to show up in the futures yet, but CPR, the equivalent ETF 59 IVR, that's really juicy and good to look at. Likewise, crude oil. I know crude oil hasn't done much of anything here. I suppose that's another point of interest because we haven't had any geopolitical spikes in the past 2 months or so. And this thing just keeps spinning around 60, 61, a little bit higher, a little bit lower. Dylan, what's the geopolitical state of the world right now? I thought Israel-Gaza was ended. Netanyahu today said the war's not over. It looks like Russia-Ukraine could be entering a new paradigm. Are we underestimating geopolitical risk right now in the oil market, or is this priced right?
Not at all. I think it's just priced dead on. I think the oil will move. And I don't think that current geopolitical dynamics are relevant. So I believe it is all a distraction. I think that the primary dynamic in the market is a combination of AI supernova mania and rate cut-ish sort of debate that may or may not happen. I think that the cost of capital and the rate of growth is the only thing that matters.
Mm-hmm.
I think like in other words, geopolitics and oil, who cares? It's supernova versus cost of capital.
There's a lot of evidence for exactly for what Dylan is saying here. I mean, just look at NASDAQ here as a stand-in. Let's just take a look at what is clearly the weather vane of sentiment. What did we see and when did we see it? This thing topped on Fed Day, literally on the day. It has been coming down relentlessly, not aggressively, but consistently, no matter what earnings had for it, which was not bad, no matter what the China Trump Xi thing was, which was not bad. It was just the Fed. The Fed said December is not a given. And by the way, the odds of it today are lower than they were last week.
Mm-hmm.
So that was the thing that the markets got upset about. We get a good rally today. Of course we do. We've just ended the longest government shutdown in history. This is going to be some level of a boon to consumption and to the economy. Good. Now zoom into the chart and put a horizontal line through where the post-Fed consolidation is. We're testing exactly the underside of that range. So is this thing over? Is the sentiment pendulum back to risk on? I don't know. Maybe.
Seems like it.
But it hasn't convinced me that it is. And if you look at Bitcoin, it's really unconvincing for that as a kind of sentiment barometer further out on the sort of high beta, high risk scale. Here, we're not even mounting this kind of a pickup. We're again testing the underside of a range.
Yeah, and to fairness, Bitcoin
and failing
did not clear. Yeah, it didn't clear the level. We drew this on the chart last week, and we brought it up last night on First Call, Ilya. If you want to look at the spot market, it's close to, we'll call it like 106,000, 107. underside of the low that you have at the start of September, recent swing lows in October.
Yeah.
You haven't punched through there yet, but Bitcoin and Ethereum both do pick up. I think the technical case, Ilya, you open up a textbook tonight and you go, what ridiculous Japanese candlestick charting pattern is this? This is what's called a morning star candlestick
That would be a
cluster,
morning star, yes, sir.
right? And it's just where it's happening for me. Dylan, the last several months, you get into this little band between your 1 month and your 50-day moving average. You get a dip into there, and the market has bought the dip every single time, including now over the past 3 sessions. So if this if this follows the path of those other dips, we're looking at a rally back to the highs near 69.50. 7K S&P is less than 3% away. What's going to stop us from challenging that this week, Dylan? Or is it really not this week? Is it when all that bad U.S. economic data comes out around the corner when the government finally reopens?
Nothing, sir, is going to stop this situation. Okay? We are so early in the euphoria that surrounds the potential of the technological revolution that is artificial intelligence, that even bad data is irrelevant. I really believe we are in the, I'll use a baseball metaphor, but we're in this first or second inning of the optimism that surrounds the AI supernova. Which is not to say that Ilya's thinking is wrong, or my thinking when I start to think is wrong, or that anybody's thinking when they're skeptical of the multiple, or skeptical of the growth, or the skeptical of the yield on the capex and all the rational thoughts that are available. I just think that the momentum of the enthusiasm is overwhelming. And I believe it will continue to perform for the foreseeable future. And I think that any dip should be bought. And I think that the dip that should be bought should be I think 2 things. One, look at the Mag 7, look at the underperformer in the Mag 7, whoever it may be. Right now, I would suggest Microsoft and Meta. A few weeks ago, it was Amazon. A few weeks before that, it was Google. But it sort of moves around the horn. The underperformer in the Mag 7 should be bought, or at the very least, put spreads should be sold. And the rest of it is sort of up to personal sort of preference. But I just think that the supernova is no joke. I don't believe in it. I agree with Ilya. Like if I was sitting with Ilya in Portola and we were smoking a joint, I would say, you know what, Ilya, you're right. This is absurd. But if I was to use Ilya's family money, I would say, my man, let's buy ourselves some Meta and some Microsoft. Because regardless of who's right and who's wrong, the momentum is with AI. And every time there is a moment of pessimism in AI, it should be purchased. Sorry for my reference to read in Portola.
Well, I mean, this I think is the key. By the way, Portola Festival passed a bit ago, but I was at a wonderful show last night. The Alchemist and Freddie Gibbs really put it on for the city. So definitely salute to them. Absolutely. So some things can't be missed. And so to be sure, nobody, I think, would be in their right mind to debate the veracity of the AI supernova. I think the question isn't that. And Spivak family money is absolutely invested in it over a multi-decade horizon. From just by virtue of being long the market, just long averages, long S&P, NASDAQ, all of it. But that's decades. And so the question becomes, from a tactical trading perspective, with a view, let's say 4, 5, 6 weeks out, do we know that we're going back to these highs? Do we know that something positive has changed in the AI story. Ostensibly, it hasn't, because last week and the week before we got all those earnings, and the markets couldn't care less. So so that's maybe already as far as the pricing goes. The issue has been the Fed. The end of the shutdown only encourages the Fed not to cut in December. And we saw the odds go down today as risk rallied. So the question I think we have to ask ourselves from a living in the present as a trader sort of perspective is to say, okay, when the Fed came out and did their thing, did the market sell off day of? No. It stopped the day of. It sold off the next day and hasn't looked back. So, okay, the shutdown is over. Great. We got a day's rally out of it. If this thing fades tomorrow and the momentum is not sustained, it's going to look awful from a sentiment perspective. And we didn't clear any Rubicons today to say, you know what, we cleared a key level. If it sells off tomorrow, fine, but at least a level has been somehow overcome. Momentum has been broken to the downside. It hasn't. Maybe tomorrow it will. We'll see. I don't know. But for now, it hasn't.
Dylan, when I brought Ilya on first call yesterday, I introduced him as the absolute worst person I know. And it's for commentary like that he has earned that distinction in my book. Last week, 57.65 entry, still holding on to it. We're about 90 points in the green here. I think we're going to get a shot back at 7K over the next few days before reality sets in. So I'm going to play it as such. On the downside,
the great Sean Price, I work so hard to be this bearish.
I'm looking for, if we get a little bit more of a rally here, Ilya, Russell's going to be the one that I want to short if there's an opportunity to short something or get short deltas in the book just under 24, because it has lagged. It lagged today. The breadth in this market is not fantastic. RSP equal weighted S&P only up by 0.58%. QQEW equal weighted NASDAQ only up by 1.16%, almost half of what the market cap weighted index is. So the breadth isn't fantastic. On the other hand, the growth split, the sector performance today is pretty good. So we'll see what happens tomorrow. I'm still leaning long gold, silver, stocks.
I'm with you
bonds.
There. Not stocks and bonds. Oh, bonds, not stocks, but bonds, gold, silver. I'm with you. I'm long some stocks. I mean, that EWZ is surging, so I'm kind of net long deltas here, which is kind of weird.
That doesn't count.
But I'm still short a little SPY off the highs. It's actually still up because I sold it on Fed Day. So let's see. Let's see where this goes.
You know what, Dylan? Overtime's out of time because this is only a 30-minute show now. We'll be back tomorrow, same time, same place, right after first call, every Monday through Thursday, 4 Eastern. So for Dylan Radigan in Milan, Ilya Spivak in San Francisco, I've been Chris Vecchio in New York. Do you like the new format? Let us know. Good luck trading. See you tomorrow.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
And we have the U.S. government apparently headed for reopening, to the delight of Wall Street. So have the markets exited the window of gloom, and is the mood back to a cheery one in a lasting way? That's what we're asking here on Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And what we're going to do is take a look at what the markets did going into this and break down last week's price action, go into what the end of this shutdown is doing for the markets, and then see if we can't make sense of what comes next and see what the week ahead might bring. Here's the price action from last week. We can see an ugly one for equities. S&P 500 down almost 2%. NASDAQ down over 3%. We get a relative calm on the rates side of things. Obviously, we had a big surge in rates the prior week. That was around the Fed chair, Jerome Powell, saying that we're not nearly as likely to have a rate cut in December as the markets thought. Going into that Fed meeting, they were at 90+% chance that December rate cut was going to happen, and we promptly dropped to a 60-40 split. In fact, we can see right here that this is the current likelihood that we're going to get a rate cut at that meeting, and we can see we're just a touch over 60% here, and so just a touch under 40 on we're going to keep rates unchanged. Notice the vast difference between this and where we were a month before. This is October the 10th, so right going into that Fed meeting. So clearly here a significant reduction in Fed rate cut odds. So when we look at what that did for markets last week, this part of it seemed to already have taken some way of playing out. So last week, this was relatively calm. Similarly, last week, the dollar was down a little bit, but relatively steady, off about 0.3% against both the euro and the yen. But it was in pure risk sentiment where the pain was greatest. Stocks, Bitcoin doing its stocks on steroids thing, where when stocks go down, it goes down more. When stocks go up, it goes up more. That pattern holding here very much as one might expect. A bit of a return to form after the prior week. Stocks were up a little bit, but Bitcoin was soggy, almost as if it was foreshadowing that sentiment was lousy and that we'd be going into some sort of a vulnerable state. Crude oil down as well, but tough to pin that down to sentiment necessarily. That hasn't been a consistent relationship, though surely the risk-off mood didn't help. And on the gold side of things, again, mostly consolidation last week, though, of course, we've stormed higher here at the start of this week. And as we say, the focus here seems to have been firmly on the Fed, because if we look elsewhere at the major catalysts, they're simply not supportive of what actually occurred. So here was what was going on the earnings front, and this now includes almost all of the key names, certainly all of the Mag 7 names bar NVIDIA. And so as we look at what this did, was we can clearly see that there's all kinds of room to say, well, why would markets sell off on this? 27.1 the annualized earnings growth rate for the tech sector, which of course leads the pack. No big surprise there. 13.1% for the S&P 500, so earnings growth accelerating versus 7.9% in the prior run. So looking altogether encouraging here if we look at this, and yet the price response, when we see what it actually looks like in response to those earnings, is hardly encouraging. So you can see historically, 5-year average is the reference point here. Upside surprises get rewarded with a price rise of about 0.9%. Well, in the current season, 0. Negative surprises get historically punished with a loss of about 2.6%. This time, double, 5.1%. So we're looking at clearly some sort of a deterioration in sentiment. And it's relatively clear that it was the Fed that touched this off, and that whatever positive news there was to be had on earnings, including from the high-flying AI names, that was not enough to get the markets back to positive footing. There was a little bit of economic data at the end of last week. Consumer confidence came out way worse than expected, back down to levels that were there early in the onset of the tariff scare. This is the beginning of this year, where we went from inflation expectations looking out 1 year at 2.6%, jumping 4% to 6.6%. As those tariffs started to get rolled out. Of course, since then, sentiment attempted to recover a little bit as that inflation expectation cooled, with the White House kind of backpedaling on the meatiest parts of the tariffs. But since then, of course, we can see inflation expectations have anchored, and we can see that again here. They're sort of hugging 4.5, 4.7, 4.8, give or take. But sentiment has deteriorated all the same, and is now basically back to near the levels where it was when we were just on the way out of the initial inflation scare post-COVID. So you can see here was that inflation scare reaching its apex starting in 2021. You get this relentless march in inflation expectations into early 2022, which of course is where the Fed really starts to hike rates to fight this thing. Sentiment is sinking into it. Shortly after the Fed gets busy, it bottoms and starts improving, and then doesn't really come undone until the tariffs puncture it. And so what we have now is this situation where apparently the sort of dynamics where inflation expectations are the driving force here have fallen away, and sentiment is defaulting down. Now, obviously, this is not the greatest news whatsoever. The economy is overwhelmingly driven by consumption, and household consumption clearly looks to be on very weak footing here. But we can see that just looking at the S&P 500 chart as a sort of sentiment barometer, we're not really seeing a whole lot of follow through on that, and it seems apparent why. So this candle right here, this is the Fed. And we can see that through all those positive earnings, we just keep relentlessly going down despite what those earnings say. Why? Because apparently the market really doesn't like it that the Fed is apparently pushing back on this December cut. We see here, though, this is Friday's candle, how much follow-through we get on that negative consumer confidence data, ostensibly because rumors about a deal to end the government shutdown already start to circulate, and so we don't really close with any conviction. And of course, starting today, we get this forceful rebound in the S&P as we get that deal through the Senate. Now, it still has to go through the House, but for the most part, it looks like relatively significant and convincing vote of confidence from the markets here that it is going to get done. The dollar is relatively steady here. It's up against the yen and down against the Aussie, as you might expect in risk-on markets. But generally, relatively steady against the euro, the pound. We get a relatively flat result from crude oil. Gold is storming higher, which is an interesting sort of perspective here, and doesn't seem to be linked this or that way to the dollar or bond yields, which are just idling today, and seems like an interesting response to the resolution of a bit of uncertainty. But nevertheless, precious metals surging, even as Fed rate cut expectations, as we just saw, get narrowed in. And so really the question here starts to be, well, is this the dip to buy? Is this now over? And there's something of a line in the sand here that raises that question as opposed to answering it immediately. And that line seems to be somewhere here, give or take. So this was the consolidation range somewhere here after the Fed, and somewhere in this gap in here is a range bottom that we're currently retesting. You can see we tested it here, we're testing it here again. And the key question now for markets ostensibly will be, can you hold the rally here and will it resume back downward, or will you break through in here and start to unwind some of this Fed-linked negativity? Now, as far as the impetus for what can power this decision-making, we ostensibly are going to start to see some economic data again. And perhaps we'll get the inflation report actually released on Thursday. It's unclear what kind of a delay there is while the gears get restarted at the U.S. government. Of course, the House still has to pass this thing, and we're going to have to see it implemented, and people are going to have to come back to work and start to collate these things. So there's probably going to be some degree of delay. But ostensibly, we could get the inflation data this week. Not shocking. We have expectations for standstill because we haven't really been seeing a lot of inputs. But so far, it looks like the market is benchmarking us at steady at 3%. If anything, not the kind of thing that would get the Fed to think one way or another about these rate cut expectations. Later in the week, we might get PPI. We're due for both the September and October numbers. That's why they appear double here, as well as retail sales. Again, we're due for both September and October. And so maybe we'll get those numbers. Maybe we'll get a jobs report here relatively soon. And so the schedule is what it is. But of course, now that we're on a path to ending the shutdown, we're going to have to see what actually comes out. Now, what we know of the economy so far, we got by way of this ISM report most recently last week. It showed us a much firmer economy than anticipated, largely because the service sector ended up stronger meaningfully. We can see here, as ever, this is in the logic of PMIs. So above 50 is growth, below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. So this up here, this move from 50, which was basically neutral here, up to 52.4 in October tells us that the economy and economic activity in the service sector, first of all, grew in that it's above 50, and second of all, grew faster. And not only faster than the prior month, of course, 52 is higher than 50, but also faster than expected. The forecast was 50.8. Now, the manufacturing sector still looks kind of soggy and ended up contracting at a faster rate than anticipated, 48.7 versus 49.5. But nevertheless, the majority of the economy is the service sector, and it looked relatively good. So we're probably averaging something on the order of mid-50, 51, if one were to put a composite index of these two and weighted more so toward services, because, of course, that's 70 to 80% of the economy. And so it looks like we're growing and somewhat accelerating as of October, and growing a little bit faster than anticipated. Having said that, the inputs into the Fed's calculus don't look great. The sub-indexes of this ISM report show us that employment continues to shrink in both services and manufacturing. You can see both of these numbers sub 50 here. And the price structure still looks relatively elevated. We've seen a little bit of a cool-off in price growth in manufacturing here. Sector is shrinking, so that's perhaps not surprising. But services still holding on to the peak highs post-tariff introduction. And so the main thrust of inflation is still holding. And so if the market's sentiment pivot point is whether the Fed is going to cut in December, well, then the ingredients seem to be on the table for the Fed to wait. Now, we are going to start to see this economic data come out, so perhaps they're going to get the evidence that they need to do or not do something in December. And of course, we'll see what that data is. And then the next question is going to be, well, is it a good idea that we're going to get this cut? Is that a good thing? Well, if the data comes out terrible, if we get a weak jobs report in line with what these ISM numbers are showing us here, then it's not necessarily going to be good news that the Fed is cutting, but we'll see if sentiment embraces it and if, in fact, that will be enough to rekindle in a lasting way. Now, as ever, we can see here the disconnect persists between what the Fed is expected to do next year and what the actual official forecasts say. Now, the markets clearly here are still very much in a disconnect and battling the Fed for what they think is right. We can see here they have 63 basis points on the menu for next year, which is quite a lot more than what the Fed itself was telling us in the September update of the Summary of Economic Projections. We can see right here, we narrowly have a forecast for 3 cuts this year from 4.4 to 3.6, and then only a single cut after that from 3.6 to 3.4. So just one cut in 2026, whereas we can see the markets here at 63 basis points, see at least 2 cuts fully, and a third one with about a 50-50 shot. 13 basis points out of 25 already baked in. So if the data is in fact sour, once it comes back out, and it does in fact confirm that the Fed is probably going to do this cut in December, well, then a key question will be, well, how much sentiment positivity is there really beyond just an initial sort of pop when the Fed and the markets are still so far apart with a single meeting left for this year about what happens immediately thereafter? And with the markets already so skewed dovish, is there enough there to give the sentiment structure something of a boost if the Fed gets the bad data it needs to get more dovish? We'll see what happens there, but if we can take a look at how this has evolved so far, we can see here was the first Fed cut, sentiment embraced it. Here was the second Fed cut with that messaging around we are not a foregone conclusion for December, and we can see stocks stopped going up and still haven't overtaken that high. Now, again, we get this pop around the government shutdown ending, but the top that we've established here after the Fed, that's still holding. And we don't know if it's going to keep holding or whether it's going to make a new high until one of those things actually occurs. But for now, we can see the policy outlook hasn't really moved much. And while we have a day's worth of a rebound, it hasn't given us a sense that the actual underlying things that have been keeping sentiment on the defensive have been resolved. It's a similar story for the dollar. We can see, again, policy expectations relatively steady. The dollar pulls back today against an average of its major counterparts. That's perhaps not surprising, because we get this powerful risk on day today, and the dollar is something of a anti-risk haven-like asset, certainly if for no other reason than its unrivaled liquidity. And so we get a situation here where the dollar, again, weakens a little bit, mainly thanks to a sell-off against risk-on currencies like the Canadian dollar and the Aussie, and holds up much better against the euro, holds up much better against the pound, and actually rallies against the yen, because, again, the yen and the Aussie are sort of the polar opposites of the risk sentiment spectrum in the major currencies. Think of the Aussie as basically stocks and the yen as bonds. So that's what we end up seeing here. And you get a little pullback in the dollar, but again, the trend still very much higher, in line with this narrowing in of Fed rate cut expectations alongside the actual starting of the cuts. Very interestingly here, you can see the dollar bottoms as the cuts begin to happen, as though this was speculation into the beginning of the easing cycle, which is already spent by the time the easing cycle starts. By the way, notice this low here, this mid-September low, is exactly the Fed day when the cuts begin, and tellingly matches the low from July, but ultimately doesn't set a new one. And so clearly the dollar here still seems minded to be bottoming, despite what seems to be occurring here today, and sort of lends credence again to this idea that maybe this is not as yet a done deal, this sentiment recovery, this mood shift. Now, as far as U.S. economic data surprises go, if we get data flow back, we can see that we're narrowly looking at things that tend to be surprising on the upside, but we haven't had much data. So does this index still hold that much validity in this current environment? We'll see. And looking at the Atlanta Fed GDP Now model, again, looking at the green line there, we can see it tends to show, or seems to show, that we have mostly GDP positive news going into the bucket to tell us kind of where the flow of data is and when it resumes, what it might take, what it might say to change expectations. But if that's what's going on, then whatever data comes out isn't going to tell the Fed to cut more aggressively. And then what happens? Does that then put sentiment back on the back foot? Because that seems to be what is much more the object of concern than our earnings or anything else. So we'll see if that then, if the return of data and the end of this shutdown is actually good news for sentiment, or if looking at that data actually sends sentiment the wrong way. After all, it is CPI that is supposed to come out this week, and it is that which the ISM report told us to worry about. Again, the inflation side is not exactly going the Fed's way. So there is all manner of catalysts here, but the key seems to be that it's not quite a done deal to conclude that sentiment has righted itself. And with that in mind, I've flipped to long on the gold exposure early this morning. So starting this week on the other side of it, I was a little bit short last week through that pullback and a little bit the week before. I've taken those positions off. They've made a little bit of money. Great. On to the next. There was clearly a breakout in gold out of its consolidation range today. We can see it's up almost over 2.5%. Silver up almost 4.5%. I'm long both of these. With silver, it's a call vertical. With gold, it's the outright 1 ounce futures. Still long the dollar, though I've cleaned up some of this exposure. Took the Aussie off, took some profits there. Took the Canadian dollar off last week when it seemed like on Friday it was running on the expectation that the shutdown might be ending. Still short the pound and the euro, though. They haven't seemed to make a move. And I think the dollar still looks like it's going to be relatively well positioned there. Still long Brazilian stocks as a long-term holding into the end of the year and into 2026. That's been working. You can see the average entries here, 27 to 29, and we're sitting at about 32, just over 30 2.5 approaching 33. And then still a little bit short the index from Fed Day. We'll see if the sentiment recovery actually holds. But for now, I'm happy to be still on the short side of risk with that and with this put vertical in IBIT. So looking for Bitcoin to continue to extend lower. Still long the bonds. And as we can see right around here, entries around these levels, 90 and 89, and we're at 89.5 here, and still short oil, which didn't rally on this risk-on backdrop, which seemed encouraging for the position and still looks like it's getting ready to roll back over. And that is macro money for today. As ever, we are here Monday through Thursday, right after Overtime, a show that I co-host with Dylan Radigan and Chris Vecchio, now happening 30 minutes earlier. Overtime is now a 30-minute versus an hour-long show, so macro money is happening 30 minutes earlier than it did before. As ever, of course, you can watch the show after it airs on YouTube. Feel free to like and subscribe. Of course, we encourage all of that if you watch it there. I'm also writing for the News and Insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. Macro Money is back tomorrow. In the meantime, happy trading.